So I will remain a buyer as long as 195 is held and my stop loss will be at 190.
Okay, I also quickly want to see what's happening with Kotak Mahindra Bank, because remember when the news first broke out, Kotak Mahindra Bank was impacted negatively. I think that has pretty much been priced in. That's flat, steady right now at 1758. You have a call on Kotak?
If I could just give a comparison, of course, it's not an apple-to-apple comparison, but the Kotak Mahindra stock is like the Wipro for the IT space, right? A lot of other names stand before it before you go and buy Kotak. So for me, ICICI, Axis still rank higher. So I wouldn't really venture with Kotak just yet. Just for the technical levels sake, I think there's a good support at 1700, and on the upside, the 20-day moving average of 1820 will be the resistance.
Okay, I like that title. Kotak Mahindra Bank is the Wipro of the banking space. All right, but we're talking about Federal Bank, and that story is a story which was broken on NDTV Profit. That news break has now been confirmed. Of course, the stock is buzzing in trade after the much-awaited appointment of KVS Manian has come through. The RBI has okayed his appointment as MD and CEO of Federal Bank. Pragati joins in with more. Pragati, give us some context of why this was an announcement which was being awaited so keenly for Federal Bank.
Morning, Tamanna. Yes, so as you can see, while the markets are largely flat, but Federal Bank shares have inched almost 3% in the trade. In fact, when the market opened as well, the shares hit their all-time high of approximately 5%. So the stock is definitely reacting to KVS Manian's appointment, which came in last evening because RBI approved his appointment as the bank's next MD and CEO for 3 years. Now, the news was doing rounds since February when we broke the news first that he may be tapped as Federal Bank CEO. The bank's other two candidates, or the most front runners for this race, were Harsh Dugar and Shalini Warrior, who were the bank's ED. But as we had reported, KVS Manian, the veteran banker of Kotak Mahindra Bank, who was in fact also the joint MD, when he stepped down, he's now been appointed as Federal Bank CEO. In fact, brokerages have also reacted to this news. For instance, Nomura has said that the new CEO appointment will continue to drive re-rating for the stock. They also view this development as positive. It also brings an end to the uncertainty around management succession, because for any lender or any bank, the management succession is a very key driver for the future growth of the bank. And now, since the appointment has come in, that uncertainty has ended. And finally, once Mr. Shyam Srinivasan, the current MD and CEO, his term ends in September, Mr. KVS Manian will take over, who's anyway a veteran banker and has experience in corporate banking and several other segments. Back to you.
Okay, Pragati, thanks a lot for that. Thanks a lot for getting us that update. Now, less than an hour for the budget speech to begin. Great set of guests to try and analyze what should you keenly watch out for. We are counting down to the big R. Mihir Vora, CIO Trust Mutual Fund, Andrew Holland of Avendus Capital Public Markets with us on the show. Gentlemen, both of you, thanks so much for taking the time out. Mihir, I'll start with you first. What is it that you believe would be the cornerstone announcement in this budget? Would it be around the fiscal deficit glide path, which probably is a given, or could they better it? Or could it be something around capex announcements or consumption?
Hi, good morning. See, the good thing is that the finance minister has enough levers to tweak around the numbers if she wants to, focus on any priority. For example, there is enough if you want to increase capex. There is enough leeway available if you want to increase the rural support, because there has been a little bit of acknowledgement of the fact that the rural economy recovery has not been as great. And we have also seen some states going in for measures to help the rural population. So as I said, there will be different focus areas. The economic survey also provides a few pointers. As you rightly mentioned, capex is important, but I think the economic survey kind of alluded to the fact that the government has done its bit, and it's now for the private sector to start chipping in as far as the capex is concerned and job creation is concerned. So I'm hoping that there might be some encouraging signals for the private sector further, create more jobs and put in money into the industrialization of the country, as we know, including Atmanirbharta, etc. So that's one focus area. Second is the rural. I think we may see some more spending, not necessarily as direct subsidies, but on areas like rural housing, on areas like minimum job guarantees, etc. That is possible. And the good thing is, as I said, there is the RBI dividend as a leeway. Tax collections are better than expected. Nominal GDP growth is likely to be higher than what they estimated in the interim budget. So there are lots of places where there is additional resources available to juggle these different priorities.
Okay.
Andrew also with us this morning. Andrew Holland of Avendus Capital. Very good morning to you, Andrew. And on the scale of anticipation, are you hot, cold, or just right, medium? What are you expecting out of the budget in terms of anything that is really going to move the marker, or like we've been saying this morning, more of the same? And do you think there will be a resurgence in those typical budget stocks that people have really not been looking at?
So, Tamanna, I agree with your more of the same. That's really what the market wants. And therefore, the kind of themes that we talked about previously, where it's hospitality, premiumization of beverages, infrastructure spending, renewable energy, all of those, defense sectors will all continue to do well. But, you've got to ask yourself, is it priced in? And, if it's more of the same, you might have, a bit of a rally if there's no tax changes. But given RBI noises, SEBI noises, and the economic survey, either they can talk the problem or they do something about it. It feels to me as though they might want to do something about it in terms of moving money back to the banks, because you can't fund all the expenditure. And you're talking about private capex picking up. You've got to have the banking sector in a position to be able to do that. And if they're finding that their pressure on margins is there because they can't get enough deposits, it's going to slow down the growth of the economy. So that would be the negative, I think, if they follow through on their words.
Okay. By the way, news flashes about Asian Paints raising prices again. So just in between this macro conversation, keep that in mind. Second price hike in probably 15-20 days. So the paint companies are certainly going out there. Andrew, so if it's more of the same, would you be happy with all the measures announced in the interim budget? Or what are the changes that you're watching out for? Because between the interim budget and this budget, there's this RBI bonanza that has come the government's way. They'll do something with that money.
True, and I think that there's they can increase the capex themselves, which would be fine. They can put more towards rural expenditure. I think housing would be an area which I think they should focus in on, because it has multiplier effects across many different industries in that respect. So that would be where I'd see some incremental kind of expenditure from the government. But fiscally prudent is what they have to be as well. So I don't think they want to kind of throw everything into expenditure. And I think what they really need to kind of focus in on is getting the rural economy going. I think housing is going to be one of it. But yes, it can increase the capex, but I don't think it has that material impact on the markets overall. I think that the problem for the market at the moment is priced in everything. Apart from any tax changes.
Would be a negative. Okay, interesting. Mihir, some numbers here. Receipts versus expenditure, right? So, and let me try and focus on receipts. The indirect tax collections have been very robust thus far. But if indeed there is a cool off in corporate activity and the tax collections go down over the course of the year, what is it that the government can do on the receipts side to try and shore this up? Because we know that this government is not necessarily very keen on divesting state-owned enterprises, maybe individual assets, but not enterprises. Where do you think the numbers will be watched out for on the receipts side?
See, first of all, the probability of corporate tax collections not meeting the full year budget target is quite low, I would say. Couple of reasons. One is that in the interim budget, they've only assumed about 10% nominal GDP growth rate. We are already, closer to 11.5. So there is, an upside potential there. Second is that corporate tax collections are no longer the largest of direct taxes anymore. Personal taxes are actually more than income tax. Personal income taxes are more than the corporate tax collections, and those tend to be less cyclical than the corporate taxes. So I think even if corporate taxes were to not grow at a rate assumed in the interim budget, I think there is enough leeway on that. So I would not be too worried on that front.
Mihir, just talking about the corporate tax, one of the key demands coming in constantly has been to retain the corporate tax rates at 15%. And the counter in that debate has been that have corporates actually created jobs, increased manufacturing, increased capex with all of that lower tax rate given, or did they use it to line up profitability? And that, of course, is a broader debate. But speaking about that, do you think that on the corporate side, what would you be looking at in terms of that boost to capex, private capex and manufacturing, and how key does that become?
So I think the economic survey gives some answers. It clearly mentions that the government has done a lot of heavy lifting for capex in the last 3 years, and the private sector now does need to chip in. And as you rightly mentioned, the economic survey also points to the fact that corporate profitability has gone up substantially, but most of the investments are lagging, so to say. So I think from the corporate point of view, two things need to be done, and the first one is also one part of the economic survey which I read, is that while we have improved the ease of doing business versus our own history, there is a lot that needs to be done in terms of absolute ease of doing business. So whether it's in terms of approvals or tax confusions, etc., businesses still need to feel more confident about how they are going to go about doing business in India. So I think tax is not going to be a tool to encourage or goad the business investments anymore, because we are already at quite reasonable levels. There is no space for cutting taxes anymore. However, one should expect more on the PLI, because the production link incentive scheme has been successful. They tried it in a few sectors with good success, and the government has been quite open-ended about it and open-minded about it, to the extent that more and more sectors are included in the PLI schemes. The economic survey points to the fact that we need to create 80 lakh jobs a year from now till the next 10, 15 years, given our demographics, etc. And manufacturing can be the only way to go. Manufacturing, construction, real estate, and labor-intensive industries are the only way we can create 80 lakh jobs. It can't happen in services alone. So to that extent, I would expect more trust and more focus on PLI schemes and the Make in India or Atmanirbharta theme.
I'm going to depart for a second away from the budget, even though we're 45 minutes out of the announcement. And Andrew, I want to come to you first on this, and then Mihir, I'll get your view as well on what we've been seeing so far on Q1. Because after the budget excitement is done and dusted, we'll see a lot of plans for the next several years, some allocations, tinkering here and there. What we're left with in terms of solid factual evidence of what's happening with profitability are the numbers. Andrew, would it be fair to say that Q1 so far, apart from a few exceptions, and I think IT is the outlier, has not been the best performing or on par with streets' expectations?
I would agree. I mean, it's been lackluster. If anything, I'm seeing earnings, below expectations, below the market expectations, and therefore you're seeing some cut in earnings. So let's just take the budget out of the picture. Whether it goes up or down is immaterial for afterwards. We go back to the fundamentals, and the earnings is not supporting the market valuations at the moment. And our view has been that we'll probably see something like 15% earnings growth this year, and maybe the market would move up in line with that. The market's already up 10% this year, so you've really got little to play for in the next 6 months, unless two things happen. One, the government increases the capex and those orders go up very quickly, or private capex picks up, because that does have a multiplier effect, and that would probably mean that earnings can be upgraded in the first part of 2025, and that would keep the market going towards the second half of the year. But without that, there's very little to get you excited about the market in terms of earnings growth given the first quarter so far.
Mihir, same question to you. All said and done, at the end of the day, Q1 has been a little lackluster, to quote Andrew.
Yes, even in IT, I would say that while there have been some upgrades in some of the guidances, we're still talking about, at least as far as the large companies are concerned, we're still talking about very low single-digit kind of growth, at least for a year or so. So it's not that exciting. Banks have faced some pressure on deposit growth, so that might actually end up curtailing the overall lending growth also. So those are some of the flags that probably the finance minister would have in mind when presenting the budget. You might see something for the banking system also, because deposit growth does seem to be a bit of a struggle.
I wonder what can be done to shore up deposit growth, and comes back to the question that I asked Radhika as well. Radhika Gupta, when the governor says that money is going, instead of going to the banks, is going to mutual fund industry. Mihir, that's good for you, but is it good for the bank? So when you say that something could be done to shore up deposit growth, like what? I mean, increasing interest rates could be one measure, but that's in the realm of the RBI.
Well, you could have for the middle class, hike in the slab rates, hike in the exemption levels of income. Plus, you used to have, we also have the interest ceiling, maximum ceiling up to which you can have interest or rather tax breaks on your interest income. So those kind of tweaks can definitely be done. But overall, the mutual fund industry, while it's been growing, I think it's more a function of percentage of household savings rather than mutual fund versus bank. We must also realize that a lot of savings are actually going to physical assets. So I don't think it's mutual funds versus banks. It's physical assets versus financial savings. That's the debate.
Drew, now just trying to talk about what could find a sure shot mention. We know defense, railways, power, for example, will certainly find a mention, because these are sectors that the government has a focus on for a number of years. Let me start with power. Where do you think, or what's the quantum of thrust do you think? Could there be a surprise there, or is it a present continuous? And will the markets have a positive takeaway from there? Because it's a very wide ecosystem of stocks which are listed, which could benefit or not from whatever is announced.
So the question is for...
Okay, Mihir, you can start, then I'll get Andrew's view. I'll ask this to Andrew, but Mihir, maybe you can start first.
Sure. So see, as far as the power sector is concerned, we have the PSUs and we have the private sector. As far as the transmission, distribution, generation ecosystem is concerned, most of it is in the central or state government ambit. So those outfits are anyway spending the way the government expects them to. So it's not a part of the budget really. The budget probably has more impact on areas like defense, railway, where there is a direct allocation, roads, etc., for example, where there's a direct allocation. So on the power sector per se, the influence that the government is having will be more on the policy front, and for which we've seen various measures for renewables. We have seen adequate incentives for even local manufacturing of a lot of components, etc. And the ordering in the power sector has picked up both in the private sector as well as the public sector space. So I don't expect specific capex linked announcements for power. It's more on the policy front that we can expect something.
Okay, Andrew. Same question, is power the space that you would watch out for the most, and within that ecosystem, therefore, what do you like, or are you expecting better announcements in maybe defense, railways, what have you?
No, I'm really not expecting anything more from what the interim budget said. I mean, there might be tweaks here and there. I would agree it's more of a policy in terms of power, of how they kind of kind of give orders. I think there's still a deficit, so maybe those companies involved in kind of providing power from wind might be kind of the areas that you get more focus on, more incentives for that to happen going forward to help with that deficit. So that's what I'd expect to see. But I'm really not, for the interim budget, I don't see why they need to do so much more. We're all happy with that interim budget. I think the question will be how much more towards rural spending, where they're doing it. If it's towards housing, that's great. Maybe one sector which they'll look at a little more closely is the hospitality sector, because again, it's a big, in terms of employment, it's a big area. So maybe they could do something for the hotel industry as well, to get that picking up. It's going very well, but to continue that kind of move towards more employment in the services sector as well.
Look at Easy Trip this morning, about 7% up. Since you spoke about hospitality, Andrew, Indian Hotels was the big winner yesterday. Chalet seeing a bit of profit booking, but let's quickly see what's happening with Indian Hotels as well. That was the big winner. A bit of profit booking there as well. So yeah, you could see impetus for there. But I just want to take a second to talk about Borosil Renewables and what's happening there. 11% up, has been on a steady stream run since this morning, and no specific news. So perhaps a clear budget play over there for a boost to alternate energy. Even an Adani Green running up. Suzlon, of course, fantastic numbers, but nevertheless also a big push there. Mihir, this is now a longer term theme, right? And we'll be talking about this next budget also, possibly at the budget after, because alternate energy is a stated goal and it takes time to really push through. But what would be the top bets in this space if investors want to ride that wave?
Renewables is a vast area, and while we have huge amount of investments which has been committed by the private sector in solar, in wind, of course nuclear also coming up as a thrust area, but generation is only a small part of the game. Equal amount of investments need to go into the transmission and distribution system, especially the transmission systems, because as we know, the renewables are not uniform in terms of their availability throughout the day. So it needs a different set of transmission systems. It needs power storage as a system. So I could expect something on the say storage system incentives, something on battery storage, etc. If at all, we have to come to this situation for renewables. So the way battery prices are coming down globally, say 1 or 2 years ago, or very short time ago, I would say, even a couple of years ago, it was perceived that battery storage can be very expensive and it's not viable as a mass storage device. But the way battery prices have come down in the last few months, it's now becoming increasingly possible that even large-scale battery deployments can be done for the buffering of renewable energy, so to say, storage of renewable energy, which is not uniform throughout the day. So I think you might see some announcements on those, say PLI schemes, etc., more for battery manufacturing, etc. So those kind of incentives are required. As far as the T&D, the transmission and distribution space is concerned, we have seen the state and the central transmission utilities announce projects in the HVDC space. So those are anyway out there getting bid out, and we are seeing it in the order book of a lot of companies. So that theme is already running, and I think the pace at which it is happening is also adequate. But on the battery storage part, you can expect, or storage in general, you can expect some announcements.
Hi, it's also Samina joining in. A more broader based question. What do you think the budget could do to trigger the next leg of rally on D Street?
With taxes, that's the only thing. I think everything else has been played into the market.
Right. Mihir, what about you? What are your thoughts? What could the budget do to trigger the next run-up on D Street? We're already up 5% this month and we look expensive. Anything that the budget could have that could help the next leg?
Well, there could be some relief for the middle class, the tax-paying middle class. because there is a feeling that the current slabs, etc., are kind of out of date, and given inflation, etc., you might want to remove, at least move the exemption slabs up so that it increases disposable income and you can have benefits in the discretionary space, in the housing space, as the white collar tax-paying population gets more disposable income. So that's one definite possibility, or not possibility, hope, which can actually improve the sentiments. And of course, there's been a lot of speculation on capital gains tax peaking around the duration or the rate of capital gains. So if there is no negative on that, that can be a good news. So no bad news can also be good news.
No bad news can also be good news. Andrew, what do you think the budget should not do or disturb at this current juncture we are at? It's there are a whole bunch of wish lists, I know, from various sectors, just like it is every year, right? But what do you think is non-negotiable in that sense?
Well, from a market perspective, non-negotiable is increasing capital gains tax, and both long-term and short-term. That's non-negotiable for the market. So that's the one area which we all worry about, right? In which the market's worrying about. As I said, I think everything else that you could ask for in terms of the interim budget, and now you're going to get more money towards rural expenditure, is a nice kind of Goldilocks scenario for the market to ponder on, and that's why you've seen a large move, since the elections on the back of this thinking that fiscally prudent, spending money on capex, getting the rural economy going. You can't ask for a better mix, right? It's a nice cocktail to drink.
Andrew, Mihir, always great talking to both of you. Thank you very much for joining us and helping us understand what those expectations are from the much anticipated budget. The markets are quiet as expected. The broader markets are looking good. Pockets of gain is very obvious. Anything to do with green and clean energy is looking good. Fertilizers are taking a bit of a break this morning, and so are some of those railway stocks. But of course, the big question is, what are the markets expecting? That's what we need to drill it down to eventually. And Neeraj is standing with us for more on that. Neeraj, what is the market expectation? At least in terms of the ticks on the screen, it's flat as it can get.
Yeah. Well, it's interesting, Samina, because this morning all of us spoke about this, that the pre-budget session will be quiet and choppy post-budget. No brainer, but good to lay it out. Now, what are the key headlines or the key numbers or the key heads which the street will be watching out for? So one of them, we haven't given the number or the key point out here, but this plate is talking about the fiscal glide path being maintained. Now, maintained or bettered. Remember, there's a Bloomberg story which says that the number could actually be 5% as well, and that seems to have been the common consensus. What that would do is that it emphasizes the focus on macro stability and shows the unwavering commitment to fiscal prudence. Remember, when the S&P outlook changed about a year and a half ago, their thought was that the combined state plus center fiscal deficit should near 7%. Now we know states are at 3%. If the center says that their fiscal deficit number is 5 now, 4.5 later, and then eventually moving towards 4%, it helps give confidence to rating agencies, which is a big thing for borrowing costs. So that's the first one. Then loans to state for capex is the second head. Quantum and conditions of the loans to state. Remember, in the interim budget as well, a large sum was given, some conditions attached to it, but it's a great way to do capex. Would be interesting to see if that number is improved upon, particularly in the ally states. And aid to the ally states, like I said, is the key head as well to watch out for. Will there be extra outlays to rural, housing and MSMEs? That's the third key thing to keep in mind, because it shows job creation focus. And these are sectors with very strong needs for capital augmentation. So watch out for this as well. Similarly, focus on manufacturing. One, could there be moves done to attract global manufacturers? Remember, the stability in policy of import tariffs is a big thing that global manufacturing companies are watching out for. Beyond that, PLI schemes for mid-tech job-intensive sectors. India has done beautifully well on high-tech exports. In fact, now they are leading the exports, but can mid-tech come to the fore? That's the other thing to watch out for. Focus on FTAs as well, important. Last but not the least, the most talked about thing before every budget. Will there be any tinkering with the capital gains? I think at the end of every budget, there is a sigh of relief that there is no tinkering happening and the market goes on. Could this time be different in more ways than one? Could there be something on derivatives? Remains to be seen. So I think all of this watched out for.
Absolutely, and live footage coming there. Prime Minister now entering Parliament. Remember, the Cabinet has officially approved the FY25 Union Budget. That's part of the process, but Prime Minister Modi now coming in and just hark back to his message on the eve of this Parliament session yesterday, where, of course, the customary appeal to opposition that let's do some work together, the elections are over, now let's work together, but also talking specifically about what this budget will entail, how it will base or set the base for Viksit Bharat, and how this will be a budget which has a very, very clear vision. We'll be getting you all of that. Very quick break. Nirav Sheth on the other side. We'll be hearing from top corporate voices from
powerful driver of India's growth. The Indian economy, development of all regions, technologies and innovations. Inflation is moderate. Investments are robust. More comprehensive GDP.
एक ही लक्ष्य, नेशन फर्स्ट, एक ही इरादा, 2047 विकसित भारत।
Welcome back. 24 minutes to go, and then, of course, the budget will be upon us. But just before that, Nirav Sheth, CEO, Institutional Equities of MK Global Financial Services, joins in. Nirav, hi, good morning. Thanks for joining in. Nirav, as a significant market participant, let's start by talking about how are you feeling before we go into this budget. Are you confident, buoyant, excited? Tell us what your thoughts are, and what have you made of the last few budgets or Nirmala Sitharaman's term in the last 6 years as FM?
I'm fairly excited, and anyone remotely concerned either with the economy or with the stock markets have no reasons to complain. Frankly, if you ask me, I've been quite vocal about this, that the last 5-7 years have been probably the best managed in terms of the macroeconomy and in terms of the microeconomy as well. And therefore, you just keep doing what you've been doing all this while without tinkering too much, and let the free market do the rest for you. Focus on infrastructure. There is much to go, and then obviously you can talk about some few policy actions that you can take given the buoyancy in the markets. But broadly, the fact that you need to push investments at a different level, you need to improve the structural potential growth rate of the economy, That is where the focus has to be, and eventually it flows down to employment as well.
What would the expectation then be, taking forward with the interim budget left things? What would the expectation be from the full budget this time? What were you left longing for?
Frankly, like I said, the only difference is that from the time, from the number that you had for interim budget, obviously you got a bonanza from RBI, which is roughly about 40 bips to my GDP. And the best way to try and use that is try and improve the capex outlay, probably a bit on revenue capex as well, because that has been declining for last 3 or 4 years, and that is probably politically the right thing to do at this point of time. The only thing I really want, and this is a bit difficult to pull it off because it requires a lot of political capital. Indian government is probably, we are slightly poor in terms of the income generation, but we are very, very asset rich. This is the right time to try and lay a path for big, massive divestment and privatization for the next 3 or 4 years. If you pull that up, the balance of the government of India can change dramatically. You probably got all the monies in the world to try and do whatever you want. And you have the political capital to do it as well. Whether they do it and whether they announce that they are going to do it is a different question altogether.
Okay. Nirav, good morning. What is that one thing of the many, I know it's difficult to pin it down to one thing, but if there's one thing that you would watch out for or hope for, which would be positive or not negative for the markets?
Well, if you ask me, what is the risk to your view on the markets, and importantly means what is the risk to the view on the economy? I believe that you should not do anything that tinkers with the efficiency of the market. You can have utopian views about what you want to do, the small investors not losing money, trying to curb excessive speculation. These are good utopian targets to try. You believe in the efficiency of the market, you to believe in free market economics. They work beautifully well, right? You need to create very broad regulations so that people follow those regulations. Don't kill the animal spirits. They come, they don't happen overnight. It takes a hell of a lot of time to build confidence, and it takes a second for you to become fearful, right? As long as you don't tinkle with the tax rates, which means that you don't change the intrinsic value of the Indian economy, right? You don't essentially, disturb what is going to the shareholders and what is going to the government. I think you are mostly fine. The rest, everything is simple mechanics. I don't get too worried about whether, fiscal deficit is 10 basis points above expectation, 10 basis points lower than expectations. That is just a narrative that dies in a day. Don't kill the animal spirits. This is the only thing I look for in the budget.
But just one quick thing, you reckon that if they indeed tinker with the taxation on derivatives, it could have a meaningful negative impact on the markets?
Well, I will, I'm referring more to the long-term capital gain tax because
okay, which is fine.
Which
is fine. But what about the derivative tax? If that is tinkered with specifically for options trading, will it have a big negative impact on the markets?
I don't think it will be a big negative impact. It can have some collateral damages because obviously, there is a big book that is created in arbitrage, and, there could be some impact on the spreads, and therefore, a particular subsegment of that asset class could get impacted. But outside that, I'm not too worried about, tinkering of taxation with the derivatives. I do believe that don't do anything which is regressive. You should not assume that small investors don't know how to trade and big investors know how to trade, and therefore don't do anything that distinguishes, for example, you're talking about increasing the lot size and stuff like that. You're just trying to push the small investors out of the market. Ideologically, I don't believe in that.
Just hang in there. We'll come right back to you. In the meantime, Tamanna is also standing by with a quick take on what is expected from the budget. Tamanna, it's over to you.
Yeah. All right. So this is a take on what I think will happen on the budget based on a lot of conversations we've had, based on commentary which has come in from a lot of quarters as well. The number one pointer, which I think that you're going to see more of the same in Budget 1 of Term 3, while there will be an attempt to say that you are setting the roadmap for the next 5 years, there won't be too much difference or deviation in policy. Because remember, right from when the election results came out, the government has been harping on and re-emphasizing that nothing really has changed. Your cabinet is the same, your policies are the same, your finance minister is the same. So expect budget to be a continuation of the interim budget, because the messaging is that just because the BJP has lesser seats than was expected in Parliament, it makes zero difference, and that's important. Focus on infra, hence, will continue. Boosting capex will continue, but there will be a push for consumption as well. That will have to be because the economy needs it. The form it takes is what the question really is. Will there be welfareism? Will there be populism? The likelihood seems no, which is why you will see the fiscal deficit glide path at 5.1 in the interim budget, which will be maintained, could even be bettered, because remember, you have that RBI bonanza come in. So watch out for that number. That becomes a very, very crucial number. Like I said, consumption push stays. Popularism and populist measures are very unlikely. So anyone expecting huge dole outs because of the elections could be disappointed. And I'm sticking my neck out a bit by saying this here. We'll see what really happens at the end of it. Viksit Bharat theme will really dominate everything that the finance minister says. It might not translate into specific schemes, more of a roadmap. But remember, that is the big theme, not just for this budget, but for the next 5 years. That was very clear from the Prime Minister's pre-session address as well. Tax relief. Everyone's waiting for tax relief. Middle class, lower middle class. Will slabs be tinkered and changed? We've heard a lot of guests this morning also saying it. My take is that if you see any change at all, it will be in the new tax regime, not in the old tax regime. It's unlikely that tax slabs will be really tinkered with. We'll wait and see what happens. The only joker in the pack is what happens with derivative volumes. Do you do a tax tinker? Do you put some kind of a regulatory leash? And if that is what the government aims to do, remember, they don't need to do it in the budget. There are a lot of ways to sort of burst that bubble if that really is the concern coming in. And it's likely to be a measured move, something that won't spook the markets, but will get exactly what they want, which is tempering a bit of the froth and frenzy on derivative volume. So this is basically my take of what I think will happen in the budget. We'll, of course, wait and watch.
Interesting to see if the tinkering on the derivative side of the business could actually impact the sentiment, just like maybe capital gains potentially could. But of course, this is going to be important because there'll be policies proposed, especially as Prime Minister Modi and the run-up to the Lok Sabha election had talked about making India the third largest economy in size and, of course, $5 trillion. Well, talking about what industry is expecting, their wish list, let's cut across to a conversation my colleague Janini is having with CII's Vice President R. Mukundan and Vinayak Chatterjee, Chairman, CII Infrastructure.
To maybe 12.5 or 12 lakh crores. So the budget will provide a very strong signal as to whether there is being this not so subtle shift in economic thinking.
Right. So on that very same subject, we've also seen that, while we're on the subject of, say, the government will not pause, the government will continue its pace. The private capex pickup is also something that was highlighted very much yesterday. It has been taking off in a few sectors, that was noted. However, what they expected, it's not at the pace that they wanted to. Now, coming to that front, what could be that pivot? What is the industry hoping to hear perhaps this time around that will give them that push?
I think in terms of creating the environment for investment, that already has been more or less done. I think we can look at other factors of, let's say, making the investment climate even better, whether you talk about labor codes, operationalizing that in the states. But leaving that aside, I think the capacity utilization in most units is already at 85, 87, 90%. I think at that point, most industries try to at least come with additional investment in capacity, new capacities. I think most companies, at least we speak to in CII, already have investment plans, not just for India market, but many of them are actually looking at international market. So I think India is getting its act right. I think Indian industry, private sector is getting its act right. And I think we need to continue to carry on with the momentum where we continue to create a positive environment for industry to invest. At the same time, I think also continue the good work which government has done in terms of infrastructure. Because two factors of production, as I said, which is very, very high, very capital intensive. One is logistics, other one is power. I think in these two, there can be no let up. I think we need to continue to ensure that our energy costs remain low or at least very competitive. And also our logistic cost of transportation remains very, very competitive.
Right. I want to come back on energy to Mr. Chatterjee, but quickly before that, when you did say, Mr. Chatterjee told us also about perhaps a change in thinking. And that brings me to one other point that the CEA made yesterday, especially vis-a-vis our treatment towards import and trade with China. Now, perhaps a change in the China plus one strategy, or rather he highlighted that we have to find a balance between what we're importing and how we're looking at the import of capital and the import of goods. So on that front, how do you think the export market and the industry, particularly the representative of the body that you are, how do you think the industry is looking at this? Are they ready for what was in the likes of, say, Brazil or Vietnam that was explained yesterday?
If you look at the broad environment which is there, I think we've got an aging population in Far East. We also have rapidly aging and more expensive labor force in China. I think the competitive opportunity for India is absolutely there, whatever may be the policy we want to adopt. I think that opportunity is what we need to capitalize on. Leave the goods and services export. I think if you look at sheer labor which is needed in Japan, for example, the Japan industry was telling me almost 400,000 qualified skilled labor they need every year to come from somewhere. Is it going to be Philippines? Is it going to be India? I think that's an opportunity for us because of the aging population. So I think there are some factors which are changing with our youthful population. But I think when you talk about youthful population, I think Chief Economic Advisor did focus on skills. I think emphasis on skills and skilling our workforce to make them ready for international market and domestic market is going to be extremely critical. And this overall move by government that now companies can actually certify skills is going to be a very, very positive game changer. Hopefully it gets implemented with vigor. If that happens, I think we will be not only create jobs, but also be very, very competitive vis-a-vis not just China, any country around the world.
That ties to the larger point of jobs and what, in fact, the finance minister will be saying to that particular topic. So I want to close with this question on energy. And in fact, if we go back to the speech yesterday, the CA mentioned that it's not a question of if, it is a question of when. And if we talk about the energy priorities, there is a reality that a country like India and what it can afford to do at this particular point. There is also our larger ambitions of what we want to do in terms of EV, in terms of green energy projects. How do we find a synergy between the two? That is my question.
So this is a most appropriate question because energy is probably one of the key inputs to a cost-competitive economy and the welfare of the people. As we speak here, the economy is transiting from a historic, hugely fossil fuel dependent economy to the ambitions of a green energy economy. This transition is public policy. We have made all these pronouncements and taken targets at the various COP meetings, etc. Now that is a fact of life, but this transition involves tremendous pain across the delivery chain. So, for example, the amount of transition finance, support finance that is required to make this move, whether it is storage systems, battery energy storage systems, pump storage systems, EV infrastructure rollout, hydrogen, green hydrogen, ammonia, flue gas discharge, anti-pollution equipment, all of these require concessional long-term financing to shift this economy from fossil fuel to green. So one of my...
All right. Yes, the shift from fossil fuel to green, or maybe a combination of that for the time being, considering the power demand is an interesting one as well. But so that's the CII view, of course. Now, 9 minutes left for the budget speech to start. We told you on Friday that we have a budget think tank with whom we've discussed some of their expectations from the budget. One of the members of the think tank, Ravi Dharamshi, founder and CIO, ValueQuest Investment Advisors, joins us right now in the studio ahead of the budget and will be with us post the budget as well. Ravi, great having you. Thanks for taking the time out and being with us. No, the pleasure is ours. Ravi, some time has passed between that Friday conversation that we had and now. Is there a change to the thought process around what will come in the budget, or do you believe policy continuity from February is likely the key thing?
No, I don't think there is any change. The government will stick around to the fiscal discipline, but they have additional rooms in terms of doing some revenue expenditure without actually, kind of ruffling the budget math. So the only thing is that usually see budget tends to be a non-event for most of the time. But this time around, I feel there is slightly more emphasis because of the way the setup has been. Yeah, we've come into this budget with a slightly reduced, mandate. We are going into the US elections. Markets have rallied for a 4-year period. There is some noise building around capital gains tax. All that makes it that this will be an important event from the continuity of policy perspective and continuation of the capital cycle. It is very important to pass on the baton from central government-driven capex cycle to a private sector and a state sector. I think that is the most important thing that I'll be looking out for.
Ravi, coming specifically to sectors, how much does it matter if capex allocation is increased significantly? I mean, that was one of the views that Vinayak Chatterjee had also given us. People are going to wait and watch that over the interim budget, how much more? And I remember this conversation we were having in the interim budget when the first cut was, oh, the capex allocation has come down. And then you made the point that no, if you look at it over what was actually spent, it is a 17% uptick. Are you expecting a bigger number there? And if so, where does that sort of benefit flow in terms of sectors?
So 17% if you adjust for the BSNL equity infusion, then probably 16%. But I don't expect a meaningful shift over there. I still expect it to be, say, 3-4% higher at best. But the important thing is not the budget allocation. Important thing is, will they be able to spend that? Because the first quarter has not been that great in terms of spending. So you have only 6, 7, 8 months to catch up, to do the catch-up spending. So more than the budget, what I am looking for is on the ground what happens, whether it is actually spent or no. And in terms of where that goes, I think that will continue to be the case. I think a little bit more emphasis on revival of the real estate cycle at the bottom of the pyramid, the affordable housing. I think that is where I feel government will foresee that has the maximum bang for the buck, because that has a big multiplier effect and it will impact a large number of the populace. So they need to get that cycle moving, and I would expect some more extra impetus on that front.
Like what?
Affordable housing, just maybe incentivizing the real estate cycle to kickstart in the rural areas, in the tier 2-3 towns, not only at the peak of the pyramid.
Ravi, the theme so far has been anything PSU becomes a buy. The market cap of PSU stocks has doubled in the last one. I mean, Cochin Shipyard case in point, right? Do you feel like that theme will continue for the next couple of years, or do you feel like newer themes and sectors could carry the mandate of taking the markets higher from these levels? What is that going to be? Same old or brand new?
No, I think there are a few transitions that are likely to happen in the market. I don't see it happening like immediately, but over the next few months. One is this reversion to mean trade that is happening, and I don't like to call it a PSU. That's what market narrative is, but it might as well be cheap stocks not bought for a long period of time, getting a reversion to mean trade. Those kind of companies, I think that reversion to mean trade has panned out. What is likely to take over is again some of the secular themes. And within that, I think the slight shift, incrementally shift away from capital goods, especially centrally driven capital cycle, away towards private sector cycle. So railway, defense are two sectors actually which are totally dependent on central government capex. So incrementally, if I believe that state and private sector is going to drive this, then those are not the sectors that are going to be favored automatically. And also incrementally, if I am expecting some revival in the revenue expenditure, so that would lead to, and again I'm not saying a big revival or something, but that will mean incrementally some revival in the consumer oriented sectors. So these are the two shifts that I'm looking for in the budget.
Consumer oriented, how would you split it between discretionary and staples? Where is your bias currently sitting?
At this point of time, I would say first impact will more be in the staples, and going forward then it will, because see that space has not been doing well for 4-5 years. Yeah. Okay, there has been real rural distress, and if there is one takeaway that we can have from the election result is that the rural distress was real. Yeah. So the first revival has to be in the staples. but eventually that will move to the discretionary as well.
So the Nifty FMCG is the top sectoral gainer at this point, just going to the budget. We're less than about 2 minutes away. PNG, ITC, Tata Consumer, HUL, all of these are firing. You think more of the same?
Couple of things are playing out over here. One is that yes, that can be the shift, and the second thing is that it's kind of a perceived defensive sector, and there have been a lot of gains happening that have accrued in the other sector. So some shift away to the defensive sector is likely.
One question going back to consumption. If there is tinkering on the personal tax front, which seems to be a consensus in the market, and for a number of years that hasn't been changed, do you feel like in that case, urban consumption could be a key beneficiary? And maybe, just maybe, it may not be staples, but it'll be the Honasas and the Nykas of the world.
Can't rule that out. And honestly, in every first year of this government's term, they usually announce something big bang, which kind of sets the tone for the next 5 years. And I wouldn't rule that out completely, that there can be some tax benefit for the middle class, salaried class especially. And yes, that can play into the urban consumption theme as well.
One question, Ravi. You understand markets really well. They can't, okay, we're just a minute away by the way, but if there is no tinkering possible realistically for derivatives as a product, because they are already taxed max, what is within the purview of the budget to do if they want to clamp down on that a bit? And is there a case for clamping it down? Because there are a lot of statements around it. What's your personal view?
See, I am not going to get into what is prescribed or what should people do. I think it is more at individual level. But I think the way the kind of noises have been made by the RBI as well as by SEBI chief, and some maybe even it's got a mention in the economic survey as well. So definitely some action is likely to be over there. I have no idea what action, but I think some disincentivization away from getting into speculative activity.
Could it impact the markets, you think?
There will be a short-term impact, but that will be more knee-jerk, and for a long-term investor, probably it will not matter much.
Ravi, just one quick question before we go to the budget. Do you anticipate a correction in the tune of 5 to 10% post the budget? Because we've talked about this for many months now. And also, what sector are you overweight on? You said defensive, so we can build on that.
So I don't know whether a budget is the reason that leads to that kind of a correction, but you cannot rule that kind of a correction just purely from probabilistic perspective, because we have rallied so much. Everything is looking good, but without a reason also, even if the budget fails to provide a new, something that markets can hold on to, that can be a reason enough for markets to correct.
And it's a good thing, right? Given that we look so expensive and stretched right now, a little bit of consolidation would be good.
That's the feature of the market, right? 2 steps up, 1 step down. 1 step down has not happened in a while, so it could be in the offing.
Maybe that will keep all the derivative trading, fix the problem in itself as well.
Just look at the sharp buzz right now, recovery, and even while we've been talking about FMCG companies, look at the sharp moves in ITC coming in, up about 1.5% right now. I don't know if we can show that in today's chart on our screens, but you are seeing a lot of movement as we wait for that budget announcement. Just a couple of minutes from now, that's the announcement happening. You're seeing the chair of the House now first coming in. I remember that was also an exciting sort of election/selection of the speaker. And there you have the speaker over there. The opposition had come and said, we'll get our person. But finally, of course, you've had the speaker coming in and a continuation there as well, which is why I'm saying you'll see a lot of policy continuation. And he will, of course, welcome the finance minister to speak. Let's listen in.
और तंजानिया संयुक्त गणराज्य की नेशनल असेंबली की अध्यक्ष माननीय डॉक्टर तुलिया एक्सन का स्वागत करते हुए अत्यंत प्रसन्नता हो रही है। वे हमारी सम्मानित अतिथि के रूप में भारत की आधिकारिक यात्रा पर आई है। ये हमारे लिए खुशी की बात है कि डॉक्टर एक्सन बजट सत्र को देखने के लिए यहाँ उपस्थित है। माननीय डॉक्टर तुलिया एक्सन शुक्रवार दिनांक 19 जुलाई 2024 को भारत पहुंची। उन्होंने 21 जुलाई 2024 को आगरा का भ्रमण किया और इस समय वह विशेष बॉक्स में आसीन है। हम भारत में उनके सुखद और सफल प्रवास की कामना करते हैं। हम अंतर संसदीय संघ के प्रेसिडेंट के रूप में उनकी भूमिका के लिए सफलता की भी कामना करते हैं। उनके माध्यम से हम तंजानिया गणराज्य की संसद के सदस्यों, तंजानिया की सरकार तथा वहां की मित्र जनता को बधाई और शुभकामनाएं देते हैं। मान्य सदस्यगण, जैसा कि आपको समाचार भाग 2 के माध्यम से पहले ही सूचित किया जा चुका है कि माननीय वित्त मंत्री जी के बजट भाषण की प्रतियां हार्ड कॉपी के रूप में उपलब्ध कराई जाएगी। अतः बजट प्रस्तुत हो जाने के पश्चात माननीय सदस्य कृपया बजट भाषण की अपनी अपनी प्रति प्रकाशन काउंटर से प्राप्त कर लें। आपको ये भी सूचित किया जाता है कि माननीय मंत्री द्वारा बजट प्रस्तुत किए जाने के पश्चात बजट की प्रतियां आपको मेंबर्स पोर्टल के माध्यम से भी उपलब्ध करा दी जाएगी। माननीय वित्त मंत्री श्रीमती निर्मला सीतारमण।
Honorable Speaker, I present the budget for 24-25. Introduction. The people of India have reposed their faith in the government led by Honorable Prime Minister Shri Narendra Modi and re-elected it for a historic third term under his leadership. We are grateful for their support, faith, and trust in our policies. We are determined to ensure that all Indians, regardless of religion, caste, gender, and age, make substantial progress in realizing their life goals and aspirations. Global context. The global economy, while performing better than expected, is still in the grip of policy uncertainties. Elevated asset prices, political uncertainties, and shipping disruptions continue to pose significant downside risks for growth and upside risks to inflation. In this context, India's economic growth continues to be the shining exception and will remain so in the years ahead. India's inflation continues to be low, stable, and moving towards the 4% target. Core inflation, that is non-food and non-fuel, currently is 3.1%. Steps are being taken to ensure supplies of perishable goods reach markets adequately. Interim budget. As mentioned in the interim budget, we need to focus on 4 major castes, namely the Garib, Mahilaye, Yuva, and Annadata, the poor, women, youth, and the farmer. For Annadata, we announced higher minimum support prices a month ago for all major crops, delivering on the promise of at least a 50% margin over costs. Pradhan Mantri Garib Kalyan Anna Yojana was extended for 5 years, benefiting more than 80 crore people. Administrative actions for approval and implementation of various schemes announced in the interim budget are well underway. The required allocations have been made. Budget theme. Turning attention to the full year and beyond in this budget, we particularly focus on employment, skilling, MSMEs, and the middle class. I'm happy to announce the Prime Minister's package of 5 schemes and initiatives to facilitate employment, skilling, and other opportunities for 4.1 crore youth over a 5-year period, with a central outlay of 2 lakh crore rupees. I will speak about them shortly, while more details may be seen in the annexure. This year, I've made a provision of 1.48 lakh rupees, 1.48 lakh crore rupees for education, employment, and skilling. Budget priorities. The people have given a unique opportunity to our government to take the country on the path of strong development and an all-round prosperity. In the interim budget, we promise to present a detailed roadmap for our pursuit of Viksit Bharat. In line with the strategy set out in the interim budget, this budget envisages sustained efforts on the following 9 priorities for generating ample opportunities for all. Number 1, productivity and resilience in agriculture. Number 2, employment and skilling. Number 3, inclusive human resource development and social justice. 4, manufacturing and services. 5, urban development. 6, energy security. 7, infrastructure. 8, innovation, research and development. And 9, next generation reforms. Subsequent budgets will build on these and add more priorities and actions. A more detailed formulation will be carried out as part of the economic policy framework about which I will speak later in this speech. This budget details some of the specific actions to be initiated in the current year towards fulfillment of these priorities, with potential for transformative changes. The budget also covers some of the previously made announcements with intent to strengthen them and step up their implementation for expediting our journey towards the goal of Viksit Bharat. Priority 1, productivity and resilience in agriculture. Transforming agricultural research. Our government will undertake a comprehensive review of the agricultural research setup to bring the focus on raising productivity and developing climate-resilient varieties. Funding will be provided in challenge mode, including to the private sector. Domain experts, both from the government and outside, will oversee the conduct of such research. Release of new varieties. New 109 high-yielding and climate-resilient varieties of 32 field and horticultural crops will be released for cultivation by farmers. Natural farming. In the next 2 years, 1 crore farmers across the country will be initiated into natural farming, supported by certification and branding. Implementation will be through scientific institutions and willing gram panchayats. 10,000 need-based bio-input resource centers will be established. Missions for pulses and oilseeds. For achieving self-sufficiency in pulses and oilseeds, we will strengthen their production, storage, and marketing. As announced in the interim budget, a strategy is being put in place to achieve Atmanirbharta for oilseeds such as mustard, groundnut, sesame, soybean, and sunflower. Vegetable production and supply chains. Large-scale clusters for vegetable production will be developed closer to major consumption centers. We will promote farmer-producer organizations, cooperatives, and startups for vegetable supply chains, including for collection and storage and marketing. Digital public infrastructure for agriculture. Buoyed by the success of the pilot project, our government, in partnership with the states, will facilitate the implementation of the digital public infrastructure in agriculture for coverage of farmers and their lands in 3 years. During this year, digital crop survey for Kharif using the DPI will be taken up in 400 districts. The details of 6 crore farmers and their lands will be brought into the farmer and land registries. Further, the issuance of Jan Samarth based Kisan credit cards will be enabled in 5 states. Shrimp production and export. Financial support for setting up a network of nucleus breeding centers for shrimp brood stocks will be provided. Financing for shrimp farming, processing, and export will be facilitated through NABARD. National Cooperation Policy. Our government will bring out a national cooperation policy for systematic, orderly, and all-round development of the cooperative sector, fast-tracking growth of rural economy and generation of employment opportunities on a large scale will be the policy goal. This year, I have made a provision of 1.52 lakh crore rupees for agriculture and allied sectors. Priority 2, employment and skilling. Employment-linked incentive. Our government will implement following 3 schemes for employment-linked incentive as part of the Prime Minister's package. These will be based on enrollment in the EPFO and focus on recognition of first-time employees and support to employees and employers. Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. This employer-focused scheme will cover additional employment in all sectors. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons. Participation of women in the workforce. We will facilitate higher participation of women in the workforce through setting up of working women hostels in collaboration with industry and establishing creches. In addition, the partnership will seek to organize women-specific skilling programs and promotion of market access for women SHG enterprises. Skilling program. I'm happy to announce a new centrally sponsored scheme as the fourth scheme under the Prime Minister's package for skilling in collaboration with state governments and industry. 20 lakh youth will be skilled over a 5-year period. $1,000 industrial training institutes will be upgraded in hub and spoke arrangements with outcome orientation. Course content and design will be aligned to the skill needs of industry, and new courses will be introduced for emerging needs. Skilling loans. The model skill loan scheme will be revised to facilitate loans up to 7.5 lakh rupees with a guarantee from a government-promoted fund. This measure is expected to help 25,000 students every year. Education loans. For helping our youth who have not been eligible for any benefit under government schemes and policies, I am happy to announce a financial support for loans up to 10 lakh rupees for higher education in domestic institutions. E-vouchers for this purpose. E-vouchers for this purpose will be given directly to 1 lakh students every year for annual interest subvention of 3% of the loan amount. Priority 3, inclusive human resource development and social justice. Saturation approach. Our government is committed to all-round, all-pervasive, and all-inclusive development of people, particularly farmers, youth, women, and the poor. For achieving social justice comprehensively, the saturation approach of covering all eligible people through various programs, including those for education and health, will be adopted to empower them by improving their capabilities. Implementation of schemes meant for supporting economic activities by craftsmen, artisans, self-help groups, scheduled caste, scheduled tribe, and women entrepreneurs and street vendors such as the PM Vishwakarma, PM Swanidhi, National Livelihood Missions, and Stand Up India will be stepped up. Purvodaya. The states in the eastern part of the country are rich in endowments and have strong cultural traditions. We will formulate a plan, Purvodaya, for the all-round development of the eastern region of the country, covering Bihar, Jharkhand, West Bengal, Odisha, and Andhra Pradesh. This will cover human resource development, infrastructure, and generation of economic opportunities to make the region an engine to attain Vikasit Bharat. On the Amritsar-Kolkata Industrial Corridor, we will support development of an industrial node at Gaya. This corridor will catalyze industrial development of the eastern region. The industrial node at Gaya will also be a good model for developing our ancient centers of cultural importance into future centers of modern economy. This model shall showcase Vikas bhi, Virasat bhi in a growth trajectory. We will also support development of road connectivity projects, namely 1. Patna-Purnia Expressway, 2. Buxar-Bhagalpur Expressway, 3. Bodh Gaya, Rajgir, Vaishali and Darbhanga spurs, and 4. Additional 2-lane bridge over River Ganga at Buxar at a total cost of 26,000 crore rupees. Power projects, including setting up of a new 2,400 megawatt power plant at Pir Painti, will be taken up at a cost of 21,400 crore rupees. New airports, medical colleges, and sports infrastructure in Bihar will be constructed. An additional allocation to support capital investments will be provided. The requests of Bihar government for external assistance from multilateral development banks will be expedited. Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads in Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bangalore Industrial Corridor. An additional allocation will be provided this year towards capital investment for economic growth. Grants for backward regions of Rayalaseema, Prakasham, North Coastal Andhra, as stated in the Act, will be provided. PM Awas Yojana. 3 crore additional houses under the PM Awas Yojana in rural and urban areas in the country have been announced, for which the necessary allocations are being made. Women-led development. For promoting women-led development, the budget carries an allocation of more than 3 lakh crore for schemes benefiting women and girls. This signals our government's commitment for enhancing women's role in economic development. Pradhan Mantri Janjatiya Unnat Gram Abhiyan. For improving the socio-economic condition of tribal communities, we will launch the Pradhan Mantri Janjatiya Unnat Gram Abhiyan by adopting saturation coverage for tribal families in tribal majority villages and aspirational districts. This will cover 63,000 villages, benefiting 5 crore tribal people. Bank branches in northeastern region. More than 100 branches of India Post Payment Bank will be set up in the northeast region to expand the banking services. This year, I have made a provision of 2.66 lakh crore rupees for rural development, including rural infrastructure. Priority 4, manufacturing and services, support for promotion of MSMEs. This budget provides special attention to MSMEs and manufacturing, particularly labor-intensive manufacturing. We have formulated a package covering financing, regulatory changes, and technology support for MSMEs to help them grow and also compete globally, as mentioned in the interim budget. I am happy to announce the following specific measures. Credit guarantee scheme for MSMEs in the manufacturing sector. For facilitating term loans to MSMEs for purchase of machinery and equipment without collateral or third-party guarantee, a credit guarantee scheme will be introduced. The scheme will operate on pooling of credit risks of such MSMEs. A separately constituted self-financing guarantee fund will provide to each applicant guarantee cover up to 100 crore rupees, while the loan amount may be larger. The borrower will have to provide an upfront guarantee fee and an annual guarantee fee on the reducing loan balance. New assessment model for MSME credit. Public sector banks will build their own in-house capability to assess MSMEs for credit instead of relying on external assessment. They will also take a lead in developing or getting developed a new credit assessment model based on the scoring of digital footprints of the MSMEs in the economy. This is expected to be a significant improvement over the traditional assessment of credit eligibility based only on asset or turnover criteria. That will also cover MSMEs without a formal accounting system. Credit support to MSMEs during stress period. I'm happy to announce a new mechanism for facilitating continuation of bank credit to MSMEs during their stress period while being in special mention account, SMA stage, for reasons beyond their control. MSMEs need credit to continue their business and to avoid getting into the NPA stage. Credit availability will be supported through a guarantee from a government-promoted fund. Mudra loans. The limit of Mudra loans will be enhanced to 20 lakh from the current 10 lakh for those entrepreneurs who have availed and successfully repaid previous loans under the Tarun category. Enhanced scope for mandatory onboarding in trades. For facilitating MSMEs to unlock their working capital by converting their trade receivables into cash, I propose to reduce the turnover threshold of buyers for mandatory onboarding on the Trades platform from rupees 500 crore to 250 crore rupees. This measure will bring 22 more CPSCs and 7,000 more companies onto the platform. Medium enterprises will also be included in the scope of the suppliers. SIDBI branches in MSME clusters. SIDBI will open new branches to expand its reach to serve all major MSME clusters within 3 years and provide direct credit to them. With the opening of 24 such branches this year, the service coverage will expand to 168 out of 242 major clusters. MSME units for food irradiation, quality and safety testing. Financial support for setting up of 50 multi-product food irradiation units in the MSME sector will be provided. Setting up of 100 food quality and safety testing labs with NABL accreditation will be facilitated. E-commerce export hubs to enable MSMEs and traditional artisans to sell their products in international markets. E-commerce export hubs will be set up in public-private partnership mode. These hubs, under a seamless regulatory and logistic framework, will facilitate trade and export-related services under one roof. Measures for promotion of manufacturing and services. Internship in top companies. As the fifth scheme under Prime Minister's package, our government will launch a comprehensive scheme for providing internship opportunities in 500 top companies to 1 crore youth in 5 years. They will gain exposure for 12 months to real-life business environment, varied professions, and employment opportunities. An internship allowance of 5,000 per month, 5,000 rupees per month, along with a one-time assistance of 6,000 rupees will be provided. Companies will be expected to bear the training cost and 10% of their internship cost from their CSR funds. Industrial parks. Our government will facilitate development of investment-ready, plug-and-play industrial parks with complete infrastructure in or near 100 cities in partnership with the states and private sector by better using town planning schemes. 12 industrial parks under the National Industrial Corridor Development Program also will be sanctioned.
Veggie paper, no. Please, Petty.
Rental housing with dormitory type accommodation for industrial workers will be, just 1 minute. Rental housing, I repeat, rental housing with dormitory type accommodation for industrial workers will be facilitated in PPP mode with VGF support and commitment from anchor industries. Shipping industry, ownership, leasing, and flagging reforms will be implemented to improve the share of Indian shipping industry and generate more employment. Critical mineral mission. We will set up a critical mineral mission for domestic production, recycling of critical minerals, and overseas acquisition of critical mineral assets. Its mandate will include technology development, skilled workforce, extended producer responsibility framework, and a suitable financing mechanism. Offshore mining of minerals. Our government will launch the auction of the first tranche of offshore blocks for mining, building on the exploration already carried out. Digital public infrastructure applications. Turning to the services sector, I propose development of DPI applications at population scale for productivity gains, business opportunities, and innovation by the private sector. These are planned in the areas of credit, e-commerce, education, health, law and justice, logistics, MSME service delivery, and urban governance. Integrated technology platform for IBC ecosystem. An integrated technology platform will be set up for improving the outcomes under the Insolvency Bankruptcy Code for achieving consistency, transparency, timely processing, and better oversight for all stakeholders. Voluntary closure of LLPs. The services of the Center for Processing Accelerated Corporate Exit, CPACE, will be extended for voluntary closure of LLPs to reduce the closure times. National Company Law Tribunals. The IBC has resolved more than 1,000 companies, resulting in direct recovery of 3.3 lakh crore to creditors. 3.3 lakh crore rupees to creditors. In addition, 28,000 cases involving over 10 lakh crore rupees have been disposed of even prior to admission. Appropriate changes to the IBC, reforms and strengthening of the tribunal and appellate tribunals will be initiated to speed up insolvency resolution. Additional tribunals will be established. Out of those, some will be notified to decide cases exclusively under the Companies Act. Debt recovery. Steps for reforming and strengthening debt recovery tribunals will be taken. Additional tribunals will be established to speed up recovery. Priority 5, urban development. Cities as growth hubs. Working with states, our government will facilitate development of cities as growth hubs. This will be achieved through economic and transit planning and orderly development of peri-urban areas utilizing town planning schemes. Creative redevelopment of cities. For creative brownfield redevelopment of existing cities with a transformative impact, our government will formulate a framework for enabling policies, market-based mechanisms, and regulation. Transit-oriented development. Transit-oriented development plans for 14 large cities with a population above 30 lakh will be formulated, along with an implementation and financing strategy. Urban housing. Under the PM Awas Yojana, Urban 2.0, housing needs of 1 crore urban poor and middle class families will be addressed with an investment of 10 lakh crore rupees. This will include the central assistance of 2.2 lakh crore rupees in the next 5 years. A provision of interest subsidy to facilitate loans at affordable rates is also envisaged. In addition, enabling policies and regulations for efficient and transparent rental housing markets with enhanced availability will also be put in place. Water supply and sanitation. In partnership with state governments and multilateral development banks, we will promote water supply, sewage treatments, and solid waste management projects and services for 100 large cities through bankable projects. These projects will also envisage use of treated water for irrigation and filling up of tanks in nearby areas. Street markets. Building on the success of PM Swanidhi scheme in transforming the lives of street vendors, our government envisions a scheme to support each year over the next 5 years the development of 100 weekly hearts or street food hubs in select cities. Stamp duty. We will encourage states which continue to charge high stamp duty to moderate the rates for all and also consider further lowering duties for properties purchased by women. This reform will be made an essential component of urban development schemes. Priority 6, energy security, energy transition. In the interim budget, I had announced our strategy to sustain high and more resource-efficient economic growth, along with the energy security in terms of availability, accessibility, and affordability. We will bring out a policy document on appropriate energy transition pathways that balances the imperatives of employment, growth, and environmental sustainability. PM Surya Ghar Muft Bijli Yojana. PM Surya Ghar Muft Bijli Yojana. In line with the announcement in the interim budget, PM Surya Ghar Muft Bijli Yojana has been launched to install rooftop solar plants to enable 1 crore households obtain free electricity up to 300 units every month. The scheme has generated remarkable response with more than 1.28 crore registrations and 14 lakh applications, and we will further encourage it. Pumped storage policy. A policy for promoting pumped storage projects will be brought out for electricity storage and facilitating smooth integration of the growing share of renewable energy with its variable and intermittent nature in the overall energy mix. Research and development of small and modular nuclear reactors. Nuclear energy is expected to form a very significant part of the energy mix for Vikasit Bharat. Towards that pursuit, our government will partner with the private sector for 1. Setting up Bharat Small Reactors, 2. Research and development of Bharat Small Modular Reactor, and 3. Research and development of newer technologies for nuclear energy. The R&D funding announced in the interim budget will be made available for this sector also. Advanced ultra supercritical thermal power plants. The development of indigenous technology for advanced ultra supercritical thermal power plants with much higher efficiency has been completed. A joint venture between NTPC and BHEL will set up a full-scale 800 megawatt commercial plant using AUSC technology. The government will provide the required fiscal support. Moving forward, development of indigenous capacity for the production of high-grade steel and other advanced metallurgy materials for these plants will result in strong spin-off benefits for the economy. Roadmap for hard-to-abate industries. A roadmap for moving the hard-to-abate industries from energy efficiency targets to emission targets will be formulated. Appropriate regulations for transition of these industries from the current perform, achieve, and trade mode to Indian carbon market mode will be put in place. Support to traditional micro and small industries. An investment-grade energy audit of traditional micro and small industries in 60 clusters, including brass and ceramic, will be facilitated. Financial support will be provided for shifting them to cleaner forms of energy and implementation of energy efficiency measures. The scheme will be replicated in another 100 clusters in the next phase. Priority 7, infrastructure investment by central government. Significant investment the central government has made over the years in building and improving infrastructure has had a strong multiplier effect on the economy. We will endeavor to maintain strong fiscal support for infrastructure over the next 5 years in conjunction with imperatives of other priorities and fiscal consolidation. This year, I have provided 11,11,111 crore rupees for capital expenditure. This would be 3.4% of our GDP. Infrastructure investment by state governments. We will encourage states to provide support of similar scale for infrastructure, subject to their development priorities. A provision of 1.5 lakh crore rupees for long-term interest-free loans have been made this year also to support the states in their resource allocation. Private investment in infrastructure. Investment in infrastructure by private sector will be promoted through viability gap funding and enabling policies and regulations. A market-based financing framework will be brought out. Pradhan Mantri Gram Sadak Yojana, Phase 4 of the PMGSY will be launched to provide all-weather connectivity to 25,000 rural habitations, which have become eligible in view of their population increase. Irrigation and flood mitigation. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken. Assam grapples with floods every year by the Brahmaputra River and its tributaries originating outside India. We will provide assistance to Assam for flood management and related projects. Himachal Pradesh suffered extensive losses due to floods last year. Our government will provide assistance to the state for reconstruction and rehabilitation through multilateral development assistance. Uttarakhand too suffered losses due to cloudbursts and massive landslides. We will provide assistance to the state. Recently, Sikkim witnessed devastating flash floods and landslides that wreaked havoc across the state. Our government will provide assistance to the state. Tourism. Tourism has always been a part of our civilization. Our efforts in positioning India as a global tourist destination will also create jobs stimulate investments, and unlock economic opportunities for other sectors. In addition to the measures outlined in the interim budget, I propose the following measures. Vishnupad Temple at Gaya and Mahabodhi Temple at Bodh Gaya in Bihar are of immense spiritual significance. Comprehensive development of Vishnupad Temple corridor and Mahabodhi Temple corridor will be supported, modeled on the successful Kashi Vishwanath Temple corridor to transform them into world-class pilgrim and tourist destinations. Rajgir holds immense religious significance for Hindus, Buddhists and Jains. The 20th Tirthankara Muniswarata temple in the Jain temple complex is ancient. The Saptarishi or the 7 hot springs form a warm water Brahmkund that is sacred. A comprehensive development initiative for Rajgir will be undertaken. Our government will support the development of Nalanda as a tourist center, besides reviving Nalanda University to its glorious stature. Odisha's scenic beauty, temples, monuments, craftsmanship, wildlife sanctuaries, natural landscapes, and pristine beaches make it an ultimate tourism destination. Our government will provide assistance for their development to Odisha as well. Priority 8, innovation, research and development. We will operationalize the Anusandhan National Research Fund for basic research and prototype development. Further, we will set up a mechanism for spurring private sector-driven research and innovation at commercial scale with a financing pool of 1 lakh crore rupees in line with the announcement in the interim budget. Space economy. With our continued emphasis on expanding the space economy by 5 times in the next 10 years, a venture capital fund of 1,000 crore rupees will be set up. Priority 9, next generation reforms. Economic policy framework. We will formulate an economic policy framework to delineate the overarching approach to economic development and set the scope of the next generation of reforms for facilitating employment opportunities and sustaining high growth. Our government will initiate and incentivize reforms for 1. Improving productivity of factors of production, and 2. Facilitating markets and sectors to become more efficient. These reforms will cover all factors of production, namely land, labor, capital, and entrepreneurship, and technology as an enabler of improving total factor productivity and bridging inequality. Effective implementation of several of these reforms requires collaboration between the center and the states, and building consensus as development of the country lies in development of the states. For promoting competitive federalism and incentivizing states for faster implementation of reforms, I propose to earmark a significant part of the 50-year interest-free loan. Working with the states, we will initiate the following reforms. Land-related reforms and actions, both in the rural and urban areas, will cover land administration, will cover 1. Land administration, planning and management, and 2. Urban planning usage and building bylaws. These will be incentivized for completion within the next 3 years through appropriate fiscal support. Rural land-related actions. Rural land-related actions will include 1. Assignment of unique land parcel identification number, UL PIN, or Bhu Aadhaar for all lands. 2. Digitization of cadastral maps. 3. Survey of subdivisions, survey of map subdivisions as per current ownership. 4. Establishment of land registry. And 5. Linking to the farmers registry. These actions will also facilitate credit flow and other agricultural services. Urban land related actions. Land records in urban areas will be digitized with GIS mapping. An IT-based system for property record administration, updating, and tax administration will be established. These will also facilitate improving the financial position of urban local bodies. Labor-related reforms. Services to labor. Our government will facilitate the provision of a wide array of services to labor, including those for employment and skilling. A comprehensive integration of e-Shram portal with other portals will facilitate such one-stop solution. Open architecture databases for the rapidly changing labor market, skill requirements, and available job roles, and a mechanism to connect job aspirants with potential employers and skill providers will be covered in these services. Shram Suvidha and Samadhan portal. Shram Suvidha and Samadhan portal will be revamped to enhance ease of compliance for industry and trade. Capital and entrepreneurship related reforms. Financial sector vision and strategy. For meeting financing needs of the economy, our government will bring out a financial sector vision and strategy document to prepare the sector in terms of size, capacity, and skills. This will set the agenda for the next 5 years and guide the work of the government, regulators, financial institutions, and market participants. Taxonomy for climate finance. We will develop taxonomy for climate finance for enhancing the availability of capital for climate adaptation and mitigation. This will support achievement of the country's climate commitments and green transition. Variable capital company structure. We will seek the required legislative approval for providing an efficient and flexible mode for financing leasing of aircrafts and ships and pooled funds of private equity through a variable company structure. Foreign direct investments and overseas investment. The rules and regulations for foreign direct investment and overseas investments will be simplified to 1. Facilitate foreign direct investments, 2. Nudge prioritization, and 3. Promote opportunities for using Indian rupee as a currency for overseas investment. NPS Vatsalya. NPS Vatsalya, a plan for contribution by parents and guardians for minors, will be started. On attaining the age of majority, the plan can be converted seamlessly into a normal NPS account. Use of technology. We have successfully used technology for improving productivity and bridging inequality in our economy during the past 10 years. Public investment in digital infrastructure and innovations by the private sector have helped in improving access of all citizens, particularly the common people, to market resources, education, health, and services. We will step up adoption of technology towards digitalization of the economy. Ease of doing business. For enhancing ease of doing business, we are already working on the Jan Vishwas Bill 2.0. Further, states will be incentivized for implementation of the business reforms, action plans, and digitalization. Data and statistics for improving data governance, collection, processing and management of data and statistics, different sectoral databases, including those established under the Digital India mission, will be utilized with active use of technology tools. New pension scheme. The committee to review the NPS has made considerable progress in its work. I'm happy that the staff side of the National Council of the Joint Consultative Machinery for Central Government Employees has taken a constructive approach. A solution will be evolved which addresses the relevant issues while maintaining fiscal prudence to protect the common citizens. Budget estimates for 24-25. For the year 24-25, total receipts other than borrowings and the total expenditure are estimated at 32.07 lakh crore rupees and 48.21 lakh crore rupees respectively. The net tax receipts are estimated at 25.83 lakh crore rupees. The fiscal deficit is estimated at 4.9% of the GDP. The gross and the net market borrowings through dated securities during 24-25 are estimated at 14.01 lakh crore rupees and 11.63 lakh crore rupees respectively. Both will be less than that in 23-24. The fiscal consolidation path announced by me in 2021 has served our economy very well, and we aim to reach the deficit below 4.5% next year. The government is committed to staying the course. From 2026-27 onwards, our endeavor will be to keep the fiscal deficit each year such that the central government's debt will be on a declining path as percentage of GDP. I will now move to Part B. Indirect taxes. Sir, I start with GST. It has decreased tax incidence on the common man, reduced compliance burden and logistics cost for trade and industry, and enhanced revenues of the central and the state governments. It is a success of vast proportions. To multiply the benefits of GST, we will strive to further simplify and rationalize the tax structure and endeavor to expand it to the remaining sectors. My proposals for customs duties intend to support domestic manufacturing, deepen local value addition, promote export competitiveness, and simplify taxation while keeping the interest of the general public and consumers surmount. In Budget 22-23, we reduced the number of customs duty rates. I propose to undertake a comprehensive review of the rate structure over the next 6 months to rationalize and simplify it for ease of trade, removal of duty inversion, and reduction of disputes. I shall now take up sector-specific customs duty proposals. Medicine and medical equipments. To provide relief to cancer patients, I propose to fully exempt 3 more medicines from customs duties. I also propose changes in the BCD on X-ray tubes and flat panel detectors for use in medical X-ray machines under the phased manufacturing program so as to synchronize them with the domestic capacity addition. Mobile phone and related parts. With a 3-fold increase in domestic production, An almost 100-fold jump in exports of mobile phones over the last 6 years, the Indian mobile industry has matured. In the interest of consumers, I now propose to reduce the BCD on mobile phone, mobile PCBA, and mobile charger to 15%. Critical minerals. Minerals such as lithium, copper, cobalt, and rare earth elements are critical for sectors like nuclear energy, renewable energy, space, defense, telecommunications, and high-tech electronics. I propose to fully exempt customs duties on 25 critical minerals and reduce BCD on 2 of them. This will provide a major fillip to the processing and refining of such minerals and help secure their availability for these strategic and important sectors. Solar energy. Energy transition is critical in the fight against climate change. To support energy transition, I propose to expand the list of exempted capital goods for use in the manufacture of solar cells and panels in the country. Further, in view of sufficient domestic manufacturing capacity of solar gas, glass, and tinned copper interconnect, I propose not to extend the exemption of custom duties provided to them. Marine products. India's seafood exports in the last financial year touched an all-time high of more than 60,000 crores of rupees. Frozen shrimp accounted for about 2/3 of these exports. To enhance their competitiveness, I propose to reduce BCD on certain broodstock, polychaete worms, shrimp, and fish feed to 5%. I also propose to exempt customs duty on various inputs for manufacture of shrimp and fish feed. Leather and textile. Similarly, to enhance the competitiveness of exports in the leather and textile sectors, I propose to reduce BCD on real down-filling material from duck or goose. I am also making additions to the list of exempted goods for manufacture of leather and textile garments, footwear, and other leather articles for export. To rectify inversion in duty, I propose to reduce BCD subject to conditions on methylene diphenyl diisocyanate MDI for manufacture of spandex yarn from 7.5 to 5%. Furthermore, the export duty structure on raw hides, skin, and leather is proposed to be simplified and rationalized. Precious metals. To enhance domestic value addition in gold and precious metal jewelry in the country, I propose to reduce customs duties on gold and silver to 6% and that of platinum to 6.4%. Other metals, steel and copper are important raw materials. To reduce their cost of production, I propose to remove the BCD on ferronickel and blister copper. I am also continuing with nil BCD on ferrous scrap and nickel cathode and concessional BCD of 2.5% on copper scrap. Electronics. To increase value addition in the domestic electronics industry, I propose to remove the BCD subject to conditions on oxygen-free copper for manufacture of resistors. I also propose to exempt certain parts for manufacture of connectors. Chemicals and petrochemicals. To support existing and new capacities in the pipeline, I propose to increase the BCD on ammonium nitrate from 7.5% to 10%. Plastics. PVC flex banners are non-biodegradable and hazardous for environment and health. To curb their imports, I propose to raise the BCD on them from 10 to 25%. Telecommunication equipment. To incentivize domestic manufacturing, I propose to increase the BCD from 10 to 15% on PCBA of specified telecom equipment. Trade facilitation. To promote domestic aviation and boat and ship MRO, I propose to extend the period for export of goods imported for repairs from 6 months to 1 year. I'll read that again. To promote domestic aviation and boat and ship maintenance, repair and operations, I propose to extend the period for export of goods imported for repairs from 6 months to 1 year. In the same vein, I propose to extend the time limit for re-import of goods for repairs under warranty from 3 to 5 years. I now move to direct taxes. We will continue our efforts to simplify taxes, improve taxpayer services, provide tax certainty, and reduce litigation while enhancing revenues for funding the development and welfare schemes of the government. It has been our endeavor to simplify taxation. We have taken a number of measures in the last few years, including introduction of simplified tax regimes without exemptions and deductions for corporate tax and for personal income tax. This has been appreciated by taxpayers. 58% of corporate tax came from the simplified tax regime in the financial year 22-23. Similarly, as per data available till now, for the last fiscal, more than 2/3 have availed the new personal income tax regime. Comprehensive review of the Income Tax Act. I am now announcing a comprehensive review of the Income Tax Act 1961. The purpose is to make the Act concise, lucid, easy to read and understand. This will reduce disputes and litigation, thereby providing tax certainty to the taxpayers. I will also bring down the demand embroiled in litigation. It is proposed to be completed in 6 months. A beginning is being made in the finance bill by simplifying the tax regime for charities, tedious rate structures, provisions of reassessment and such provisions, and capital gains taxation. Simplification for charities and tedious. Two tax exemption regimes. The two tax exemption regimes for charities are proposed to be merged into one. The 5% tedious rate on many payments is being merged into the 2% tedious rate, and the 20% tedious rate on repurchase of units by mutual funds or UTI is being withdrawn. Tedious rate on e-commerce operators is proposed to be reduced from 1 to 0.1%. Moreover, credit of TCS is proposed to be given in the TDS to be deducted on salary. Further, I propose to decriminalize delay for payment of TDS up to the due date of filing statement for the same. I also plan to provide a standard operating procedure for tedious defaults and simplify and rationalize the compounding guidelines for such defaults. Simplification of reassessment. I propose to thoroughly simplify the provisions for reopening and reassessment. An assessment hereinafter can be reopened beyond 3 years from the end of the assessment year only if the escaped income is 50 lakh rupees or more, up to a maximum period of 5 years from the end of the assessment year. Even in such cases, a time limit of 6 years before the year of the search, as against the existing time limit of 10 years, is being proposed. This will reduce tax uncertainty and disputes. Simplification and rationalization of capital gains. Capital gains taxation is also proposed to be hugely simplified. Short-term gains on certain financial assets shall henceforth attract a tax rate of 20%, while that on all other financial assets and all non-financial assets shall continue to attract the applicable tax rate. Long-term gains on all financial and non-financial assets, on the other hand, will attract a tax rate of 12.5%. For the benefit of the lower and the middle income classes, I propose to increase the limit of exemption of capital gains on certain financial assets to 1.25 lakh rupees per year. Listed financial assets held for more than a year will be classified as long-term, while unlisted financial assets and all non-financial assets will have to be held for at least 2 years to be classified as long-term. Unlisted bonds and debentures, debt mutual funds, and market-linked debentures, irrespective of holding period, however, will attract tax on capital gains at applicable rates. Taxpayer services. All the major taxpayer services under GST and most services under customs and income tax have been digitalized. All remaining services of customs and income tax, including rectification and order giving effect to appellate orders, shall be digitalized and made paperless over the next 2 years. Litigation and appeals. While our concerted efforts to reduce pendency of appeals at various appellate fora are beginning to show good results, it will continue to engage our highest attention. To dispose of the backlog of first appeals, I plan to deploy more officers to hear and decide such appeals, especially those with large tax effect. For resolution of certain income tax disputes pending in appeal, I am also proposing Vivad Se Vishwas Scheme 2024. Further, I propose to increase monetary limits for filing appeals related to direct taxes, excise, and service tax in the tax tribunals, high courts, and Supreme Court to 60 lakh rupees, 2 crore rupees, and 5 crore respectively. With a view to reduce litigation and provide certainty in international taxation, we will expand the scope of safe harbor rules and make them more attractive. We will also streamline the transfer pricing assessment procedure. Employment and investment. I have a few proposals to promote investment and foster employment. First of all, to bolster the Indian startup ecosystem, boost the entrepreneurial spirit, and to support innovation, I propose to abolish the so-called angel tax for all classes of investors. Second, there is tremendous potential for cruise tourism in India. To give a fillip to this employment-generating industry, I am proposing a simpler tax regime for foreign shipping companies operating domestic cruises in the country. Third, India is a world leader in the diamond cutting and polishing industry, which employs a large number of skilled workers. To further promote the development of this sector, we would provide for safe harbor rates for foreign mining companies selling raw diamonds in the country. Fourth, to attract foreign capital for our development needs, I propose to reduce the corporate tax rate on foreign companies from 40 to 35%. Deepening the tax base. I have a couple of proposals for deepening the tax base. First, security transaction tax on futures and options of securities is proposed to be increased to 0.02% and 0.1% respectively. Second, for reasons of equity, I propose to tax income received on buyback of shares in the hands of recipients. Other proposals: to improve social security benefits, deduction of expenditure by employers towards NPS is proposed to be increased from 10 to 14% of the employee's salary. Similarly, deduction of this expenditure up to 14% of salary from the income of employees in private sector, public sector banks and undertakings opting for the new tax regime is proposed to be provided. Indian professionals working in multinationals get ESOPs and invest in social security schemes and other movable assets abroad. Non-reporting of such small foreign assets has penal consequences under the Black Money Act. Such non-reporting of movable assets up to 20 lakh rupees is proposed to be depenalized. Other major proposals in the finance bill relate to withdrawal of equalization levy of 2%, expansion of tax benefits to certain funds and entities in IFSCs, and immunity from penalty and prosecution to Benamidar on full and true disclosure so as to improve conviction under the Benami Transaction Prohibition Act 1988. Personal income tax. Coming to personal income tax rates, I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows: 0 to 3 lakh rupees, nil; 3 to 7 lakh rupees, 5%; 7 to 10 lakh rupees, 10%; 10 to 12 lakh rupees, 15%; 12 to 15 lakh rupees, 20%; and above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes, will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually. Mr. Speaker, sir, with this, I commend the budget to this august House. Jai Hind.
All right, lots of changes. That is how you would define this budget. On the positive side, the fiscal glide path, well, strengthened 4.9% for FY25. You're looking at 4.5% for FY26 for sure. That aside of that, but the capital gains tax deserves the mainstay. Let's first get in our guests to try and understand what they make of it. We'll come in with our take in just moments from now. But Ravi, start off with you. You heard the speech with us. What stood out? Capital gains or something else?
No. From a immediate knee-jerk reaction point of view, clearly, capital gains is going to pinch. we are sitting on a lot of gains and now the tax has increased. So there is no rationalization of the time period as I understand. It's only the increase in from 15% to 20% of STCG and 10 to 12.5%. In the longer term, we'll digest this and move on. But I think for the time, the context of the stage at which we were in the market, I think this is going to be perceived negatively for the time period.
Right, and the market has tanked. It's down about 1%. So it was just about holding on until the news on capital gains came in. Manish Dangi as well joins in. You have a few takeaways. So you start with what stood out for you in this budget.
I think the bigger thing is on the capital gain tax, you touched it. And so therefore, what it means is that there will be a long period over next many years, a rationalization where both will merge. So I think the thing in the market and the consensus that, it should be 0 or 10, and 10 was also difficult to digest. But given that you are starting to tweak, it basically means an open area.
So it only means it's going to be tweaked upward,
I think so.
And this could be a fear.
It's a matter of time, and this is a global consensus that, capital gain tax, what Europe has done, everything will converge to one rate, maybe 20%, maybe 25%, whatever that is. So in a sense, if you have a very long term, and I make this point over and over again, that if you're a very long term investor, you be prepared that you will end up, if you're actually booking profit much later, you will end up paying much higher taxes eventually.
I think the sound way of looking at it is if you're making money, you pay your fair share of taxes, right? That's probably what the government is thinking.
So Manish, just to come to you specifically on the STT, which the finance minister mentioned on finance, futures and options, because we've been talking consistently before the budget what will come on F&O. How do you see it? Do you see it as a dampener? Do you see it as a small slap in the wrist, not as bad as what was expected? Where on that scale?
It isn't as bad, right? We sort of, at least I thought that this income would be speculative, and therefore the tax rate applicable would go up quite substantially. It turns out to be more benign than what at least I thought.
Ravi, just your take on that?
Yeah, I mean, if they had classified everything as a speculation and straight away the highest slab of income tax would apply, that would have been a big dampener. I think that has not happened. So from that perspective, I think incrementally it might impact the volume a little bit because it does change the economics of the trader and the kind of strategies that they deploy. They deal with very micro moves. So for them, it does make a difference. But from the overall market and system point of view, I don't think it changes in a big way.
Okay, we're getting Pranav Sehta in moments from now as well. But Manish, a quick word actually to both of you. I mean, the tax thing has enveloped the mind space, but 4.9%, the glide path. This was not expected. I mean, people thought 5.1 ka 5 hoga.
5, I thought. Yeah.
So, it's come to 4.9.
So the big saving of 50 basis point right now is being deployed. 50 basis point because of the RBI bounty and better run rate of taxes is 50 basis point of GDP. That's being deployed in actually 20 basis point of fiscal consolidation. So in some sense, it remains a bond budget that we argued last budget also. Surprisingly, to me also surprising that the capex number has not risen. So I thought
surprise. I mean, there are 8 months left. How can the economy absorb a higher number?
No, if you had a 1.5 lakh crore to spend, okay, especially when the nominal GDP is now starting to slow, you sort of would keep the momentum. So that capex I thought 1.5 lakh crore of RBI plus tax bounty would get deployed in some form in capex. That's not happened.
Okay.
So that's surprising to me. A lot of it, we will discuss jobs and MSME schemes and employment schemes, and we'll discuss, but there are a lot of positives.
Just before we get to Mr. Sehta though, Ravi, the same question to you really, the 4.9% number.
Yeah, no, clearly I think government has chosen the path to stay on the fiscal side rather than give in to the consumption side or the welfare side. Yeah, I think they have surprised us positively on that side. I think we spoke about it 7 days back also. Yeah, I was not expecting a 4.9% number. There was the way the political compulsions and also the way the read from the election result was that should spend some more on the bottom of the pyramid, but I think the government has decided to strictly stay on the path.
Yeah. So the voter is not a constituency. Again, if you see the budget, even the coalition dharma, in some sense, a lot of Andhra and Bihar trade.
Yes.
Trade meaning it.
Yes, we get what you mean.
A lot of Andhra and Bihar allocations.
Is still through multilateral funding and long gestation one. So in some sense, it's not a direct door.
But there's 15,000 crores for Andhra Pradesh this year.
Very small.
It's not as bad. So
just a quick check on the bond market, because I think we're talking about the glide path and that 4.9% number. The rupee should have seen some reaction, and so would the, because I think Manish calls this a bond budget in that sense, right? But a big sort of uptick is what you would expect between now and the next couple of months. Remember, after India's inclusion in the JPM, the hope is that with very good fiscal discipline, a re-rating could be around the corner. And if that does happen, all stakeholders will stand to benefit. And I think that's what's a key takeaway, that fiscal discipline being very, very significant. We also got Pranav Sethia joining in. Pranav, you want to come in on this? Are you impressed by the fact that they've reduced it from 5.1 to 4.9 and for next year, sub 4.5?
Absolutely. I think that's a great move. They have tasted success over the years because of the great macro management, I would feel, and that continuity is very evident. They have not compromised on the fiscal deficit at all. In fact, they've improved significantly. So I would think full credit to the government for this through the period, particularly also in this budget. Despite all the expectations of welfare measures being higher and so on. So I think it's a great move. Yes, of course, from the direct taxes side also there are lots of measures. Maybe we can come to it.
So let's unpack it one by one. Let's start with the capital markets focused tax changes. So long-term capital gains tax, short-term capital gains tax, some categories for 2 years, some for 1 year, and STT. So let's unpack that portion first.
Right. So I would feel that the short-term capital gains tax increase from 15 to 20% was something that I wouldn't say was completely unexpected, given that probably they wanted to temper the short-term trading a bit, and that might have been the provocation as well as raising some revenue. Also some amount of equity in taxation. If a salary taxpayer, a normal business income, small business earner pays tax at 20-30%, short-term capital gains tax, probably they wanted to show some equity as well. So that's something that was pretty expected in some sense by me at least. The long-term capital gains tax was a little of a surprise, yes, indeed. And I don't know how the market will take it, because I don't think the market expected it as well.
Not too well so far.
Yeah, not 12.5. But I think that looks a little early in stage in terms of implementation. I would have felt that given that there is an STT in place, given that the collections from STT are so robust, given that they want to give a fillip to the domestic capital being invested in risk-bearing financial assets, which has been going so well, that's one move that I thought was a little earlier than what I would have expected in the normal course. But certainly I think overall the steps have been good. Another thing which, of course, one has to see the fine print, but it seems that debentures, etc., also might probably go into the normal tax rate bracket instead of the 20%. So last year we saw the indexation benefit go away on mutual funds and so on. And now if the concessional tax rate also on that capital gain goes, which one has to see the fine print, if it goes into the regular slab rate, that might be another big move.
But that could be good for deposits?
That could be good for fixed deposits, and probably and that has been the provocation.
Yeah, that is the purpose.
That seems to be the provocation to bring.
I don't know, we all can agree with. Actually, just one thing. Also, MLDs is such a small.
No, that's dead already.
That's dead,
MLD,
right? Yeah.
You know, we killed.
A couple of years ago.
Yeah, 2 years ago. We killed direct access to bond markets now. That extra incentive that you had versus mutual funds. So if you go to mutual fund, you get taxed as normal in fixed income. But in the bonds, if you were listed and you bought, there was a capital gain of a listed instrument, concessional rate. That's gone. So in some sense, it's fair, right? I mean, Ravi is directly investing and I am investing through mutual fund. Why should he benefit I mean, why should I not be same as him? So in some sense, it's a fair thing to do.
Yeah.
And it's for the super smart dudes in this country, and treasury guys, and
the big quantum
the
of
big
money.
HNI.
Yeah.
This government, let's
level
it all. Sabka saath, sabka vikas.
Okay. Yes. Okay, Mr. Sethia, anything else on the tax front? Because there's a lot of other stuff.
I would feel again abolishing angel tax is a big positive, especially for entrepreneurs, small businesses, startups, the whole ecosystem. And including for foreign investors who always wanted to enter the private equity and VC funds, so to say. So I think that's a great move indeed. The dropping of the foreign companies' corporate tax rate from 40 to 35 was again something that was very, very welcome. I think it was expected as well, because when the corporate tax rate on Indian companies came down, they had not brought the foreign company corporate tax rate down. So I think that again is a good leveling off in terms of both foreign companies as well as Indian companies. Also, some of the trust building measures, the TDS rate rationalization, etc., seems to be a good move, very good move indeed. Again, focus from a personal income tax standpoint on the new tax regime, increased standard deduction, and some amount of new tax regime tax reduction.
Do you think it brings it on par? Because the problem was always to move people from old tax to new tax. The new guys are happy to come into new tax, but if you're already used to all those Section 80C benefits, it's difficult to wean them off. Does this bring more parity on the face of it?
I would feel, again, those who probably get the allowances of HRA, etc., are going to continue to want to stay in the old regime. But most others, I think, are slowly moving into the new regime. There are only big allowances, which are more in the nature of house rent allowance, etc., which will probably stay out.
By the way, we've got a bit of a bounce on the market, so just want to mark that the Nifty, after coming off 1.8% or 1.9%, let's get the intraday on the screen, has just moved back a little bit, if I'm not wrong, about 100 odd points, right? So is the market digesting? Was this a short blip? I think time will tell. Let's wait for it. But you know, that's the other thing. A lot of conversation, Ravi, was around, do we tinker with the tax rate at the current point of time when the government wants to do divestments and the party is going on fine? Why tinker with it? Is this 20% and 12.5 gonna have longer term implication? Could it hit divestments? Not that divestments were a big part of this government's fanfare any which ways.
No, so it is disappointing because, as he mentioned, there was no real compulsion or any need to do it at this juncture in the cycle. There is, a corporate culture that is getting developed. Investing culture that is getting developed. There is a economic upcycle that is in place, and corporates are getting incentivized to invest. There is I think we should have probably held off couple of years more, and I think probably the step one should have been to rationalization of period. But anyway, that is all hypothetical, doesn't matter. The steps have been taken
now,
and I wouldn't have expected it.
It's not the act still. It's a bill.
Yes, absolutely.
Not that I expected.
It's not as if finance ministers have not rolled back, things which are not popular.
I don't see a capital market lobbyist strong enough for us to get this.
I agree. This is not one cohort which really moves the needle. But
the review of the rate structure on customs. I think we have also told we're getting Mr. Atulal of Dixon, because there is a move that has happened there, wherein the mobile industry, there's a reduction of the BCD on mobile phones and chargers. I wonder if Dixon has corrected a bit. We'll get that in moments from now. But Manish, the review of the rate structure on customs, reversal of duty inversion, a lot of things, and the measures towards job creation, etc. Is there a rural consumption focus, you think?
It's a job focus, I would say, and instead of just rural. There isn't much for rural folks at margin in terms of absolute allocation. You can talk of many schemes.
Populism, you didn't think it was populist?
No, it's not populist at all.
At all, right.
Yeah. On jobs, many things listed. Lastly, it's mostly about, can we get formal jobs? So the EPFO-linked things, the internship-linked things. For the MSMEs, you had announcement that you could borrow and a credit guarantee scheme up to 100 crore rupees for any guy who's borrowing. So these are substantial. Angel tax, I guess, is the biggest deal for people like who invest in startups or are starting up. This could be messy. So a lot of these things are positive for general small, mid-sized new firm creation. And FDI linked, basically, if you bring down the taxes for the Firangi firms, foreign firms, that's also a positive news. So it is not populist. It will bear fruit in only few years, so to say. There's nothing now in let's do something today. Even for middle class, the total amount that someone calculated in my team is about $1,400-1,500. saving,
On the new tax regime,
have few
you're
5
saying?
stars and that's about it.
No, so savings on what extent? From new tax regime?
Yes.
Okay.
Yeah.
So okay.
Every day 5 stars.
So she said that I think 17,000
max. Yes.
Is
so
the
on a
max
50
that a
lakh crore
person could
budget,
get.
the 17,000 is all that you transfer to the Twitterati middle class. It's a
Middle
very
class
small
is
amount.
not Twitterati. Twitterati is a different class.
No, your definition of middle class is very different from what I think of middle class. You think you are middle class, right?
Yeah, absolutely.
You are super rich in this country.
Right. We also have Atul Lal, Vice Chairman and MD of Dixon Tech, joining in. Hi, Atul. It's Amina. Thank you very much for talking to us right after this budget. First up, before we go into the BCD reduction on mobile and chargers, how are you reacting to this budget?
You see, I would like to really compliment Honorable Finance Minister. Please appreciate we are a highly labor-intensive manufacturing industry. And certain steps that have been taken to encourage and incentivize labor involvement, operators involvement, I think it's highly commendable. Particular emphasis on skilling, on internships are most welcome. And also a special focus on MSME industry, because that's the backbone. Please appreciate the electronics manufacturing industry. It's in a formative stage. It is growing extremely fast. It's hugely labor intensive. And for creating an ecosystem, the MSME support is required. So I strongly feel it's a very positive budget for our labor intensive industry. Yeah.
Lal, just very quickly, very specific to your industry, and I know we've got it's commendable. We've managed to pull off a good budget, not disturb too many things, still focused on Viksit Bharat, focus on employment. So lots of good things as well. But one thing that maybe Dixon could get impacted is the BCD reduction on mobile and chargers. What does this mean for a company like yourself? What's your reaction to this?
No. Please be rest assured that mobile manufacturing in India has reached a stage that all the mobiles being sold in India will be manufactured in India. That's the kind of depth the industry has. And a large portion of that is going to be exported. So this reduction of custom duty on the CBU imports of mobile from 20 to 15% or on chargers is not going to have any negative impact at all. In fact, it's welcome. I feel that it's not having any impact at all on the depth and the breadth of mobile manufacturing in the country. In fact, it's going to deepen.
Well, would you have expected more on the PLI schemes? That was something that was being talked about consistently, that PLI schemes have worked. Your company is, of course, a shining example of how well they work, that there would have been more push to extend manufacturing. Do you think that that is something that you would have hoped to see?
So we in the industry, through our associations, have been working very closely with the government for rolling out an incentive package for the electronic component industry, which is beyond semiconductors. And the government response on that has been extremely positive because that's what helps in enhancing the value addition. So I think it's going to happen because the response is very welcoming. And I think it's going to happen besides the budget. Yeah, it's something different, but it's going to happen. That's a policy package we're expecting. In any case, we were not expecting that to be announced in the budget speech. So that's what we're working on because that's important imperative for creating a component ecosystem and deepening the electronics manufacturing ecosystem.
Atul, just very quickly, I know while we didn't get too much in the PLI scheme, one expectation I believe from your industry was critical components. Something to come out on that. There was a little bit of noise in the industry that we could hear a PLI scheme on critical components. Are you disappointed? Is this a game changer of any sort? Okay, I think we've lost Mr. Lal, but we'll try and come back to him in a minute. Manish, why don't you take that? Not much on the PLI scheme. Are you surprised? Because this was a big bet and it's worked really well.
No, it's not a big bang thing. PLI is in terms of amounts so far disbursed are very small.
It's only a couple of companies that have
very
stood
few
out.
firms. Yeah, very few firms. No, so these interventions which worked in, of course, Korea, Japan. In India, it's very difficult to make these outright favors to large firms. There is a lot of backlash. So I think all of these will be small little tweaks. I think the big picture still, the stuff on the, if you bring down taxes, if you new manufacturing 15% tax.
See, that's not happened. The sunset clause was something that there was an extent.
Those are the big things, if you stay for long enough, you'll eventually get local money getting pumped into not necessarily only markets, but
I think Pranav might want to come in on this because we spoke about this, right? The sunset clause extension, which didn't happen.
In fact, we represented in certain, for FICCI, for example, that we should extend it for 5 years and give that 15% benefit. But the government seemed very clear during discussions that they were just not for it. And therefore, they are not going to extend it, was very clear. So the expectation was just not there, so far as I'm concerned.
Yeah.
The merit of having done it is very evident. But they were very clear that they were not going to do it.
Well, there was a counter argument to that as well. But Bala is joining us now. Aditya Birla Sun Life, AMC. Bala, welcome to the conversation. And we spoke about so many things pre-budget. We have the announcements now. Let's start with your first take.
A pretty decent budget, clearly addressing the various needs of the country, whether it is employment, skill development, rural economy, giving a booster to the SME sectors, and access to the finance through the expanding the SIDBI into every parts of the country to ensure that money is now actually going closer to the people who would be in need of funds. And last, of course, is the income tax, the change that they brought in terms of slabs, which is, of course, putting a slabs, which is basically giving more money in the hands of people. At the same time, above 14 lakh rupees, now 30% plus surcharge, giving a lot of money in the hands of people, which again, essentially, more towards boosting the consumption. And capital gain tax change, of course, given the fact a lot of wealth has been created, a lot of money has been made, people are deeply in money the last few years, the 2.5% increase in capital gain tax may not be actually significantly denting the investors' sentiment, given the fact that you have to pay this only upon the selling, and second is it all depends upon if you hold it for 5 years, 2% per annum it comes to, which is not significantly higher amount for somebody to get worried about it. Clearly, I think the growth-oriented budget. And second is a futuristic it's not futuristic, it's an action-oriented budget with a clear allocation that is being kept aside for every segment of the activities. And last, of course, least is despite all these allocations that's increasing towards the 2 states where most of the people are thinking there will be populist budget. And each of these spending allocation that has come to these 2 states, whether it's Andhra Pradesh or Bihar, it is linked to the industrial activities pick up and special focus on tourism, improving the pilgrimage activities in these centers. All of them actually is more with the intention to increase the contribution from these states further to the economic growth. Therefore, I call it as a growth-oriented budget. And what is also interesting is the fiscal deficit. They have maintained it and also given a roadmap that even next year they're showing the confidence of maintaining about 4.5%, which essentially means one, growth will continue to be the driver and tax collection improvement will continue to be the driver. At the same time, ensure the overall the numbers adds up to ensure that the fiscal deficit also is maintained. And last but not the least, given where we are current account deficit, the balance of payment surplus they are running, giving a specific focus on export sectors, whether it is a diamond or jewelries or even the textile sectors. That's something which has been one of the expectation from people that the export sector should give some kind of booster through these with the series of basic custom duty changes that they have brought in. I think clearly they have brought in some kind of focus on export sectors indirectly through various changes that they brought in on the custom duty. That's why I feel it as a good budget and overall perspectives. Probably I would say 9 out of 10 in overall ranking.
Got it. Thanks, Bala, for that. And that's an important first take. Now, let's just drill it down to some specifics, because as you see the Nifty 50 gainers, there is FMCG, which has got this clear bent of an upside there. Some of the gold companies, Titan, etc., is doing well. Gold finances are not doing well. Staffing companies are doing well. Ravi, individually, a lot of sectoral movers. Anything that is sustainable and something that stands out for you?
No, clearly, a lot of emphasis on creating formal jobs, and that is a direct beneficiary over there seems to be the staffing companies. There will be second order impacts of this also, of all this money being given to the interns, to the first time jobs, employees, and the lot of benefit even to the employer in terms of in the manufacturing sector. So that there will be a second order benefit of that on the consumption sector, but it's too difficult to say right now which sector. It's just that the job growth as well as the wage growth have been two problem areas, and I think government has clearly identified that and has laid an extra emphasis on reviving those.
So does this budget bring about a corrective move? You had mentioned that you don't know when what will lead to the correction, whether it's the budget or not. Now you heard the budget speech. Does the budget bring the correction?
Clearly, it seems so. I think correction probably started a couple of days back, and I think now it is getting elongated. And I think there will be a churn in the kind of companies that do well. Capex incrementally is not a needle mover anymore. Not to say that the focus on Capex is reduced or anything, but the stocks were kind of factoring in 3-4 years out. So the entire savings and the extra benefit from RBI has gone towards actually fiscal consolidation rather than towards giving extra impetus to the Capex or towards welfare. So that I think is, you're taking away from, we are all happy about the fiscal discipline, but the suffering is on the Capex front for sure.
That money had to go somewhere.
Yeah.
And one of the places you were talking about incentive to employers, I thought this was very interesting because the government will give 3,000 rupees towards all new time employees. They'll pay to the employers towards their PF contribution. This is up to, for those, all additional employment within salary of 1 lakh rupees per month. And they will give this EPF for contribution for 3 years. So while we get the details from the budget allocation, and we're wondering where all that RBI bonanza went, perhaps these are some of the heads that we have to look at. The push for employment is absolutely huge. Bala, just wanted to get your take on the kind of push we have seen for employment. And, you know, for budget after budget, we've been talking about what about the jobs? What are we doing about the jobs? Do you think that we have seen, at least for once, some very clear-cut allocation and push towards employment?
It's a big move in my view, given the fact that EPFO does the two things. One, it brings in the people who get employed. Once they get registered in the EPFO, they come in the formal sectors. And second, government incentivizing by way of the EPFO contributions up to 3,000 rupees, even for the 4 months up to certain period, especially for the new one, is also something will create an employment. In fact, I must mention that the way the gift city started originally in Gujarat, one of the big incentives that they gave, about 12.5% of the employer contribution, was given by the Gujarat state government. And that's one of the reasons most of the companies started setting up their own entities in gift city, like KPI, like knowledge processing centers and so on and so forth. So definitely I think it will bring in the unorganized, the employment that happens in the unorganized segment will come to the organized segment that will create employment. Second big takeaway which I saw almost about giving 1 crore students intern. Often I see people struggle to get intern in major companies. In fact, one of the top 500 companies have to employ close to about 1 crore people by way of providing intern, for which they can use some bit of funding from CSR, which in my view is a great move. And given the fact that a lot of people are actually now getting out of the college or now in the college, they can get access to the corporate way of functioning for them to become employable for the future. This is, in my view, another big move that has been initiated. In fact, this, in my view, is a great thought which will not only serve the students who are looking for, who have an aspiration to get fulfilled by getting an employment. This is also something I see as a big, innovative, out-of-the-box thinking that they've introduced.
Ravi, you might want to come in on this one, and we talked about it before we went into the budget, where PSUs had become the biggest trade on the street. Of course, after the budget, these stocks are down 10% each. For the next 6 to 8 months, what's the trade? Is it defensive or is it PSUs?
I don't think defense. PSUs, first of all, I don't classify PSU as a sector. It's just government-owned companies which are either in banks or in defense or whichever other business.
Or fertilizers.
So from that perspective, I think the focus shifts back to companies that haven't done well so far, and from market was looking for a reason to correct, and I think budget has provided a reason to correct, and also market was looking for a reason to rotate out of certain sectors and into other sectors. So from that perspective, that particular trade, the reversion to mean trade ends, and probably we need to look at something that is more attractive from the longer 3-5 years perspective in a risk-reward manner.
Okay, and before we get in, Navneet Munot, Manish, final comments from you as well. You called it a bond budget. What else is something that we've not discussed that you want to bring to the table? I think there's a focus on jobs, MSMEs, etc., etc.
No,
is there anything else? I mean, the capex number was in which ways the same, but
no, nothing much.
So standard budget, par for the course, if you will.
Yeah, it's a good budget. Nothing populist. Everything is being paved for potentially better growth tomorrow.
Just one quick one, Manish. We've been all talking about an outstanding on a correction that could be around the corner because we look stretched. Do you feel like between now and a few months that correction is almost a given? Because the budget hasn't left us asking for more, to be honest, right?
Look at the reason why India is difficult to correct it in a substantial manner without global markets correcting is because there's an inertia, there's local money flowing in, and the reflex that Ravi would confirm of an investor is that has 5% correction and reallocation towards equity goes up. So you necessarily need a global headwind for you to sort of
so constructive as we stand at 24,200, this market still looks good to buy for an investor.
No, so that's very different.
No.
That's very different.
Stay
I'm saying you're asking kal correct hoga kya?
Nahi hoega.
I'm saying inertia hai that there is a lot of money backing it. So that's the tailwind.
There is fresh money. Agar money is on the sidelines.
But if you're asking him or me or anyone else, is market cheap?
Agree.
Is not. Are you likely to make decent returns over next 3 years at these valuations? Answer is no. Will markets correct tomorrow? We don't know.
So we stay in cash.
I like
that's a summary.
I like that. That's a great summary. So last take you want to take.
Last take with Mr. Sehta. Mr. Sehta, just your last take, but and before we get Navneet Munot in, the buyback tax, does it have any implications for companies or sectors which are doing large buybacks?
I would feel that so far as companies are concerned, if dividend income was the choice between buyback still remains an attractive proposition. That's what I would feel, subject to reading the fine print, because the buyback tax is still a capital gains tax lesser than the normal dividend tax rate. I think overall, I would feel from an economy standpoint, from a stability, continuity, certainty standpoint, this is a very good budget. Yes, from a market standpoint, the capital gains tax changes might be a little bit of a dampener, but they've addressed the weaker sectors of the economy. Like agricultural growth was very weak. I think there's a lot on the agri sector. Job creation was very important. From production-linked incentives, we are now talking of employment-linked incentives. So I think that should help as well. So from an economy standpoint, I think the stability, continuity, addressing the weak spots and continuing the growth on the rest, I think is overall good for the economy, is the way I look. And the fiscal discipline is a big macro point.
Now I'm asking him that this rationalization on term for capital gain, she said that all financial instruments will go to 1 year. So does it mean that even debt actually goes to 1 year, or it still remains? Debt is actually part of, anyway it's an income, so it's capital gain.
So the way I think she's put it, and we look at the fine print, but listed financial assets is 1 year. I think others, she said, is 2 years.
She said unlisted financial assets, so I have that line, will be held for 2 years.
Correct. Yeah. So listed financial assets, whether it is debentures, bonds, I think that's how it is 1 year for long term, and others is 2 years.
But listed bonds securities, long term doesn't apply anymore.
Correct.
So therefore it's only equity.
So she said that way, the listed financial assets. So I assume it will be mutual funds which are in listed equity as well as listed shares. I would presume would be 1 year, and all other financial assets and other assets is 2 years. So she's trying to simplify the capital gains tax rate.
Okay. We'll have to wait and see what the impact is. But thank you so much, Pranav Sehta, Manish Dangi, Ravi Dharamshi with us. A Bala, great to have all of you for your first take. That was our think tank. We'll of course hear from Manish Sabharwal, who's part of our think tank. He's actually, we're told, in a meeting with government functionaries and was part of really also recommending a lot of things. Maybe we've seen some of them, and he has been talking about them. But Navneet Munot with us now, MD and CEO of HDFC AMC. Navneet, great to have you on Budget Day on NDTV Profit. Let's start with getting your take on what has been done with capital gains tax and how you are seeing it. The first reaction from the market is clearly negative. A bit of recovery right now. Do you see it as a big hindrance?
I think we have seen these changes many times over the last 30 years, and what the market has been expecting is some bit of stability on this front. I hope that we get stability over the next several years, and this is what is final. Our demand from mutual fund industry has been to also look at the taxation on the debt funds because it has multiple objectives, including the development of the corporate bond market, which is very critical to achieve our ambition of becoming a developed country and really boost investments. We have seen a good SIP book building, the retail resilience, providing stability to the market through the equity flows, but we need to encourage debt flows also. But I'm sure you have experts who will tell you a lot more about the nuances within the taxation change structure. But what I liked about when she said that we are going to have a very simplified structure and a comprehensive review of the Income Tax Act, and I hope that that makes life better for all the taxpayers, enhance the tax base, and it's good for everyone.
We also have with us Hiren Vaid, Director and CIO of Alchemy Capital Management, joining in. Hiren, what are your thoughts after this budget? Are you disappointed with what's happened on capital gains, or are you impressed that we've pulled off that fiscal consolidation number better than what the street was expecting? All in all, good budget, bad budget?
No, I think on the whole, the budget is good. Obviously, for market participants, the increase in capital gains tax is a sentiment dampener. Yes, I mean, over a medium to long term, these things get evened out. If you go back and look at when the 10% long-term capital gains was introduced, obviously there was an impact for a short period of time, but then everybody adjusted to it, right? Well, I mean, our sense was that there was no overarching need to raise resources and therefore tinkering with capital gains tax. But I think if I were to read between the lines, my guess is that given that capital markets were competing fiercely with bank deposits, and the worry that the regulators and the government had was that will this skew savings substantially in favor of capital markets versus other instruments. I think this is probably to kind of calm down and cool down the markets a little bit because there was a kind of a runaway rally in the markets. In my view, longer run, it really doesn't matter. But in the very short term, it is definitely a sentiment dampener.
Hiren, just want to understand to what extent it's a sentiment dampener. I mean, the tweaking on STT for futures and options, perhaps not as bad as what was expected?
I don't think that the increase in STT on futures and options is a dampener because frankly speaking, that was expected, right? I mean, and I think that, something was supposed to happen there, and I think it has happened. I think the dampener is really in terms of tinkering of the long-term capital gains tax to 12.5% and 20%, which was not expected. And therefore, to some extent, this could be a dampener in the short run. But as I mentioned, in the medium to long term, people adjust, market participants adjust and move on. And I think that's what will happen. Outside of that, and I think that what the government has done is that used the additional resources that they have to reduce the fiscal deficit, which on the whole should be positive for the economy because it reduces your cost of capital. And secondly, I think that they have given some support, to human capital, right, across the board. And also by reducing custom duties on a few products, and we'll have to see the fine print, the idea is to promote value addition and reduce the costs for local manufacturing. So I think broadly, having kept the capex number at what it is, they continue to do the heavy lifting. They've used the additional resources to help, give a little bit of a fillip to consumption, which is not bad. So you have a little more balanced growth. And I think, broadly speaking, also removing angel tax is a great step, because you need new entrepreneurs and they need risk capital. So I think, broadly speaking, the thrust of the budget is fairly good. I don't think the budget is bad. I think it's just that all capital markets players don't want taxes to go up. Let's be realistic, right? So if that goes up,
no one likes to be taxed. No one likes to be taxed, and capital market players have always been very clear that this is still nascent. You need to get more investors on. Don't tax. Have we reached that inflection point where the government feels comfortable in increasing taxes on capital gains, looking at the huge gains people have made as well? But hold that thought. I just want to get in Rajiv Anand, Deputy MD of Axis Bank, for his first take on the budget. Rajiv, welcome. Great to have you on NDTV Profit. And, just to understand from your perspective, the support given to MSMEs, the support given for educational loans, how do you see all of these measures in a broader view?
Firstly, I think notwithstanding the whole issue of increase in capital gains, which obviously the markets are a bit disappointed. But the way that I think about it is there's been all your viewers have made a truckload of money over the last few years. You're taking a little bit of that gains to support two things: the angel tax to create more entrepreneurship, and money in the middle class pockets. And I don't think we should be too bothered with that. Maybe in the short term, yes, but I think in the long term, I think that allocation of resources I'm quite comfortable with. There is focus on job creation, particularly through the MSME sector. And I think if you look at bank balance sheets, the size of the books of lending to MSMEs has only increased quite strongly over the last 3 to 5 years. And my own belief is that the MSME sector will be, over the next decade, what retail was over the last decade, for banks, in terms of the ability to lend to these entities because of the entrepreneurship that they bring, because of the infrastructure that is getting built, more transparency through GST, digital, etc., has made many of these entities a lot more bankable. And therefore, the fact that there is greater thrust on the MSME sector is quite heartwarming as a banker. I think educational loans, addresses the whole issue of employability. And I think, there was a headline in this morning's newspaper as well from the economic survey that many of the graduates are, in a sense, not employable. And I think that is a problem that corporate India, faces and has been a big issue over the last few years. And therefore, being able to fix the employability and therefore be able to fix employment as we go forward, to my mind, is a very positive step.
Rajiv, Mr. Anand, it's also Samina joining in. Were you pleasantly impressed with that fiscal deficit number coming in lower than 5% and the glide path where we're talking about a sub 4.5% next year? Do you feel like all this put together makes this budget a bond budget, and also could, in the near term now, in the foreseeable future, help India's ratings improve, which will benefit institutions like yourself for sure?
Oh, absolutely. I mean, I think the previous speaker spoke about the fact that this is going to push the cost of capital down, for corporate India. And I think that, notwithstanding, the markets grumbling today, is very positive from a long-term perspective. We've all spoken about the fact that large fiscal deficits have crowded out, private sector investments, etc. That to my mind is going to be less of an issue as we go forward. And all the good things that you spoke about, the fact that we have shown commitment to this fiscal glide path should impress foreign investors and certainly should impress rating agencies abroad as well, and that in turn will once again bring in both liquidity and lower cost of capital for this country.
Okay, so a lot of positives coming in. I don't know, on a broader view, Mr. Anand, I just want to get your sense of all the 5-6 policies to boost employment, and the focus is also on employers, incentivizing employers. There's an internship scheme which is applicable to the top 500 companies. So obviously your company as well. Government will pay 5,000 rupees. The intern will be paid 5,000 rupees a month, one time 6,000 rupees. From what I heard, the private sector has to give 10% of it. How do you look at some of these schemes? Do you think they're implementable first off?
So first and foremost, I think the budget is growth oriented. As a bank, the fact that the economy is being prepped to grow at an even faster pace, I think is good for business, both on the deposit side as well as on the asset side. So I think that's the sort of the overarching philosophy that I first want to put out. There's a lot of detail in the budget one will have to go through. But as we have seen in many of the budget proposals over the last many years, implementation is always a challenge, and how the government engages with the corporate sector to be able to implement many of these schemes is something that we will have to certainly wait and watch.
Well, I think the big story, though, I think, is what ENY has just picked up for us. Mr. Mayur Shah is joining us in the studios, but we'll come back to that in a minute. Navneet, what is your portfolio view now? The budget is behind us. It seems like it's largely in line with what we were expecting, even though the push on capex, agri-consumption is not as much as we'd have liked or the street would have liked. There's tinkering on capital gains as well. If you're a market participant sitting with cash on the sidelines, what should one do?
No, I think the broader direction of sustainable growth, inclusive growth, focus on innovation while keeping the fiscal prudence has continued. And all of this is good in the long run. Think about it. Over the last 5 years, the capex has almost tripled. The central government capex has almost tripled from 3.35 lakh crores to 11 lakh crores. And now incrementally, it looks like government want to spend more money on the rural economy, which is actually good because a large part of the population is there and we need to invest more. It looks like government want to focus a lot more on employment creation, which is very good. We need to reap the benefit of demographic dividend. So both for consumption as well as from an investment perspective in your portfolio, there would be opportunities.
Very interesting. Okay. Rajiv Anand, one final question, and then I have a question for Hiren Ved as well. And this is Neeraj here. I heard you mention about the overall good budget, focus on jobs, so on and so forth. Is there a tilt towards giving this much needed impetus to consumption? All job focus gives that tilt to consumption any which ways. There are for skill developments, etc. also money being put on the table. Do you get the sense that it is a budget in that sense tilting towards consumption as opposed to an overarching focus on capex, which continues as is?
It's a little difficult question, and I think that's the bet that the finance minister is making. But I just want to leave a thought on the table that we are seeing relatively weaker consumption in an environment where net household savings are actually relatively weak, meaning that despite the fact that households have levered themselves up quite strongly over the last 4 to 5 years, we're seeing a situation where we're seeing consumption relatively weak, and so therefore the savings that is going to come through either better jobs because they're skilled better, or because of some of the tax breaks, whether that will go to reduce leverage in households or whether it will go to consumption is something that we will have to certainly wait and watch. But I think the bet is that all this will ensure that we will see improvements in consumption.
Rajiv, we'll leave it at that. Thanks so much for taking the time out and really being with us today. Navneet, take a moment. Understand I have to let you go, so thank you for joining in as well and giving us your thoughts. Really appreciate your time today. Hiren Ved, the markets not as disappointed as you would think when a capital gains tax hike would happen, because most people are saying this is not the greatest of times to do it, so on and so forth. Is the market taking heart from the fact that this was anyways going to come? Good, it's done in the first term, but it's being accompanied by fiscal prudence, which will help maybe in ratings at some point of time in the future, and shows the bent of the government that they are not resorted to populism in a very large scale.
No, absolutely. I think the fact that they've signaled 4.9% fiscal deficit and 4.5% next year is very clear signal to the rating agencies that, you know, we as a country are very serious about fiscal consolidation, and that we are aiming for a much more sustainable advantage in terms of ratings upgrade and the resultant reduction in cost of capital that can happen. And that itself is a growth enabler, if you ask me, right? So rather than relying every year on the budget to stimulate growth, I think if we do things which are more structural in nature, which reduce our cost of capital in a durable manner, I think that's a better outcome than trying to use the balance sheet every year to spur growth, right? And as you rightly mentioned, that they've done this without actually taking the pedal off capex, because they've kept the capex same. And I want to bring another perspective. While, you know, there was an expectation that the capex number would increase slightly because the government has a little bit of resources, we must also mention that there is a lot of money which has been set aside for Bihar and Andhra Pradesh for infrastructure, right? So there is a new power plant coming up. There is the Polavaram irrigation project. So I think that money, whether it is for tourism, whether it is for power, whether it is for roads, whether it is for other infrastructure in these two states, also means that it is capex, right? So to that extent, I think that they've been able to bring up these slightly more struggling sectors and areas that needed focus, like job creation, skilling, without taking the pedal off capex. Right. And hoping that now the private sector will start to kick in, which actually has already happened, because if you heard the CEA say that private capex has already gone up 20%.
Yeah, it has. The top firms have, maybe the bottom ones haven't. But Hiren, you spoke about the renaissance of private capex way earlier. It's showing signs. Thank you so much for joining us on the budget day and giving us your thoughts as well. Really appreciate your time. Okay, you know, my colleague Charu Singh is speaking to Ashish Chauhan, the CEO of NSE. Let's dip in to hear that.
Incentives. Even smaller companies have been given incentives by saying they will get the first salary of the new employee over 3 tranches, and also some portion of the provident fund has to be paid, have to be paid by the government. So many incentives have been given to create jobs, create skills, and also include the women in the workforce. And those are the way we would be able to take advantage of our demographic dividend going forward.
So, sir, in all, you feel positively towards the budget?
I would give 10 out of 10 to the finance minister for just sticking to the basics of what is required. And that is, I think my friend Nilesh Shah had told me in the morning that it has to be like a Surya Kumar Yadav catch in the World Cup final. And the employment creation is that catch, right? And so for me, this is focusing on the right thing for the future of India.
Thank you so much for speaking to us, sir.
Okay, well, that's the view from NSE as well. But Samina, big changes afoot on the taxation front.
And good changes from the sound of it, right? So I think what we have, Mayur Shah from Ernst & Young as well, who's in the studios with us. But indexation benefit, we believe, on real estate, gold and other non-financial assets has been abolished. And there's a change in treatment of LTCG. Mayush, you picked this up a few minutes ago while we were all disappointed what was happening on LTCG from 10 to 12.5. But I believe on real estate, it's actually reduced. So this could be good news for real estate companies and gold companies.
That's right. So, you are right. In terms of tax rate, it has gone down from 20 to 12.5% for long-term capital gain arising on account of property sale or any other assets. However, at the same time, what they have done is they have withdrawn the indexation benefit which was available for any property which was transferred from today onwards. So till today, if any property has been transferred, it will definitely get indexation benefit, but thereafter it will not get any indexation benefit.
Can you simplify this for us?
Sure. So let us say that if a property is sold, say on 1st of July, you will get indexation benefit on sale of such property. But if you are selling anything after today, then that property will not have any indexation benefit available to them.
But property is an asset class which can't be sold just like that. So suffice to say that indexation benefits on real estate are gone.
It's gone. Absolutely right.
Now this could be a big negative impact, right?
It would have negative impact coupled with that tax rate has gone down from 20 to 12.5. So to that extent, I believe, it will set off the impact, but it is simplifying that now indexation and all that, we don't have to recalculate, calculate and things like that. It becomes very simple.
And I think the markets are seeming to like it because all your real estate stocks are reacting negatively to their news flow. In fact, from the likes of an Oberoi Realty to every other one on the street that we are seeing, Phoenix Mills, are all trading deeply in positive territory. They may be off their day's high point, but still looking good. What about gold? You want to take us through, because it's at non-financial assets. I'm guessing there's real estate and then there is gold as well.
That's right.
So you want to walk us through what has changed for gold taxation and what could it mean for the companies? So companies like a Titan, a Senco, is there a direct correlation?
Yeah. So what happens is that when any gold is bought as a capital asset, earlier, we used to take indexation benefit and we used to pay tax at the rate of 20%. Now what is happening that same like immovable property, if we are selling off any gold or any other item as a capital asset, in that case, now no indexation benefit is available. At the same time, the tax rate has gone down from 20 to 12.5. So to an extent,
does your math suggest that this 7.5% downtick in capital gains rate kind of equates with the indexation benefit that came in for very old properties or gold bought way earlier, 20 years ago? I'm guessing the indexation benefits would still be higher than the 7.5% reduction?
Let's look at it because we had to replace the fair market value as on 1st April 2001.
Right.
And indexation has started from that point onwards. So if we look at now 300% is what the kind of upside we could have availed.
Right.
Because of the inflation indexation number.
Exactly.
Now, when tax rate has gone down, it has not gone down to that effect.
Exactly.
Right. It's not gone down by 300%. So you will have some.
So net for something that was bought way earlier, it's still a negative. But for a lot of stuff which has been bought in the recent past, the reduction in tax rate nullifies the indexation benefits going away.
And this is being in line with the global practices.
Got it.
Because a non-resident investing in India, if they have to go through, though non-residents are not entitled to indexation benefit. But like Indian people who are investing abroad, they are taking indexation benefit as well as currency exchange benefit. Now, they will be able to have only one benefit and it will be unifying because then you can claim all the credits which has been paid in foreign country over here and vice versa. So it will kind of simplify from an international standpoint and it will be aligned with the global tax policies.
So this is also for financial assets outside the country. So
That's
if you're
right.
going out and buying funds or stock, say in the US, the same applies to these.
That's right.
And that's also a big piece, by the way, with the LRS being utilized by most people who live in this country. This could be one more factor to watch out for. Mayur, anything else that stood out? I think we've highlighted most of it, but you want to share with us your thoughts on what have you made of the changes as a whole on the personal taxation front?
See, the way I look at it, budget is, they are simplifying a lot of things, which was kind of creating a lot of complexity. Especially when you are going to digitalize everything. The challenge is that when you fill up the form, it is so lengthy and cumbersome. So this will kind of simplify so much that, nobody would need any consultant like me.
So you might be out of a job. You're not worried about that? Huh?
No, not at all.
Just one thing. One last question actually. And this holding periods being now just 2 holding periods, right? 12 months and 24 months. In
That's
that
right.
itself, is that a big
It's a big change.
It's a big change.
Big change. Because earlier, what asset will be qualifying as a long term, depending upon the type of assets, we used to decide what should be the long term and what should be the short term. Now it is very simple. 12 months and 24 months.
Got it.
Anything which is being held for 12 months is long term and rest is...
Got it. Okay. Mayur Shah, thank you so much for bringing us this piece of update as well. So for real estate, gold or non-financial asset investors, it's a big change on the taxation front as well. Must say, the markets have behaved fairly okay. 0.7, 0.8% lower. Look at that volatility though. And this was anticipated. Kush Bora is with us. Kush, what stands out in terms of the charts currently on specific pockets? Because FMCG, Titan, etc. are all really running amok.
Hi Neeraj. First up, let me just give you a quick update on something that we discussed in the morning, which is Bank Nifty. We were talking about a constant writing, in the call options, a constant pressure on the call options, and the 52,000 put option, that we discussed with a target of 700. Well, the high for that was 69.95. So I think that pressure is going to continue. If the Bank Nifty does indeed close below 51,800, then I think we could slide to 50,000 or maybe just a little under as well. So that's a bit of a caution on the Bank Nifty. Now, you're right, as far as the sectors go, the consumption sector is a standout right now. Titan's seen a massive short covering. So I think this could continue, but perhaps 3,500 is the level where it will halt because there's a 200-day moving average pressure as well, the call writing also. This is for Titan.
Okay, Kush, just before you move ahead, so viewers just want to mark, one is Titan, and look at that, 7.5% uptick in the session today. So big move for Titan, that is one. And then you look at FMCG names as well. I think those two have had a good move. ITC and some of the others have had a serious up move there. Kush, any thoughts here?
I think that a couple of stocks stand out for me. Godrej Consumer Products, Tata Consumer Products. I think some of these continue to do well. They were doing well before the budget as well. And this fillip is just going to boost the rally that we are seeing. So Godrej Consumer Product is perhaps something that I would buy, perhaps hold at current levels also.
Just a few Andhra stocks that are actually doing quite well. So pull up KCP, NCL, Deccan. All those stocks are actually looking good though. Anything to do with Andhra cement companies also having a pretty pleasant day. There you go. Aditya Vision, if you can pull that one up too. Let's see what Aditya Vision is getting up to. But KCPL is up 3%. Aditya Vision, which was trading negative at the start of the budget, had moved in. And there you go. 4% on KCP is what we have. So some of these counters are looking well placed in trade. Kush, another space that's actually looking good is real estate.
Sorry, Kush, apologies. We'll come to you in a moment from now. But Raamdeo Agrawal, chairman and co-founder of Motilal Oswal, is with us. So we need to go across to that conversation. Mr. Agrawal, great having you. Thanks so much for taking the time out. What is your initial assessment of the budget? The market seems to have taken a budget with capital gains tax being hiked rather well.
Yes. So, Neeraj, I would say that it was in any case expected to be a capital market heavy budget, and FM has delivered to that promise. So long term has been increased, short term has been increased, STT has been marginally increased. So clearly there is a I was a bit disappointed with the increase in the long term taxation. Not that it hurts me a lot, just that the asset class should be encouraged. When the SIP flow is coming, the whole nation is becoming very inclusive, and it's a fundamentally a long-term kind of a story. And there, I think they should not have changed the long-term capital gains tax from 10 to 12. Short-term, speculative, whatever you do. So otherwise, I think it's a consumption-oriented budget. They've given something to everybody. So I think that consumption boost will come to some extent. And the guys who make money in the market, see, market-facing economics has not changed fundamentally. They have not changed the market-facing economics. Only thing is, after you made money, you pay a little more taxes, which is kind of not an unfair kind of expectation.
Mr. Agrawal, very good afternoon, and great to have your take. In terms of just what the impact is of capital gains, do you think that this initial hit will sort of recede? The market will be able to digest it after a point? And are you disappointed that they've tinkered with long-term capital gains tax, or was that coming sooner or later?
Yeah, so that's what I was saying, that they have not changed materially the market-facing economics. When I come to the market, first I need to make money, then only I pay taxes. So my market-facing economics remains same. Basically, yes, there is some amount of change in the STT for I think high-frequency traders will pay a lot more than what they are paying. So I think they have hit the heart of excessive trading. I think that's where the trader may pay small amount, but actually government will get a lot of money out of that change in STT. That's my sense. Second, I think the capital gains tax, I think every level has been increased, long as well as short. So I think it's a long-term change, and people have to get reconciled to paying a little higher tax only if they make money in the market. The issue is whether you make money in the market or not, and that is not dependent on your taxation charges. It is dependent on what happens to the corporate earnings, and I think corporate earnings will definitely get a boost out of the consumption which will be there across the board thanks to what concessions they have given.
Are you seeing enough, Mr. Agrawal, to really boost the consumption story in a longer view? I mean, today we might be seeing a very momentary response in that space and in those stocks because of what they've done on employment or the new tax regime, etc. Do you think enough has been done to really move the needle? Because we've been talking about consumption at the bottom of the pyramid needing that boost.
See, this consumption or GDP growth consumption pickup, I mean, it's a multifaceted kind of thing. I mean, it's not the one thing, one taxation benefit here or there that's going to impact. I think a good monsoon across, RBI governor is already saying that the rural demand is picking up recently. So I think the good monsoon and now widespread benefit to the masses, whether it is standard deduction or lower tax rate or stipend and the job subsidy. So all those things will over a period of time should give boost to the consumption, and that will see the FMCG companies or consumer companies which are not doing well. I think that's where I think you'll get some earnings pickup over a period of time. So my sense is, on the whole, it will be accretive to the corporate earnings. But some kind of a little more taxation for the people who are making money in the stock market.
Mr. Agrawal, hi, it's also Samina joining in. So it's back to business then. Budget is behind us. Where from here? What should investors be doing? Does the budget give us an excuse to correct from here, take profits off the table? Or will the fact that it's a neat, clean, fiscally well-consolidated budget give the market the impetus for the next leg of the rally from here on?
Yeah. I don't think there is any impact to the market outlook. I mean, whatever was the outlook before the budget, I think it remains fully intact. Because right now market outlook is dependent on whatever the corporate earnings expected for next 1 year. I would think that corporate earnings will get little bit, almost 0.5% to 1% boost out of this budget. Second, I think the flow, which is going to determine the overall demand for the securities, that remains intact. So I would think that if market has to grow at the rate of 15% for next 5 years, that doesn't get impacted at all. So the true investors who are coming through SIP revolution, which is on, I think they must continue, and they must make sure that in the next month or so, if there is a correction in the market, then also they continue with their SIP. So I would think it's a perfectly healthy environment for long-term investing.
Mr. Agrawal, there was a lot of talk of how the money or the extra bonanza from the Reserve Bank would be used. It seems that, and because there's only 8 months left, there isn't as much capex that could be done. So it seems that the government has opted for higher fiscal consolidation. Is this a nudge to global rating agencies as well, that we are doing something which the other global nations aren't quite doing?
I would think so, but we have to listen to the interviews of the finance secretary and FM of the post-budget presentations, and what strategy went behind in terms of fiscal consolidation, and because a lot is happening beyond the budget. There is a bond inclusion, JP Morgan bond inclusion, so you are seeing the flow. Last week itself, our forex balance went up by $8-9 billion. So now I think they must have been waiting for the budget, and the post-budget, again I think you'll see the FDI and FI flow picking up. So my sense is that we are in a very sweet spot as far as the foreign flow is concerned, and budget is just about one of the small event on the way, and then basically maintain the environment, the positive good feel factor in the economy that has been fully maintained, and they have given a little more boost. So my sense is that tomorrow people will forget what has come in the individual taxation. And I think there is one more big thing about abolition of the buyback tax. Now and then the taxation will be in the hands of the recipient. I think that is a huge bonanza for the actually promoters. Promoters earlier were paying 20% tax at the corporate level, and if it has to be paid in the hands of promoters, then they'll pay only 12.5%. So my sense is, let's see what is there in the fine print, but it looks like a very big change.
Thank you so much, Raamdeo Agrawal there with his take on the budget and what we can expect. But let's also welcome to the conversation Prashant Khemka, founder White Oak Capital with us, Nilesh Shah, MD of Kotak Mahindra AMC also with us, and Sunil Sanghania, founder of Abacus AMC. So we've got a power-packed panel with all the voices in at this point. Let's start with the quick first takes. Nilesh Shah, I'm not going to do the standard rating of the budget, but this one at least had a surprise in terms of capital gains tax. Everyone was in the will she, won't she, will they, won't they kind of a situation. Are you surprised negatively?
No, I'm not negatively surprised. I'm just disappointed. STT was levied in place of capital gains. Now STT and capital both continue since 2018. Now capital gains tax is revised upwards. But there is a non-level playing field between foreigners and locals. If FPI invest in Indian derivatives, they make capital gain. If you and I invest in Indian derivatives or trade in Indian derivatives, it is business income. The foreigners doing trading in our derivatives are earning tax-free income, whereas we pay tax as per applicable slab rates. I think we should create a level playing field between foreign and local participants in the market so that there is equal distribution of taxation.
Got it. Okay. And okay. So, okay, that's the first take. Let me get the first take from Prashant Khemka as well, and then I have a follow-up for Mr. Nilesh Shah. Prashant, what does this mean for equity markets by and large? There is also this angel tax, which is a very interesting thing which has come in. But what's your first take on the budget from a market's perspective, both from a taxation as well as this adherence to the fiscal deficit are actually beating what they had laid out?
Certainly, thank you, Neeraj. So first of all, in almost all respects, other than capital gains tax, the budget to me seems like a continuation of prior budgets. The prior budgets were all received well by the investment community, and we have to keep in perspective that the impact of budgets in normal course of events is with some rare exceptions, is fairly short-lived on the markets unless there's some very tectonic shifts in the way the economy is expected to grow going forward. So in some sense, there's a continuity budget. This one negative on capital gains tax, I think, as Nilesh Bhai also mentioned, the revenues could have been generated in other ways as well. It just, besides, first of all, it's a 2.5% increase. Let's forget for a minute the short-term gains tax, which you can't really forget, but the long-term gains tax has been increased by 2.5%. That means if you are going to expect 10 to 11% over time, I think reasonable to expect 10% return from the market, then it has shaved it off by 25 basis points. It's material, yeah, because there's no indexation benefit. So your real return has gone down more than 2.5. It's gone down probably by 5%. It also opens up a Pandora's box in a sense. We had a certain stable tax regime on investors for last several years. Yeah, 10% on capital long term, 15% short term. Now, the increase in this budget also raises the risk in investors' mind, legitimately so, that we can have frequent changes. And when I say changes, usually with things related to taxes, they only go in one direction. So could this imply future tax hikes as well? Already, I think in my experience of having invested in developed and EM markets, the taxes on investments in equity markets in India are towards the high end, especially the variety of taxes, all taken together. I'm not saying just look in isolation, long-term gains tax or short-term gains tax, and so on, including the dividend tax and the buyback tax and the STT and all those. So at a certain point, there'll be a straw on the camel's back. A theory would be applicable. I don't think this 2.5% increase is that straw, but increases the risk that down the line you'll have further uplift in this tax rates. But that is the primary concern with the budget. Otherwise, I think most of the budget, particularly, hopefully, the fine print would have to be looked at. Nilesh Bhai was just mentioning a short while ago on the media, which is what I'm frantically searching for in the fine print, that certain laws have been amended in the direction of ease of doing business, which would allow fund managers like myself sitting outside India to come back to India and live a normal life in India. I'm yet to see that print. My team is looking for it as well. But if such things are indeed included in the fine print, then ease of doing business is what I usually always look for from a budget rather than this tax tinkering. The budget is an opportunity. Every budget to me is an opportunity to improve ease of doing business, because all said and done, we are last published, ranked 63rd on ease of doing business. We want to be number one to become a developed nation by 40. We can't become a developed nation by being 63rd nation on ease of doing business.
That's true.
Yeah?
That's
so that
true.
fine print, I'm very much eager to look into as it becomes available.
Yeah. Prashant, I can almost feel the pain. But I think that's the kind of voice that Nilesh Bhai gave as well, and you rightly referred to it. So Nilesh Bhai, I think Prashant makes this important point, that does this open up in a sense, a bit of a runway that people will not have clarity now about whether this is the last of the tax changes and the max tax that we have, which is 20% on short term, or could it be more?
So at least this year, Neeraj Bhai, the details are out. And I'm sincerely hoping that the safe harbor clause which Prashant Bhai referred to, and which I had the pleasure of handing over to the Honorable Finance Minister in my pre-budget consultation, really works out. And next time, both me and Prashant Bhai are in your studio in person, and not I am in local office and Prashant Bhai in global office. And that's the important point. If India has to develop as a regional financial center, we have to bring Prashant Bhai in India, not keep him outside, by changing our rules and facilitating it. And this budget is a step in the right direction. There are changes being proposed to improve ease of doing business, ease of doing investments, and we should keep on taking feedback so that we ultimately achieve our objective of bringing talent into India.
Nilesh Bhai, so a couple of things. I want to ask you about employment, etc. But I just want to play devil's advocate on the capital gains tax changes. Of course, the impact for real estate and gold still has to be understood because indexation goes out of it. But on equities, if the counter argument would have been that look at the kind of gains made in equities by everyone, why should the government not take a little bit more from you? Every other kind of income is also being taxed. What would you say to that?
So one, why do we give tax incentive? We give, like vitamins, tax incentives for correct certain deficiency. Where is the challenge today? Is government doing its job of building infrastructure? Answer is yes. Is private investment coming through as much as they wanted? Even yesterday's economic survey mentioned that now the ball is in private sector's court to take it forward. How will private sector invest if there is no capital formation? The corporate India makes 16 lakh crore of profit, and they give probably 40% of that by way of dividend. Now, is there an investment happening? Answer is it's happening on a limited manner, which is why tax incentives are needed so that capital market can provide capital to our entrepreneurs and they can go and then invest. Today, 9 lakh crore rupees in last 3 years between FY21 to 23 has gone into currency notes. Does people make money on currency note? Answer is no. We need to give them incentives so that currency note, instead of lying in Tijori, comes back into the economy. We have imported on an average 700 tons of gold. In 22 years of this century, our net import of gold, including gold smuggling and people wearing jewelry and passing through green channel, is about $500 billion. More than our foreign direct investment, more than our foreign portfolio investment. Where is that gold lying? It's lying in Tijori. Shouldn't we give tax incentives so that that gold comes out of Tijori and stays in formal economy? Tax incentives are needed to correct the deficiency on low capital formation.
Okay, just that's a good point there. So perhaps we could have been a little softer with long-term capital gains tax there. That's the resounding voice coming through. I just want to get, Prashant Khemka, your view on the employment push. And that really, I would say, if I had to predict what tomorrow's headlines will be in all the newspapers, among other things, after capital gains tax, would be the big push for employment. I want to understand from your point of view, do you think that there are some out-of-the-box ideas which could really change things?
Certainly, but before I go to that, I do want to, thank Nilesh Shah for really betting for the industry on this, regardless of what is there in the fine print, betting for the industry for this change, which would really spawn and it's tied to the employment creation as well. It would spawn a birth of a global hub in India. Just like for IT services, India is a global hub. With a small change in the policy, the right change in the policy that Nilesh Shah was referring to, the safe harbor clause, it would lead to India becoming the global hub, just like it is in IT services, becoming a global hub for asset management as well. And think of the employment creation that would lead to. So the employment creation initiatives are very positive in the budget, but what structural measures that can, besides the incentives, other structural measures which come along with ease of doing business, not just related to the safe harbor clause, but across board. The finance ministers talked about reviewing the tax code within the next 6 months by the time of the next budget. Simplification of tax code, leads to greater ease of doing business. That itself should spawn and have a far deeper and much larger impact on job creation. Then, what is also welcome, very welcome, in the interim, the higher allocation to job creation initiatives, be it in skill development, upgradation of skills, and incentives to manufacturing sector for first-time employees, and the incentives in form of contribution to the pension plans. All those are very welcome moves, but you have to think in terms of combination of these fiscal incentives, which may work very well in the short to interim time periods. Combine that with the structural job creation possibilities that would come with greater and greater ease of doing business.
Absolutely. So overall, a good budget. No one likes to pay more taxes. So you're seeing that also play out, not just in the markets, but from some of the conversations we're having. Having said that, markets have recovered from its worst levels of the day. An interesting conversation going on right now. My colleague Samina is speaking to Sunil Singhania, founder of Abacus. Let's listen in.
CG, your consumption, and it's worked out beautifully well, and we can see that in terms of your Abacus portfolio returns as well. But going ahead, what about other consumption or rural-facing sectors? So two-wheelers, tractors, those look expensive, or those could make good bets for now?
So our view on two-wheelers has also not been great, but two-wheelers have been the star performer last 1 year. I think it's been a case of P multiples going from like mid-teens to mid-20s. Which is surprising because volume growth for two-wheelers has also been low single digits, and there's also a threat of EV which is around the corner. So frankly, we don't have a very strong view on two-wheelers, though we have sort of made good the underweight on two-wheelers by having some ancillaries which are focused on two-wheelers. Tractors continue to be a little bit of a cyclical play. You always have 2 good years and then 1 bad year as far as tractor is concerned. Last 1 year has been that soft year. But now with monsoons trending up well, hopefully, towards the later half of the current calendar year, you'll start to see uptick as far as tractor sales is concerned.
Sunil, what was the cash position that you went into this budget with? And now that the budget is behind us, but we're still in the thick of the earnings season, what sort of an allocation or growth path are you planning out for the excess money that's on the sidelines in your portfolios?
No, so we never have had a large cash position. Neither we have had any view that we need to create 8%, 10% cash. Our view is that invest rightly rather than being fully invested. And I think that has been our stance. Before the budget, we did not feel that the market would correct sharply, nor do we have a view that the market is going to move up sharply. I think we have already seen last 3-4 years markets giving extraordinary returns. I think our base case scenario going forward for the next 3-4 years is low to mid-teen returns. And that continues pre as well as post-budget.
Okay, low to mid-teen returns possibly is what Sunil Singhania is saying. Let's get one more voice into the mix. Dharmesh Mehta, MD and CEO of DAM Capital, joins in on the conversation. Dharmesh, great having you. Thanks for taking the time out. You speak, Dharmesh, to a lot of people who put in capital into the country as well as companies which are going public. What's your sense of the impact that a hike in capital gains, both short-term and long-term, could do to the sentiment at the very least?
See, honestly, it's a very disappointing move because the stock markets were giving great returns, it was fueling the economy in a big way. To dent that in a bit is not very, good signs. But markets live out this, in 2 days, people will forget. People come to stock markets to make money. So they won't care whether the tax has gone from 10 to 12.5 or 15 to 20%. If they see market giving returns, they'll forget about this move, which was, should have not been done, but now that it's done, people will forget it. So I wouldn't see a big sentiment negative for the market, but this could have been avoided.
Does this impact the primary market pipeline, Dharmesh? Because a lot of conversation around how maybe 80,000-90,000 crores worth of primary paper slated to hit the markets in the next 9 months. Do you think that gets impacted at all?
No, I don't think so. That will be impacted because, as I said, people come to make outsized returns. So 2.5% of higher long-term capital gains or short-term will not dent that sentiment for sure. India is in a sweet spot. They're doing very well. If you look at this budget also, it has been a decent budget in that sense. If you remove the stock market impact, there's nothing negative in the budget for which the view on India will change. So this negative event will be forgotten in 2 days and we'll be back to business of making money and identifying companies where they can make more than 20, 30, 40% returns rather than worrying about the short-term tax impact.
Dharmesh, hi, good afternoon. Tamanna here. Apart from the tax piece of it, and you addressed that quite clearly, I'm just wondering that after this budget and from what we're seeing in the markets today, are you seeing a longer sort of rejig in what the favorites are? We're seeing your rail stocks really suffer. Your PSUs suffer, all of those infra plays. Today is all about consumption. Do you see that trend continuing for a bit, looking at the thrust of the budget?
Well, I don't think that will be a big impact because in another 6 to 7, 8 months, you're going to see another budget coming. So unfortunately, we have 3 budgets in last 1 year. So I wouldn't say markets will react too much on this budget. I think so. It's the same story again back tomorrow. People will look at, good sectors which they are following. And I don't think that there's anything in the budget which will make me negative on certain sectors.
You're not negative on any sector right now, but what are you most positive on? Let me just place the question that way.
Well, this budget is thrusted on the rural economy. So I believe any rural theme or rural stocks, that should do well. So that's a big positive out of the budget is on the rural economy.
Okay. Dharmesh, no sectoral moves per se, but are you happy with the fact that the number on capex has been kept as is, and the money that was there excess from the RBI dividend has been used to prune down the fiscal deficit even further? Is it a signal to global agencies of sorts about what India is doing and sticking to the fiscal glide path with even more alacrity?
Well, fiscal discipline is always good for the country and for the markets as a whole. But yeah, I would have been more happy if there was more thrust on capex, especially on infrastructure, which is the need of the hour. But as I said, another budget is on the way in 6 to 8 months. So maybe they kept it for the next one.
All right. So thank you for that. Dharmesh Mehta, MD and CEO, DAM Capital. Short, sweet and crisp answers there on what he expects from the budget. Kush is with us. So Kush, we've heard all the gyan, all of the inputs coming in. Everyone likes the budget like they always do in every budget. Except this time people are being quite honest that they're not very excited about the capital gains tax. Markets, of course, took a huge knock. Look at that Nifty chart and then has begun recovering. They'll get over it. Market will get over having to pay a little more tax. But what do they do right now? You are entering the fag end of this budget session, about 1.5 hours to go. What's the play?
I think, again, I'll allude to what we discussed in the morning, which is 24 hours from now, markets will perhaps continue doing what it was doing before the budget was announced. In fact, the markets are doing that a little earlier. What do I mean by that? Real estate had seen quite a bit of a bump up, but most of these stocks are in the red, perhaps one of the highest losing sector for the day. And guess which sector is doing the best? Lo and behold, IT has made a strong comeback. So we're exactly doing what the market was doing before the budget, and I think this theme will continue. From a standpoint on the indices, I think 24,200, if that is held on the Nifty, you should continue to hold your long positions, but once that is taken out, exit. 51,800 seems to be the level that the Bank Nifty might close below. So if that is lost, then Bank Nifty goes into a short territory. And from a near-term perspective, as I said, something if you have to take out from the budget. Anthony Waste, this stock was doing well before the budget. Even today, it's holding on to its gains. So I think from near-term perspective for a target of 725, this is one stock that you can consider. Keep your stop losses close to 660 levels.
What about a team lease right now? A team lease, a Quest, all of your employment sort of pushes, and you're seeing that play out definitely fundamentally, a team lease as well. What are you seeing on the charts, Kush?
Again, my concern comes from the fact that they're not able to hold the highs that they have made. If you remember, when the budget speech was on, and we were having this conversation that a lot of stocks that are moving aren't really able to hold the highs that they had made. The same thing applies for team lease. So while this is a shot in the arm, the stocks perhaps now already witnessing some profit booking. Quest Corp 2, I think 650 is a resistance level. So I wouldn't buy into them now. I think that move is done. We'll perhaps see if this momentum continues tomorrow, but for now you could just take this as an exit opportunity if you're holding from lower levels.
No, I didn't. Sorry, I'm just saying I didn't see any announcements specifically. I don't know if I've missed it on power, because it's a big expectation with all the 500 gigs of capacity to be added that there will be some mention about how they'll move from fossil to non-fossil, but no specific announcements on power, at least to the best of my mind. Wonder if that is a bit of a deterrent, because some of these stocks, Tamanna mentioned the railway stocks. Look at some of the energy. I mean, Suzlon is a separate kettle of fish, but otherwise, a lot of these stocks have come off.
10%.
Yeah, Borosil Renewable is up about 9.5%.
I'm not sure what's happening now. AstraZeneca, have you guys looked at it? 10% on AstraZeneca. Is it a cancer drug importer? I don't know what it is on Astra.
Could be, because they have waived off on 3
duties. So BCD on 3 cancer drugs has been waived off now. Whether that has to do with, whether AstraZeneca has anything to do with it is something we'll have to wait and understand. The stock is up and about 10% higher. Borosil is also holding up quite well, 10% on Borosil. Angel One is up 6.5%. Not sure what the story there is. Easy Trip Planners, so anything to do with domestic tourism companies are doing well on back of that push coming in to create those tourism corridors in the country. But Kush, very quickly, while I know that a bunch of these FMCG, IT stocks are doing well today, but would it be prudent to take money off the table before the day ends today? Because I'm assuming if you're back to business tomorrow and if this LTCG settles in to the minds of traders and investors, then I think this FMCG play may not work.
So, Samina, just to the point, markets I think have now matured enough to understand that this is perhaps a knee-jerk reaction, as some of the fundamental guests were also saying that, what do you still do? I mean, the taxes have gone up, but are you going to not park your money here? I mean, I don't think that's the case, right? So I think the markets will continue doing what they were doing. And in that sense, FMCG was doing well. IT was doing well. So I would continue these two stocks. What I would take money off from is those stocks, which got a shot in the arm but haven't really been able to hold, the higher levels. So for me, the likes of HCL, Persistent, these are, a hold. Tata Consumer, Godrej Consumer Products, these are a hold. So I would continue holding on to these, stocks and sectors which were anyway doing well.
A quick mention, and Sunil actually mentioned this. He said by your LTCG being revised from 10 to 12.5%, it converts to 35 basis points. So if you were first gunning for returns of 15%, today you have to add, if you have to pay the additional taxation, the returns that you need to gun for is 15.35%. So it doesn't mean that just because LTCG has gone up, you're going to stop investing in this market. All you will do is probably hope and try to make 35 basis points more in terms of returns. So I think that was an interesting takeaway and probably a good way to look at it. A lot of these shrimp companies are doing well. So Avanti Feeds, Apex Frozen, both of those counters had it quite good in the early minutes of trade. We'll take a break on that note. We'll come back. The markets are well off the day's low point. We're still down about 0.5%, but we've recovered 50% of the losses that we saw about an hour ago. We'll take a break. We'll come back and start winding down trade, get you the Prime Minister as well, of course, as he addresses the press very shortly after this break. So stay tuned.
ले जाने वाले इस महत्वपूर्ण बजट के लिए मैं सभी देशवासियों को बधाई देता हूं। वित्त मंत्री निर्मला सीतारमण जी और उनकी पूरी टीम बहुत बहुत बधाई की पात्र है। साथियों, ये बजट समाज के हर वर्ग को शक्ति देने वाला बजट है। ये देश के गांव, गरीब किसान को समृद्धि की राह पर ले जाने वाला बजट है। पिछले 10 वर्षों में 25 करोड़ लोग गरीबी से बाहर निकले हैं। ये जो न्यू मिडिल क्लास बना है, यह बजट उनके सशक्तिकरण की निरंतरता का बजट है। इन नौजवानों को अनगिनत नए अवसर देने वाला बजट है। इस बजट से शिक्षा और स्किल को नई स्केल मिलेगी। ये मिडिल क्लास को नई ताकत देने वाला बजट है। ये जनजातीय समाज, दलित, पिछड़ों को सशक्त करने की मजबूत योजनाओं के साथ आया है। इस बजट से महिलाओं की आर्थिक भागीदारी सुनिश्चित करने में मदद मिलेगी। इस बजट से छोटे व्यापारियों, एमएसएमईज को, यानी कि लघु उद्योगों का, उसकी प्रगति का नया रास्ता मिलेगा। बजट में मैन्युफैक्चरिंग पर भी बल है, इंफ्रास्ट्रक्चर पर भी बल है। इससे आर्थिक विकास को नई गति मिलेगी और गति को भी निरंतरता मिलेगी। साथियों, रोजगार और स्वरोजगार के अभूतपूर्व अवसर बढ़, ये हमारी सरकार की पहचान रही है। आज का बजट इसे और सुदृढ़ करता है। देश और दुनिया ने पीएलआई स्कीम की सफलता देखी है। अब इस बजट में सरकार ने एम्प्लॉयमेंट लिंक्ड इंसेंटिव स्कीम की घोषणा की है। इससे देश में करोड़ों करोड़ों नए रोजगार बनेंगे। इस योजना के तहत जीवन में पहली नौकरी पाने वाले युवा की पहली तनख्वाह हमारी सरकार देगी। स्किल डेवलपमेंट और उच्च शिक्षा के लिए मदद हो या फिर 1 करोड़ नौजवानों को इंटर्नशिप की योजना, इससे गांव के गरीब के मेरे नौजवान साथी, मेरे बेटे बेटी देश की टॉप कंपनियों में काम करेंगे। उनके सामने संभावनाओं के नए द्वार खुलेंगे। हमें हर शहर, हर गांव, हर घर एंटरप्रेन्योर्स बनाना है। इसी उद्देश्य से बिना गारंटी के मुद्रा लोन की लिमिट को 10 लाख से बढ़ाकर 20 लाख रुपए किया गया है। इससे छोटे कारोबारियों, विशेष रूप से महिलाओं, दलित, पिछड़े, आदिवासी परिवारों में स्वरोजगार को बल मिलेगा। साथियों, हम सब लोग मिलकर भारत को ग्लोबल मैन्युफैक्चरिंग हब बनाएंगे। देश का एमएसएमई सेक्टर मध्यम वर्ग से जुड़ा हुआ है। एक प्रकार से एमएसएमई सेक्टर की ओनरशिप मध्यम वर्ग ही है और इसी सेक्टर से गरीबों को ज्यादा से ज्यादा रोजगार भी मिलता है। छोटे उद्योगों की बड़ी ताकत, उस दिशा में हमारा अहम कदम है। इस बजट में एमएसएमईज के लिए ईज ऑफ क्रेडिट बढ़ाने वाली नई योजना का ऐलान किया गया है। मैन्युफैक्चरिंग और एक्सपोर्ट्स इकोसिस्टम को हर जिले तक ले जाने के लिए बजट में अहम घोषणा की गई है। ई कॉमर्स, एक्सपोर्ट हब्स और फूड क्वालिटी टेस्टिंग के लिए 100 यूनिट्स, ऐसे कदमों से वन डिस्ट्रिक्ट वन प्रोडक्ट अभियान को गति मिलेगी। साथियों, ये बजट हमारे स्टार्टअप्स के लिए, इनोवेशन इकोसिस्टम के लिए ढेर सारे नए अवसर लेकर आया है। स्पेस इकोनॉमी को बढ़ावा देने के लिए 1000 करोड़ रुपए का फंड हो, एंजल टैक्स हटाने का फैसला हो, ऐसे कई सारे कदम इस बजट में उठाए गए हैं। साथियों, रिकॉर्ड हाई कैपेक्स इकोनॉमी का एक ड्राइविंग फोर्स बनेगा। 12 नए इंडस्ट्रियल नोड्स, देश में नए सैटेलाइट टाउन्स का विकास और 14 बड़े शहरों के लिए ट्रांजिट प्लान, इससे देश में नए इकोनॉमिक हब विकसित होंगे और बहुत बड़ी संख्या में नए रोजगार बनेंगे। साथियों, आज डिफेंस एक्सपोर्ट्स रिकॉर्ड स्तर पर है। इस बजट में डिफेंस सेक्टर को आत्मनिर्भर बनाने के लिए अनेक प्रावधान किए गए हैं। आज पूरी दुनिया में भारत के प्रति आकर्षण बढ़ा है और भारत में टूरिज्म के क्षेत्र में नई संभावनाएं बनी हैं। टूरिज्म क्षेत्र गरीब और मध्यम वर्ग के लिए कई अवसर लेके आता है। इस बजट में टूरिज्म क्षेत्र पर भी विशेष बल दिया गया है। साथियों, एनडीए सरकार ने पिछले 10 साल में ये सुनिश्चित किया है कि गरीब और मध्यम वर्ग को लगातार टैक्स से राहत मिलती रहे। इस बजट में भी इनकम टैक्स में कटौती और स्टैंडर्ड डिडक्शन में वृद्धि का फैसला लिया गया है। टीडीएस के नियमों को भी सरल किया गया है। इन कदमों से हर टैक्स पेयर को अतिरिक्त बचत होने वाली है। साथियों, देश के विकास के लिए भारत के पूर्वी क्षेत्र का संपूर्ण विकास पूर्वोदय के विजन द्वारा हमारे इस अभियान को नई गति, नई ऊर्जा मिलेगी। हम पूर्वी भारत में कई महत्वपूर्ण इंफ्रास्ट्रक्चर जैसे हाईवेज, वाटर प्रोजेक्ट्स और पावर प्रोजेक्ट्स का निर्माण कर विकास को नई गति देंगे। साथियों, इस बजट का एक बहुत बड़ा फोकस देश के किसान है। अन्न भंडारण के लिए दुनिया की सबसे बड़ी स्कीम के बाद अब हम वेजिटेबल प्रोडक्शन क्लस्टर्स बनाने जा रहे हैं। इससे एक और छोटे किसानों को फल, सब्जियों, अन्य उपज के लिए नए बाजार मिलेंगे, बेहतर दाम मिलेंगे। तो दूसरी ओर हमारे मध्यम वर्ग के लिए फल, सब्जियों की उपलब्धता बढ़ेगी और परिवार के लिए पोषण भी सुनिश्चित होगा। कृषि क्षेत्र में भारत का आत्मनिर्भर बनना समय की मांग है। इसलिए दलहन, तिलहन की पैदावार बढ़ाने के लिए किसानों को मदद की घोषणा की गई है। साथियों, देश में गरीबी समाप्त हो, गरीब का सशक्तिकरण हो, इस दिशा में भी आज के बजट में प्रमुख घोषणाएं की गई हैं। गरीबों के लिए 3 करोड़ नए घर बनाना तय हुआ है। जनजातीय उन्नत ग्राम अभियान सेचुरेशन अप्रोच के साथ 5 करोड़ आदिवासी परिवारों को मूलभूत सुविधाओं से जोड़ा जाएगा। इसके अलावा ग्राम सड़क योजना 25,000 नए ग्रामीण क्षेत्रों को ऑल वेदर रोड से जोड़ेगी। इसका लाभ देश के सभी राज्यों के दूर दराज गांवों को मिलेगा। साथियों, आज का बजट नए अवसर, नई ऊर्जा लेकर आया है। ये ढेर सारे नए रोजगार, स्वरोजगार के अवसर लेकर आया है। ये बेटर ग्रोथ और ब्राइट फ्यूचर लेकर आया है। आज का बजट भारत को दुनिया की तीसरी सबसे बड़ी आर्थिक ताकत बनाने के उस पूरी प्रक्रिया में कैटलिस्ट का काम करेगा। विकसित भारत की एक ठोस नींव रखेगा। सभी देशवासियों को बहुत बहुत शुभकामनाएं।
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Nilesh Shah, on my show, Talking Point.
With the change in the tinkering on capital gains, the markets did react negatively, but we're well off the day's low point now with the 65-point cut, recovered nearly 250 points on the day's low point. Well, all in all, it's a thumbs up from most people we've spoken to, but Saurabh Mukherjee, now founder and chief investment officer of Marcellus Investment, joins in. Saurabh, hi, thank you very much for joining us. Net, good budget, bad budget. Are you disappointed with tinkering of capital gains, or are you impressed that fiscal discipline has been maintained more than what we were expecting?
I think the FM ticked all the boxes I could have expected of her. I think she needed to take on this kind of froth that was building up in the market. RBI and SEBI have been very clear that they're seeing too much money come into the stock market, too little going into the real economy. All credit to the FM for jacking up short-term capital gains to 20%. Secondly, she took on the employment challenge, the challenge of creating millions of jobs. She took it on head on. I saw 5 measures being announced to juice up employment. Even if 2 or 3 of those work, I think that's a meaningful step up. And thirdly, rural India has been suffering since COVID. I think there was a big allocation towards rural India as well. To fund all of this, obviously, capex had to be throttled off. So I don't think there was any increase in capex relative to the February budget, which I think is also sensible. I think government capex has already gone up by 30% each year for the last 3 years. There wasn't obvious need to jack up capex. There was plenty of need to jack up RevX and boost consumption, and she's done that. So full marks to the FM. I think remarkably well thought through, common sense oriented budget.
Well, it was a well-balanced budget, and while most people were worried that it would be have some shades of populism, that didn't actually happen. Madhusudan Kela, now founder of MK Ventures, now joins in. Hi, Mr. Kela, it's Samina joining in. First up, quick take on what did you make of this budget? There was tinkering on capital gains, but we've been expecting that now for a few years. Markets have also so far taken that in their stride. Or at the same time, it's not been a populist budget. It's focused on agri, it's focused on employment, a 5-year budget in every sense of the word.
Yeah. I mean, I would say the overall, it's quite a good budget. It really focuses on a lot of long pending issues like employment generation, the deep reforms which are needed in agriculture sector, the overhauling and making changes in long pending income tax laws, and really creating, opportunities for youth in on the whole. So, and at the same time, on the face of it, when you look at the number in the budget speech, they looked very large, and it looked like quite a populist budget. But when you go into finer details, I think they've done a commendable job of sticking to fiscal discipline, of not only sticking, but basically lowering down the fiscal discipline, the fiscal deficit. Also ensuring that the government borrowing over a longer period of time as a percentage of the GDP will go down, which will argue very well for our long-term rating. So on the whole, it's quite a good budget. Coming down to markets, of course, markets have had a very fabulous run in the last 3 years, and more specifically in the last 6-9 months. The market had some reason for small corrections here and there, and that came in the form of short-term capital gains and also some increase in long-term capital gains. Also, it was, you say that it was expected, but I was certainly not expecting it in this year at least, because the government fiscal situation going into the budget was really, really good. However, I think they have taken a larger call of ensuring that the money really goes into the real economy and doesn't go all in the stock market, and which is why they have actually brought down all the asset classes and categorized at 12.5% long-term capital gains so that people can invest into other asset classes as well. And so they have made it as attractive as the equity is. And the second point is also they have lowered down the duty on the gold so that some amount of investment can even go into the gold. So I think those measures coupled with this long-term and short-term capital gains tax, it basically indicates the government intention to ensure that the saving must get distributed and not go only into an asset class. So on the whole, I'd say it doesn't really, it argues very, very well for the long-term growth of the country, and it doesn't change my stance on the stock market from a medium to long-term perspective.
Absolutely. Thank you, Mr. Kedia, for that. Stay with us. Let me quickly move to Saurabh. Saurabh, this is Harsh here. Saurabh, has enough been done to kickstart the corporate capex cycle? Because that was one piece where the market really had their eyes out on where the budget is concerned.
I mean, look, corporate capex, I don't think the government can do a lot more than they've done. The main thing I thought they did was by making it unattractive to do buybacks. I think the FM is very clear. If you now announce a buyback, you'll actually be taxed not just on the amount or not just on the capital gains, but the investor will get taxed on the entire payout. I think that'll put pay to any corporate buybacks this point in. And since dividends were already taxed, the incentives are now there for companies to spend the money on capex rather than dividending it or blowing it on buybacks. And in parallel, by keeping the budget deficit under control, by pulling back the government's borrowing, the government has reduced crowding out. The 10-year bond yield should be coming down. Interest rates are likely to come down in the next few months. So the government has done everything possible from a fiscal standpoint for private sector capex. Ultimately, it's a free market economy, and it's up to our promoters and our industrialists to do the needful. I don't think that in a free market economy the government can be expected to do more than what was already done in this budget.
Okay, I take your point. Mr. Kedia, both from a private sector capex perspective as well as from a personal tax perspective, do you believe enough has been done to spur consumer spending as well as private capex spending?
There is never enough, you can say it is being done. But I think whatever they could do, they have done. Ultimately, we have to also understand they are also operating within the constraints. Like budget is nothing else but a balancing of income and expenditure. So whatever is your income is what you can spend, making sure that your fiscal deficit doesn't go beyond a point. So I think adequate is being done. They have addressed quite a few issues which were really pending in terms of economy, the biggest being the job creation and the opportunities which are being created. It's such an innovative scheme actually. 500 companies will hire internship and that will go into the CSR budget. That will really encourage a lot of companies to hire younger people and provide employment, which is actually absolutely the need of the hour. So in a way, I would say a lot is being done, and now it is left to investors and entrepreneurs to take the risk and do their ventures. Right? What can the government do beyond a point?
Right, Madhu, and you're smiling away, which makes me really believe that you're genuinely impressed by this budget. But if job creation is the focus for the next 5 to 10 years, and as an equity market participant, how would you play this employment boom? Would it be consumer stocks? Would it be auto stocks? Where would your bias lie if you're looking at investing in this market for the next 2 to 3 years?
I mean, I will not go one-on-one to honestly to look into opportunities because of A move or B move. Why? The reason why I'm smiling is because it is business as usual for us. Right? We are back to, because, before the budget, there are lots of rumors which go on, this FNO will get this taxation, that taxation. There are a lot of things which go around the budget. once the budget is passed, at least you know that it is life as usual. So I would say that it is back to really going to the drawing board and really being able to identify bottom-up opportunities which will arise from various sectors. At this point of time, I can't thumb the table and say that I will buy a particular sector or B particular sector. I will look for bottom-up opportunities within the sector. I will keep a 3 to 5 year horizon, and I will keep my return expectation as moderate. Considering the fact that last 3 years we have made really extraordinary money, that the focus would also be to ensure that we don't extrapolate that kind of returns in our mind and make sure that we are investing with moderate return expectation and not what we have gained in the last 3-4 years.
Right. Saurabh, you want to comment on that as well? We've borrowed returns from the future, and that's a given with the kind of rally these markets have seen. It's a raging bull run, to say the least. There is a sense and quarters of the market, people like you, who do believe these are expensive markets and a correction is much overdue and maybe also healthy for the markets. Earnings have come our way. Most of them have at best met street expectations. Do you feel now is a good time to take some money off the table and then probably, come back with different vigor, but just wait it out for now, exit, take profits off, and then reinstate or reinvest those funds at a later stage?
Actually, it's a very interesting market. If you look at high quality companies, they actually haven't run up. So we're large investors in HDFC Bank, Asian Paints, and both stocks I think have given close to nil returns. Even companies, high quality companies which have done reasonably well, say a Titan or a Divi's Lab or a Dr. Lal PathLabs, they've had reasonable runs. I don't think there's been a blockbuster bull run in a Titan or a Divi's Lab or a Dr. Lal PathLabs. Where you've seen crazy rallies, utterly unjustified rallies in my view, is a whole bunch of PSU-related names, a whole bunch of power and infrastructure names, and there's clearly, those valuations are sort of from different planets. So there's two parts to the market. If you strip out the low-quality rally, if you strip out the rally in low-quality stocks, the Indian market actually is quite attractively valued. As I'm sure everybody watching knows, the HDFC Bank is trading at a 20-year low on PE multiples. Asian Paints is trading at its long-term PE multiple. So I think it's a good place to be. It's a good time to be buying quality. As I'm sure everybody also knows, we are invested in it through our PMS. I, as an individual, my parents, several thousand of our clients. And that's my point that I make to global investors as well. Strip out from India the low-quality stocks rally, and the Indian market is not expensive. The economy is in good shape. Take a long-term view on India, put money in India, put money in great Indian companies, and it will be in great shape for many years to come.
Saurabh, we'd have loved to chat with you longer, but I guess we'll have to wrap up on that note. We'll hopefully see you soon. Very quickly changing gears, we also have Dr. Ashutosh Raghuvanshi, MD and CEO of Fortis Healthcare, now joining in. Dr. Raghuvanshi, thank you very much for joining us today. Dr. Raghuvanshi, key takeaways from this budget, what stood out for you and what disappointed you?
For the healthcare sector, I think it was very disappointing. The fact that this budget did not include healthcare as a priority itself is something very disappointing. None of the long-standing demands have been addressed. The overall allocation, though, has been increased by about 12.5%. But that was on a low base. I think what is required is much higher. So those were the sort of negatives. I mean, there are few positives as well, and some of the custom duties on import of X-ray tubes, for example, will also help the local manufacturers to increase their production. Cancer drugs, there are only 3 cancer drugs, though, which have been included, but nevertheless, that is going to have an impact. Some of the other schemes which have been announced for the employment side on the internship and on the women's development, I think those would have indirect effect on the entire industry, and healthcare would also be included in that.
Raghuvanshi, I guess this is more of a long-term plan, right? If you create employment, you improve earning capacity for a large part of this country, which then, of course, enables them to go on and spend on healthcare if and when there is a need. But we'll talk about that in a minute. These 3 cancer drugs, which have got a little bit of a waiver on custom duty, how does it impact a company like yourself? And we don't know much about these cancer drugs, but if you can walk us through it, it'll be interesting to understand what it means for the healthcare sector, if it does at all.
Yeah, no, it definitely means a lot for the patients. And as you know, the cancer therapies are generally expensive. These 3 drugs are essentially imported, and hence they are even more expensive. There are no equivalents available in the country. It would benefit the patients directly. But as far as the industry is concerned, it will not have an impact because these are mainly pass-through costs.
Right. Thank you, sir. Stay tuned. Of course, with us, we also have Mr. Rajan Bharti Mittal, past President FICCI and Vice Chairman at Bharti. Sir, let me first come to you with regard to your 3 key takeaways, 3 key positives and 3 key negatives from the budget, which you found for this particular budget, 2024.
I think the 3 top things, if I were to say, manufacturing, especially the SMS and MSMEs have been taken care of, job employment and agriculture. I think any growth path that this country has to move towards Viksit Bharat, manufacturing and agriculture have to play a very, very key role. So I think that, I would say, is probably the top tier for us to say how this budget has been panned out. Of course, the Mudra scheme, the women empowerment, that also has been kept in mind. Especially manufacturing on the electronic side, that's heartwarming because I think India can become a manufacturing base more and more for the electrical electronics, which should happen now. All the PLI schemes have shown that the growth can happen in this country. So I think these are the good areas, of course, keeping in mind that fiscal prudence still be kept in mind. If I have to say that there is something which the industry, especially telecom industry, wanted, which has not been met this budget, and we hope that in future some course correction should happen, is on the telecom levies. We believe that telecom levies are far too outstretched. They need some rationalization over a period of time. Of course, the space industry has been spoken about, the small nuclear industry has been spoken about. We will have to see the fine print on that. Lastly, the finance minister spoke about the less of litigation and ease of doing business and taxation being part of that. That's I would say, a good note, and I hope that when we see the fine print, it starts working towards lesser and lesser litigation.
Mr. Mittal, I'm just going to ask you to step out of the telecom space and talk to me as an industry representative. There were lots of corridors in the industry that were expecting PLI schemes to be either extended or more sectors to be added, because this is one scheme that's actually worked really well in our country. And of course, there's also expectation that, that sunset clause for new manufacturing facilities would be extended. There has been nothing said on both those fronts. Is there a disappointment from the industry that none of these 2 clauses have been fulfilled? Because this is what you need to do to encourage private capex, right?
No, I fully agree. As I said, 2 sectors which have to add to the growth, agriculture and manufacturing. There is no doubt in my mind, if GDP has to grow, India has already stretched on the services side. So these two pillars have to contribute. And my belief is, as we're going to see budget, 6-7 months down the road, the course correction will happen. Maybe more PLIs are added. But I think the government also wants to make sure that the PLIs which have been given to the manufacturing sectors are fully utilized. They are probably also going to be watching which all industries who have utilized the PLIs have functioned well, what course correction needs to be done. So I would say this would be a work in progress rather than saying that is come to its fruition either way. So we'll have to watch this space.
Good. Mr. Ashutosh, if I can come back to you, just with regard to healthcare, as well as expanding healthcare for all, what more needs to be done in coming budgets, maybe over the next 2 to 3 years? We've of course built a good base, but from here, where can we go?
Of healthcare in this country, which needs to be addressed parallelly, the public healthcare system and the private healthcare system. The private healthcare can never become a substitute for public health in the larger context of the nation. And there we would have expected that there were significantly more allocations made for the purpose of the Ayushman Bharat scheme and the digital health mission. There was no specific mention to those. On the other hand, as far as private healthcare industry is concerned, there are several aspects which need to be addressed, which have been long-standing demands of the healthcare sector. One of them is the rationalization of the GST structure, because it being exempt, we do not get any input credit. And that actually results in a higher costs for the patient. So that is very important factor which needs to be addressed. And there are also several other measures which the government can take to promote the infrastructure being created in tier 2 and tier 3 cities where the availability of adequate infrastructure is not there. And for that, certain schemes of PLI, etc., could be tailored, which the private sector can sort of catalyze and use them as basis to create further infrastructure in those areas.
All right. Thank you, Mr. Mittal. Thank you, Mr. Ashutosh, for all of those views coming through. We're having a conversation in parallel with Mr. Vijay Kedia as well. Let's quickly dip into that conversation. Tamanna having that conversation.
सबसे बड़े नाम सबने आकर कहा है कि वो इस बात से डिसअपॉइंटेड हैं कि लॉन्ग टर्म कैपिटल गेन्स टैक्स बढ़ाया गया. एफएनओ वाली एसटीटी से ज़्यादा परेशान नहीं लोग हैं, लेकिन इससे डिसअपॉइंटेड हैं. आप एक विजय केडिया बोल रहे हैं कि आपको इससे कोई फर्क नहीं पड़ता है. यू आर नॉट डिसअपॉइंटेड. डू यू वेलकम इट?
ऑफ कोर्स आई डू वेलकम. देखो, कंट्री जिंदा रहनी चाहिए मैडम. कंट्री जिंदा रहेगी तो शेयर बाजार जिंदा रहेगा. इकोनॉमी बढ़ती रहेगी तो शेयर बाजार बढ़ता रहेगा. शेयर बाजार बढ़ता रहेगा तो मेरी भी प्रगति होती रहेगी, मेरी भी वृद्धि होती रहेगी. मैं खाली अपने बारे में अगर सोचूं कि मेरे को टैक्स नहीं देने का है, तो ऐसा तो कैसे होएगा ना. फिर तो कंट्री बंद हो जाएगी. तो मैं इसके एकदम फेवर के अंदर हूँ. मेरे को लगता है कि 12.5% उन्होंने कम बढ़ाया है. अगर आप 15% भी, मैं तो सोचता था 20% करेंगे. मैं आपको सच बताता हूँ, मेरे मन में तो ऐसे लगता था कि बाकी जो दूसरी एसेट क्लासेस सब में 20% टैक्स का स्लैब है लॉन्ग टर्म का. तो क्यों नहीं करेगा. एक आपको एक एग्जाम्पल देता हूँ तमन्ना जी. कनाडा के अंदर में कोई कंपैरिजन नहीं है, कनाडा और हमारा कोई कंपैरिजन नहीं है, लेकिन खाली जो लोग बोलते हैं ना, कई लोग बोलते हैं कि दुनिया में कहीं ऐसा नहीं है. कनाडा में 50% टैक्स है मैडम. लॉन्ग टर्म कैपिटल गेन टैक्स 50% है. चलिए, अपना उनसे कोई कंपैरिजन नहीं है. आदमी क्या
कनाडा में हेल्थ केयर दे रहे हैं, आपको फीस नहीं भरनी है बच्चों की, आप बुढ़ापे में आपका ध्यान रखते हैं. यू रियली कांट कंपेयर विद कनाडा.
एग्जैक्टली वही मैं बोल रहा हूँ, कंपेयर नहीं कर सकते. तो आप ये भी सोचिए ना, 147 करोड़ आदमी के अंदर में फिर 1,69,000 आदमी, 45%.
So that conversation happening, but let's quickly go across to N. Jayakumar, who's joining us, MD and Group CEO at Prime Securities. Mr. Jayakumar, talk to us. You were constructive on pharma, and just first give us your views with regard to the budget itself.
Any kind of disappointment about taxes, etc., is, I think, frankly, too small to even mention. The fact is, taxes have gone up a little bit, but those who are making the kind of money that they are making in the markets, if there is in some sense a redistribution of that wealth through the government, which means you pay higher taxes and the government then channelizes to a whole bunch of, whether it's social security, first-time employment program to generate employment in the country, addressing youths, I think it's an extremely noble way to do it. And I think the fact that it is finally tax on gains, let's not forget that it's on higher income or on income that you generate that you're paying this tax. So I personally have absolutely no bones to pick on this. We can go down to the fine print to say that, whether, for instance, buyback is the same as dividends, etc. Those may be fine prints that we need to wait for before the end of the day to get clarity on. But the fact that tax rates have been moved up slightly, I absolutely have no issues on this. It's a different matter that nobody expected it. But it doesn't mean that everything that you expect must come through. And let's be very clear, the markets have been very kind to a lot of people and to all the people who've done their SIPs, etc. So they have to pay 2.5%, which is a 25% higher taxation on long term and 15 going to 20 in the short run. I do not believe, I repeat, I do not believe it's a problem. I think the distribution of that in the hands from the government to the hands of the necessary and the needy, to the needy is absolutely necessary, because really what we must see is a far more inclusive growth than just South Bombay, South Delhi, and a few pockets making money as a result of market movement. I think this has to be more inclusive growth, and I think the foundation stones have been laid for it, whether in terms of a slew of these programs for first-time employers, for promoting employment amongst youths. Ultimately, you don't want the demographic dividend or the demographic boon to become a demographic bane if you can't give employment where it is needed. And to generate employment and to foster that, if any schemes have come through and it means that certain rungs of the population have to pay, I am absolutely okay with it. Number one. Number two, I think there's substantial emphasis on infrastructure. There's substantial emphasis on public investments, and they're hoping that the public sector investments, they're hoping the private sector also, keeps pace. I, for one, believe that the collections through taxation would be far higher than what have been the estimates in the budget. So overall, I'm very happy with the budget, largely because nothing much has been tinkered. And you could argue that the taxation increase could have been avoided, but I think a signaling had to be given that for more inclusive growth, different sections of the society need to contribute. And from that signaling perspective, I believe there's nothing wrong with this, and too much airtime and TRP has been spent by channels on the fine tune, on the fine print about taxation aspects and what the base, etc. is. That's something that we can always figure out later. But the broad direction about what this government wants to do in the next 5 years has been well laid out, and I'm delighted for it.
Right. We also have with us Motilal Oswal, MD and CEO Motilal Oswal Group, joining in. Hi, Mr. Oswal. This is Samina. Sorry to have kept you waiting, but it's just turning out to be a very busy afternoon. What have you made of the budget? Capital gains has been increased, but that translates into 35 basis points of gains, additional gains or earnings that an individual now needs to make to accommodate for that increase in capital gains. Are you impressed with the budget? The fiscal consolidation was better than expected. The budget did not tilt too much towards populism. And of course, it fixed the capital gain situation at a time when we're pretty much in a Goldilocks scenario.
Yeah, so if I have to, I think, summarize about the overall budget, I would say that there are very minimum changes overall. And of course, I think there's a fiscal discipline. Absolutely, numbers are far better budgeted, which is good for the country. And overall, I don't see really, I think, many changes really, except few changes on the capital market side. So capital market gains, short term, long term, and STT. Of course, I would call it absolutely that there can't be any gains without any pains. So it's a capital pain budget in that sense from long term, short term, and STT perspective. But I think it was more on the expected line. But I think more important will be that how the whole regulatory changes comes in next few weeks about the overall any new restrictions or any kind of new changes happens, the way the future and options, especially the volumes are happening. So market definitely would look forward to those changes, and these in any case more or less I think not big change, but to the extent really I think it is a change, and global investors, domestic investors would like to see the continuity of policy on this side. Because if you have to look at the overall, just the huge number of people are coming in, but still, if you look at the percentage of household savings coming to the market, is less than 5%. So if we want to encourage more and more people to come here and invest for long term, especially their savings, then definitely there should be stable policies, and there should be some kind of encouragements for the investors who actually invest for long term. I have nothing really to say about the STT on the future option. That's okay, but I think for long term investors, especially capital gains tax, I wish they should not have any changes.
So, Mr. Oswal, just with regard to STT, I want to try and cap this tax angle off. Do you believe that this will dissuade investors from engaging in F&O? Do you, of course, you head and lead Motilal Oswal Group, and therefore maybe in the most relevant position to answer this.
Yeah.
It will, okay.
Yeah, it would, because the cost of transaction will definitely go up.
Right.
So in that sense, definitely it will make an impact, because people trade for very small gains or small amount of gains, and that's where it is going to impact them.
Right. And sir, do you believe on the policy side of things, enough has been done in this budget to push consumption?
No, I think the way things are happening, if I have to look at medium to long term, budget actually is becoming more a non-event, except few cosmetics, which is the right thing to do, because it brings predictability to the whole kind of, I think, policy environment. So I think really we are on the right time.
Mr. Jaikumar, I'll come to you now on what you made of the budget as a whole. While you did say that it's pretty much ticked all the boxes, from a portfolio standpoint, do you feel like it's back to business pretty much now, and the markets will have digested the change in capital gains, and of course the focus will be once again on earnings and fundamentals, and most importantly valuations, given how stretched we are right now?
You know, my budget take usually is, budgets are nothing but a speed breaker on a highway. On a highway, you don't expect speed breakers, but if you do get it, you need to take the bump and move forward. I think in every which way the direction is clear, direction has already been laid out. I don't believe the budget has to that extent delivered anything dramatically different. Tinkering around here or there, you know, making changes in customs duties, etc. That's something that they do every year, which is digested well before even the markets shut. Sometimes you wait till the end of the day to read the fine print. So from my perspective, nothing much has changed. If it's business, it's back to business as usual. We go back to trying to make investments, you know, by reading balance sheets or understanding businesses. So the entire thing about, you know, whether, for instance, the F&O trading will get impacted as a result of retail not participating, I certainly hope that that's what happens. People don't understand the risks associated with F&O, and to the extent they don't and they continue to participate, they've been losing money.
Right.
My own assessment is that anything that deters this, in fact, greater deterrence should have been put in place, and any F&O trading that needs to be done either needs to be done through professionally or through mutual funds who should be offering these schemes. So I don't, for one, have, will lose my night's sleep on any of these. I think the right deterrents are in place. And more importantly, the direction that the government has laid out has not changed over the years and continues to be as robust, but it's far, far more inclusive than it's ever been, or at least the pronouncements are making it far more inclusive. We expressed similar sentiments when DBT, etc. came in, but the fact that direct benefit transfers have made the kind of difference through the JAM, Trinity, etc., indicates clearly that this path with the government, giving to of going down the path of inclusivity, I think is a great step forward. And I, for one, welcome it. I mean, just look at the kind of social unrest in different parts of the world. I mean, clearly you don't want disparity to widen to such extents that this becomes something that the Indian folks also get to see. So given all that, I'm very happy with the budget, and I have, and I think we'll move on to business as usual and speak less about the budget starting tomorrow.
Right. Jay, on that note, from the start of this year, it was all about Modi stocks, PSB. So railway, fertilizer, defense, expectations of big bang announcements coming in the budget once again for them. And those stocks have ran up. They've doubled down. in the last 6 to 8 months. From where we stand today, and because it's back to business, would you still, were you ever overweight on these sectors? And if you were, would you remain overweight? Could PSBs continue to gain only on back of fundamentals from here on?
I think the easy phase of the bull market is over. Now we need to go back to basics. We need to identify sectors that are materially benefiting. The fact that the overall market is a buy on dips still remains the thesis as we speak. The fact that the overall market still affords opportunities is true. But I think we need to be far more nimble in terms of the sectors we choose. And most importantly, it goes back to basics. So whether it's PSU stocks or non-PSU stocks, I think I don't want to talk stock specific, but sectorally, every sector affords opportunities that people should look at. So as I said, this is something I don't want to talk about, which is stocks. But am I bullish on the markets? Yes. And there are enough sectors and stocks that I kind of look forward to continuing to own over the next several years.
All right. Also have Gautam Trivedi joining us, founder, managing partner, Nepean Capital. Gautam, first off, welcome. It's how do you assess the budget?
Yeah, I actually like the budget, and frankly, the fact that it was not populist, strong emphasis on agricultural, rural, strong emphasis on infrastructure, urban housing, etc. So, frankly, I like the budget.
Okay, and what changes in terms of thesis yesterday versus today and going forward for the next 2 years in your view?
Yeah, so I think the short-term capital gains tax being increased to 20% was indeed a surprise. There was a lot of chatter in the market about long-term capital gains tax being increased from 12 months to 36. That thankfully has not happened. I think a 10 to 12.5% or a 2.5% increase really is not going to move the needle. But the fact that they've kept it at 12 months actually is very good. And as far as short-term capital gains tax is concerned, I'm actually not too disappointed with that either, because that, in a sense, will bring down, hopefully, the speculation. That alone, of course, may not necessarily bring down all of the speculation, but the fact is the SEBI will have to bring in some other curbs and make sure that people don't get hurt, because there are a whole bunch of new investors from tier 3, tier 4 towns who are new to the equity markets, have never seen a correction, and you don't want these people to have a disastrous experience in the equity markets. So, staying course with what the SEBI chief has said over the past few weeks, that the incremental money coming into the equity market should be focused on not speculation, but investment. And I think if the SEBI does a bunch of things to control and curb the speculation, will be actually a big longer-term positive for the equity markets.
Gautam, what else do you make of the budget in this case in terms of impetus as far as consumption is concerned? We've been talking about weakness in rural demand. Do you think anything changes at this point in time?
No, I think the government has stayed focused, and hats off to Prime Minister Modi for this, has stayed on course and focused on basically doing the basic things, which is housing, infrastructure rollout. Obviously, electrification is part of that infrastructure rollout, and job creation. So I think these are things which the government has been talking about and doing for the past 10 years, and they seem to be on that momentum. So I think from that standpoint, the market was not at all surprised that these were the core tenets of the budget. There were tweaks. I think, for example, the lack of indexation going forward on real estate has taken a lot of people by surprise. But my personal view is that is for legacy properties, does not impact future properties. I.e., if you were to buy an apartment today, let's say in Midtown Mumbai, and looking at selling it 5 or 10 years from now, I don't think that's going to be a concern. That's going to weigh on your mind on buying the property itself today. But if you've inherited a property, or your grandfather bought something for 1 crore rupees, and the value of that today is 30 crores, as an example, so you have to then pay 12.5% on that 29 crores of capital gains. So those are issues for legacy properties, but not so much going forward.
Right, Gautam, interesting there, because we just did some quick math on that just before we came here. Yeah. And on that, just about 40 lakh rupees, if that was your cost of acquisition in 2002, then as of today, you're at a no profit, no loss in terms of tax. The tax cost is neutral if you sell your property at 3 crore. Of course, if the numbers change, this may also change. But basically, essentially, I think that the intention has been to keep parity in terms of the absolute tax amount that you're bearing, despite the 20% to 12.5% cut and despite indexation going away. And this is, of course, for real estate, gold, as well as non-financial assets. Of course, we'll try and dive deeper into that. But let me come back to Mr. Jayakumar, if I may. Mr. Jayakumar, talk to us about what you believe are the key misses in this budget, because you've spoken about so many positives. What's the possible 1 or 2 things which have been missed?
We do talk about divestments once in a while. We do, maybe greater clarity on that could have come through. Maybe there could have been some more measures on, steps taken for PLI, especially because your manufacturing thrust is so heavy that the PLI could have been looked at as a tool for getting there, because you then facilitate and foster domestic manufacturing. I think, especially in the context of employment creation, etc., this could have been definitely one further step taken. Other than that, my own assessment is there are a lot more things they want to do. They can do it outside the budget. So we expect a lot more than what has already been covered. Maybe a little, uncharitable to them. So I'm, as I said, broadly okay. There are not too many misses from my perspective. 1 or 2 which I pointed out.
Gautam, the other big number from the budget is 4.9% fiscal deficit target, and with an aim to reduce this number further. But this comes with costs, right? Going down. Your assessment on this as well?
To Jake's point about the one point that I thought also stood out, which was I wouldn't use the word negative, but that we need to actually assess, the government needs to address, is the lack of divestment, privatization / asset monetization. And frankly, if you want to get from 5.1 to 4.9, 4.9 to 4.5, either your tax collections need to significantly go up, or you should be able to achieve a significant amount of divestment of PSUs. And unlike a lot of Western countries who don't have a portfolio of companies to monetize or sell, or land to monetize, we have in our country, the government of India has so many PSUs that they can sell, especially in a market where the valuations of these PSUs have gone up. The stock prices have gone up significantly, and we are in the middle of one of the biggest bull markets in the history of the world. So it's a little odd that the government has desisted from monetizing assets at this point of time. And frankly, if the government were to move in that direction, I'm sure a host of investment bankers, including Jayakumar here, would help them sell these assets at a significant profit, and which could further reduce the fiscal deficit.
All right, Gautam, stay with us, but I'm going to take a moment to thank Mr. Jayakumar for joining us and taking us through his views and insights as far as this budget is concerned. With that, we also slip into a short break, and we come back with a lot more in just a bit. Stay tuned in.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. This, of course, is the special budget coverage we are getting you. Now, you've seen the Nifty. Of course, we saw a bit of a fall, but we've seen a full recovery now. So we're pretty much flat on the Nifty 50. We've, in fact, gone a bit into the green before just about coming back in the red. But, of course, we have Gautam with us. But let me also welcome on board K.K. Mistry, chairperson, and chairman, rather, HDFC Life. So, Mr. Mistry, give us your first take with regard to the budget, please.
Well, in my view, the budget is very progressive when you look at it from a long-term point of view. There are many, many positive features of the budget, which I'll highlight. I think the one reason why the market reacted negatively initially was the capital gains tax increase. But I think that is something which the market will pull aside, and I think in the course of time, things will bounce back. Now, what are the positives of the budget? I think at the very beginning, I said that there would be 6 pillars around which the budget would revolve. The first will be growth, and we have seen enough items or enough indications in the budget that the growth momentum will continue. Whether it's in terms of infra spending at 11 lakh odd crores, 3.4% of GDP, and so many other measures which have been announced. Second, I had said in the beginning was employment generation and skilling. And I think that there has been so much of focus in the budget on employment generation and skilling. And in a country like India, where we have a young population, this is, to my mind, an extremely critical and an extremely important thing that needs to be done. There are many measures announced. There are incentives given to sectors which are job machines, which create jobs like infrastructure, housing. There are so many things which have been announced for the housing sector. You have 3 crore new houses under the PMA scheme. You have the CLSS scheme, which has been broadly talked about, and I'm sure the details will be in public domain in the not too distant future. And there are many other steps for the housing sector. Encouragement to the states to reduce the stamp duty rate. Then there is enough for consumption, to encourage consumption. There's more money kept in the hands of people. Standard deduction, for example, has been increased, and various other measures have been announced to put money in the hands of people. This will lead to more consumption. Consumption will lead to more demand, and demand will lead to manufacturers and service providers increasing their capacity and therefore being able to provide more, which in turn will create enough jobs on its own. Then there are incentives for the rural economy, agriculture, a number of measures to improve productivity in agriculture. Then there are measures for the manufacturing sector. And last but not the least, I think extremely important is fiscal discipline. And we've seen that there has been a consistent decrease in the fiscal deficit every time we look at the budget. This time, the fiscal deficit is kept at 4.9% against the 5.1% which was mentioned in the interim budget. And for next year, the target is brought down to 4.5%. So I think these are all extremely positive measures when you look at it from a medium to long-term perspective.
Okay, KK Mistry with us. Sir, stay on with us. I just want to get a quick word from Mr. Nilesh Shah as well, FICCI president, who now joins us. Mr. Anand Goenka also with us. So we are getting a great panel of corporate voices on right now, even as we speak. Welcome, gentlemen, to NDTV Profit. So good to hear from you on what is a big, big day. Mr. Nilesh Shah, let me begin with you. A lot of push on employment generation, and some of it now becomes the responsibility of the private sector to take forward as well. I want to get your first take on that. The internship scheme, the incentives for hiring new employees. How do you look at all of that?
These are all steps in the right direction because the budget really focuses on short-term and long-term growth for the economy. The short-term comes in through various measures around consumption. The reduction in taxes at the income tax level is a positive in that aspect. And long-term through skilling, through infrastructure spend, capex spend. And it is right that the private sector has to now step up and partner with the government to drive this growth. This is also on the lines of the Viksit Bharat agenda that the government has laid out. And that is a very positive one because it really talks about Make in India and India being the manufacturing hub for the world. And these are all steps that are headed in that direction. And it is the government and private sector that has to partner, work closely together to make this happen.
I'll take a quick view from Anand Goenka as well. On the budget, what would you say, Mr. Goenka, was one positive surprise and one negative one?
I'd say one positive surprise was certainly the focus on skilling and job creation. That has been the need, and I think the fact that there's been so much of impetus and focus on that, that's extremely positive. I think one area that we hope to hear a little bit more on was on the PLI scheme, but I do also believe that there is a fair amount of the PLI could possibly run on its own, and there could be announcements separately over time. So that would have been nice to hear from the government on.
Okay, so PLI schemes leaves more to be desired. Mr. Nilesh Shah, just, not just on PLI schemes, not too much there, but the fact that capex didn't really move up post the interim budget, was that something that you were hoping for? Along with that, the 15% corporate tax rate sunset clause not being moved forward, were those a couple of things which I think were on your wish list and didn't come through?
So if I look at it overall, capex is still 3.4% of GDP. And I think the message is that private sector has to step up, which is in many ways a fair message. If I look at aspects overall in the budget, the focus on infrastructure, on roads, and the focus on skilling, I think all of that is positive in terms of an economic growth focused budget. And therefore, on balance, I would look at that as very positive.
So on balance, that is positive. You know, gentlemen, if you will allow me, I also want to get Mr. KK Mistry into the conversation. He's with us here as well. Mr. Mistry, great speaking to you after a while. Tamanna here. I'm trying to understand just from also specifically real estate sector point of view, has the back of the envelope calculation taken place yet in your office on what this perhaps means? The fact that indexation has been removed, but the long-term capital gains tax has come down. Some are seeing it as a negative for real estate sales. Some are seeing it as no real impact.
I don't think there is any impact at all, honestly. I think there is a lot which has been done for the housing sector. The increased number of new houses which will be built under the PMA scheme, the CLSS benefit which will come through, the 10 lakh crore or the amount that will be spent, all that will come through. And as far as
others to ask questions, and we will try to take most of the questions in this press conference. Ma'am will directly answer your question without any preliminary statement. Over to ma'am. Over to question. Anybody? All question 71, please.
मैम तरुण फ्रॉम जी बिजनेस। मैम आपने आज के बजट में शॉर्ट टर्म कैपिटल गेन और लॉन्ग टर्म कैपिटल गेन दोनों के रेट्स को बढ़ाया है और रियल एस्टेट में आपने इंडेक्सेशन के बेनिफिट को ख़त्म किया है। तो मैम क्या हम माने कि जो इक्विटी है अब आप उसको बाकी एसेट्स क्लास के बराबर लाना चाह रहे हैं, इस वजह से आपने लॉन्ग टर्म कैपिटल गेन के टैक्स रेट को 10% से 12.5% किया 0.5% किया।
First of all, thank you very much for coming here. After having heard the budget, I chose not to make an opening statement because you've heard me almost for 1.5 hours, and I'm sure you have you're eager to know what is in the budget and also seek clarification. For your just for a matter of drawing your attention, we put up a single slide which has used the word employment as an acronym to capture that is everything in the budget. So each letter actually highlights the important points of the budget, and we can elaborate more on that a bit later, but employment captures everything to do with this budget, and I would like you to for a moment spend a time on it, and deriving from that everything which has been said in the budget falls in place. But with that said, yes, your question is on the point there is we wanted to simplify the approach to taxation also for the capital gains. One. Second, if anything, the average taxation actually has come down when we say it is 12.5%. Because we worked out for each of the different asset classes, each varied with the indexation. I'll ask secretaries to elaborate on it. But the point that we brought it down from below the average to 12.5, which is the lowest if you can look at the last several years, encourages investment in the markets. With that said, I'll ask Somanathan or who is going to elaborate, Sanjay, on the specifics.
So you had, there were I think 2 or more parts to your question. One was on real estate and gold and other assets. So earlier the rate was 20% with indexation. It has now been reduced to 12.5% without indexation. If you assume that the rate of return on real estate is typically above 10% per annum, and if you take inflation at about 4% per annum, the real rate of return was earlier, let's say, somewhere between 6 and 16% per annum in real estate. If it was 16%, 20% of 16% was being taxed. The effective rate was 16%. It has gone down to 12.5%. If the rate of return was 10% per annum nominal, it has also remained approximately the same at 12.5%. So actually there is either a reduction or no change in respect of the effective rate of tax on property and gold. Now, as regards the equity, yes, it has gone up from 10 to 12.5, but you'll also find that unlisted equity has gone down from 20 with indexation to 12.5 without indexation. Basically, we have a very, very simple, easy regime. All listed, all unlisted are at 12.5% long term. And all are at 20%, equities are at 20% and everything else is at applicable rate for short term. So yes, short term has gone up, and yes, long term has been rationalized. It has not necessarily gone up. And Sanjay, would you like to add anything?
One point I would like to add over here is that we also need to keep in mind as to the kind of people who are actually paying these taxes, the capital gains on the securities, the listed securities especially. And so over there, when we did this analysis for the year 22-23, we found that about 88% of the tax is actually coming from people who have an income of more than 15 lakh. 61% of that income is actually coming from people who have an income of more than 1 crore.
That is income on capital gains on this.
And we are all aware that otherwise, the standard rate is, about 30%. And for some, it can go up to 39%. So this marginal, very small marginal increase is actually impacting only those, primarily those who have an income of more than 15 lakh rupees per year.
Okay, number 3.
On capital gains.
Ma'am, Timsi Jaipuria from CNBC TV 18. You announced a very lucrative new tax regime with changes in tax slabs. A lot of new changes are there in the income tax side, on the revenue side. And in the speech, you mentioned that revenue foregone will be around 29,000 crore rupees, whereas government will now try to mobilize around 30,000 crore rupees. What will be these revenue mobilization measures, and from where do you think this foregone revenue will be recovered? If you can highlight, where are you foregoing the revenue, and where are you going to recoup this revenue from?
First of all, it is not just because we've mentioned it in this budget, but the attempt to widen the tax net is something which we've been repeatedly saying, that India's tax net will have to be widened, whether it is in the direct taxation or indirect. Second, there are also now the PSU dividends which are improving because their valuations have gone up really high. And their performance is also now substantially increased. So revenue mobilization is not just tax-based, you have non-tax revenue mobilizations which are also coming up. Then we had, for almost now 3 years, been talking about asset monetization, which is not selling of assets, but optimum utilization of those assets which are lying in the form of unutilized stadiums or land which is available with PSUs which can be utilized for better purposes. That's a third one. Fourth, you're also looking at generating resources from newer areas. So in all those, the revenue is going to be mobilized better, and as a result of which the revenue foregone will be now made up for, is our expectation. We've said that in the budget. In my speech itself, I mentioned it. And I'm sure there are secretaries who will want to add to it. Sanjay?
Ma'am, I'll give the details. 37,000 crore, 29,000 crore in direct taxes and 8,000 crore in indirect taxes. So 29,000 crore direct taxes primarily comprises of 3 taxes, which is the increase in the STT only on derivatives, which is only on futures and options. And secondly, the buyback tax, which is to be now done in the hands of the recipient. While on the one hand, it will rationalize the tax and be more equitous and fair, because those who should be paying the taxes, higher taxes, in the higher income groups, they will pay higher tax, and those who are in nil tax category or in lower tax category, they don't have to pay a tax or a lower tax. While it does that, at the same time, it does bring in some revenue also, about 4,000 crore. And remaining, about 15,000 crore should come, from the capital gains taxes. On the indirect taxes, we are losing, as I said, about 8,000 crore primarily on the reduction in duties, especially in gold. There is a huge reduction from 15% to 6%. And then there is revenue foregone because of the personal income tax rates and the standard deduction being allowed in the new tax regime.
280, please. Backside, please. Give the mic.
Good afternoon, ma'am. This is Surbhi from Business Today. Ma'am, the angel tax has been abolished, which is a very welcome move. But just wanted to understand that one of the things the angel tax was also doing was checking money laundering concerns. So could you explain how these will be taken care of now? Thank you.
Thank you very much, and I'm glad to hear it is welcome. You've been raising this issue, as with many others outside of media, also saying are you considering it? Although it was introduced during the UPA government and it was introduced in 2012. 2 years had passed, and since after that, when we came in, we tried keeping as a good governance principle, government being a continuum, the tax continued. Although we tried giving carve-outs for startups and also making it simpler, bringing parity for the non-resident Indians, the way in which they've been treated as opposed to the Indian investments and so on. Today we've announced that we will indeed remove it. Exactly the details, Sanjay, would you want to elaborate on it?
Yes, sure, ma'am. So we should be aware that this is actually a tax measure. It's not really a money laundering issue, but money laundering issue was being tackled through a tax measure. So first of all, I want to clarify that this tax, there are other provisions in the income tax itself, first of all, to find out the source of these funds. Number two, there is already, the Prevention of Money Laundering Act, which continues to be in existence. So if there is money which is being laundered, money, being paid as a bribe or for use in, other purposes for terrorism, etc., there are enough laws, including the now, the Nyaya Sahita, Bharatiya Nyaya Sahita, and the Prevention of Money Laundering Act to take care of those issues. While on the other hand, now some genuine money for investment, actually, there is this deterrent provision no longer exists, while provisions for money laundering remain, and they should be sufficient to cater to it.
I would add that there are also certain provisions of the Companies Act which can be invoked if there is deliberate undervaluation of shares. So there are other legal remedies. The balance here is between preventing money laundering but accidentally also preventing investment. So that balance is what we are seeking to get it right.
211 backside. Yeah.
Hello, ma'am. Prakash Predashi from ET Now. My question is, will the increased STT be applicable from April 1 or prospective? And if from April 1, will there be retrospective tax calculation for the increased amount?
It's not retrospective. It is with effect from 1st of October 2024. So we are giving sufficient time for the exchanges and the people, who collect this tax to put their systems in place to be able to collect it. It's not retrospective, it is prospective.
13. 11. 11.
Ma'am, Karishma here from Business Today. Ma'am, congratulations to you and everybody. Ma'am, my question is on this special assistance to Andhra Pradesh and Bihar. 15,000 crore is the number that you've given for Andhra Pradesh for this financial year. Is there further assistance that you are looking at, or is it going to be need-based in terms of the amount?
I've already mentioned in the budget speech that 15,000 crore is coming through the multilateral development assistance, which we borrow from the multilateral banks, whether it is World Bank or ADB or AIB, whatever. And I've also ended that paragraph by saying further assistance will also be extended.
There is no definitive amount?
No.
152.
मैम आलोक प्रियदर्शी फ्रॉम CNBC आवाज में मैम सवाल यही है कि जिस तरह से आप लोग न्यू टैक्स रिजीम को प्रमोट कर रहे हैं, इस बार भी आप लोगों ने स्लैब में चेंज किया, स्टैंडर्ड डिडक्शन बढ़ाया, तो ये मान के चलें कि न्यू टैक्स रिजीम के जरिए आप मिडिल क्लास को राहत देने की कोशिश की है इस बार। ओल्ड टैक्स रिजीम को लेकर क्या कोई सनसेट क्लॉज है? क्योंकि आपने कहा है कि जो इनकम टैक्स एक्ट है उसका हम लोग कंप्रेहेंसिव रिव्यू करेंगे, तो रिव्यू में क्या ये मान के चले कोई सनसेट टाइम आएगा ओल्ड टैक्स रिजीम को लेकर?
अभी मैं बोल नहीं सकती हूँ। जरूर हमारी इरादा ये है कि सिंपलर टैक्सेशन रजीम होना चाहिए, और सिंपल टैक्स रजीम की ओर अगर हम जा रहे हैं ये रिव्यू के द्वारा, वो ही हमारी मकसद होगा कि सिंपल कर दो। ओल्ड टैक्स रेजिम को सिंपल करने के रास्ते पर ही ये नया टैक्स रेजिम आया है। सनसेट होगा कि नहीं होगा वो अभी मैं बोल नहीं सकती हूँ, वो रिव्यू करने के बाद ही हम एक डिसीजन लेंगे।
और ये एक आंकड़ा मैं आपको दे दूं कि इस बार पिछली बार जो हमने परिवर्तन किए थे नई टैक्स प्रणाली में, तो 70% लोग अभी तक जो 4 करोड़ के लगभग हमारे पास में रिटर्न प्राप्त हुए हैं पिछले वर्ष के, 70% ने इसको प्रेफर किया है बनिस्बत की पुरानी प्रणाली को। तो बड़ी तेजी से लोग नई प्रणाली की ओर आकर्षित हो रहे हैं और हमारा यही प्रयास रहेगा।
Yes.
Ongoing.
Not yet.
I mean, more returns are coming in.
Yes.
271.
Hi, ma'am. This is Sumit Chaturvedi, ET Now. Ma'am, the corporate tax for foreign companies has been slashed to 35%. I want to understand the broad intent of this intention behind this decision, and what kind of benefits to economy, increase in investment you are expecting.
You've, in your own question, answered it. We want more investment to come into this country. So that is why it has been brought down.
$95.
Just to add to that, there was a widened differential between foreign and domestic companies which arose after the tax cut in 2019. When the domestic rates were cut, the foreign rates were not cut. So there was a widening of the gap. With today's change, there is still a higher rate of tax for foreign companies, but it is not now disproportionately higher than domestic. And therefore, this is something where, according to the feedback received from industry, we expect more foreign companies to invest now that this regime is adjusted in this manner.
Good evening, ma'am. This is Pal Singh from Outlook Business. You have earmarked a significant allocation towards rural infrastructure today. So how much of a boost to consumption and overall demand are we expecting here from this allocation happening?
So it is difficult to quantify what would be the accretion to demand coming from. I mean, the obvious increase is whatever we have increased. But yes, would there be a multiplier? Probably yes. I think with the Awas Yojana Gramin and the Gram Sadak Yojana, these two do have a lot of multiplier effects as well. Traditionally, for capital expenditure, the multiplier has been calculated at somewhere around 2.5 to 3. In the Awas Yojana, it may be a little lower. But yes, there would be a substantial multiplier. I don't have a precise calculation.
But other than the Awas Yojana and Sadak Yojana, Gram Sadak Yojana, there's a major push towards the corridors. For instance, I mentioned in the context of Bihar, I mentioned in the context of Andhra, 2 corridors which are moving, one from Visakhapatnam to Chennai, the other moving from Hyderabad to Bangalore, Buxar, Purnia, and so on, and building of the Gaya node in the Amritsar to Kolkata are all towards building infrastructure in the rural areas in order that we attract more investment and enable transit of goods in those huge corridors. All these are essentially going to the rural areas in a big way. And therefore, it is not just through PM Awas Yojana and Sadak Yojana, but major investments in strengthening the corridors, building nodes, and therefore also in improving the rural infrastructure is happening.
11.
Ma'am, I'm Maria Shakir from NDTV and NDTV Profit. Congratulations for creating history today by becoming the only finance minister for having presented 7 consecutive budgets. Ma'am, my question to you is about the first-timer scheme, because as you said, that employment perhaps sums up the essence of this budget. Would there be more blueprint coming out as to how this first-timers scheme will be playing out, and what will be the role of private sector?
Just 1 minute. See, this Prime Minister's package that I announced has 5 different schemes. The first timers is, I would think, one of the very, very innovative initiative. So what we are doing there is to be able to provide first-timers 1 whole month's salary as subsidy. And this will be put into their account as direct benefit transfer, but possibly in tranches. When an employer picks up a first-timer, and this is through the EPFO that you get to know that they have paid their provident fund amounts, and therefore the first-timer indicator that we are talking about will be established. So they can't just say one of the existing employee is a first-timer and claim it. There are enough checks and balances in the system to make sure that indeed the first-timer is coming in. And then the first-timers will be put through that learning curve, and this will help them to acquire skills so that they become fully productive. This kind of a subsidy giving, one, you give the first one month's salary. Two, you're also giving both for the employee and for the employer subsidy. So the applicable person for whom it is being given may even draw a wage up to 1 lakh rupees. But to the extent of 15,000 is what you're giving as a subsidy. The installments, as I said, for the first 1 month wage that you want to give will be done over 3 installments, direct into the first time employee's account. One compulsory measure that we are bringing in there is to make sure that the employee undergoes online financial literacy course before claiming the second installment from the government. So he may be a qualified engineer, he may be a diploma holder, he's a first-time employee in an office, he becomes a first-time employee and the employer also claims that he's been recruited. We try giving him the 15,000 rupees. He may have a salary of 1 lakh, but up to 15,000 rupees is what we are going to give. And in that, if you're giving 3 installments, the first installment will be given. But before he draws the second installment, he should undergo an online financial literacy course so that he can claim the second one. So we are not training him in engineering, we are training him in financial literacy. Post that, of course, the place where he goes to work, he's going to be working in any case. Then subsidy to be refunded if in case the employer removes him from the work within 12 months. So the employer gets a subsidy as well, but he will have to refund it if within 12 months this first-time employer has been removed out of the work. This will cover, and we expect it to cover, 1 crore persons per annum. And the scheme will run for 2 years. So up to 24 months, you can have new employees brought in, new first-time employees brought in, for whom the government will give 15,000 rupees as from our side, 1 month, what we think, 1 month's salary. Although his salary may be any amount, but to a cap of 1 lakh. And then he undergoes some financial literacy course, post which the second installment and the third installments can be withdrawn, put into his account. But most important is if the employer removes him within 12 months, the employer will have to refund the subsidy given to the employer. So that's how that scheme works.
278.
That's it. If I may just add, details are available in the budget speech in the annexure on page 31. So there are details of all the 5 schemes in this package. If you go through them, there's considerable amount of detail which you can get.
Hi, good evening. This is Priyashmita from Informist. I have 2 points from the budget that I would like to ask. The first is nominal GDP has been pegged at 10.5%, and we have seen that growth is on a high momentum, and even the RBI has pegged growth at 7.2%, and the Econ survey said that it is going to be between 6.5 to 7%. So a 10.5% nominal GDP looks a little conservative. What is your view on it? And the second is that there's a mention that beyond FY26, you would want to reduce your debt to GDP. And you've mentioned that, the 4% debt to GDP it's a thing of the past. So what do you think is a sustainable debt to GDP or a desirable debt to GDP at this point? Thank you.
What was the first question again?
Conservative nominal GDP projection.
See, 10.5% could be a combination of 7% growth and 3.5% GDP deflator. So a combination of wholesale price plus consumer price could easily be 3.5%. That's a very likely scenario. So 7 plus 3.5, yes, it is slightly conservative, but I don't think it is way off what is likely. Or it could be 6.5% growth and 4% inflation as per the deflator. So I think the number is reasonable, slightly conservative, yes, but we would prefer to achieve the numbers. Second, on the path after 26-27, which has been outlined in the Finance Minister's speech at the end of the Part A. So the commitment, as she has mentioned, is to endeavor to reduce the debt to GDP every year. That is in future the fiscal consolidation path. What is the percentage that would result in that fiscal consolidation is not something that we are disclosing here today or can disclose today. It will depend on circumstances. But there is a commitment to lower the debt to GDP ratio. So if every year it has to be reduced, there will necessarily have to be a particular level of deficit which we cannot exceed. And that will depend on prevailing growth rates, interest rates, and the other parameters which go into the calculation of the debt dynamics. But I can tell you that it is most likely to be a figure not above 4.5%.
249.
मैं सुनील सौरभ बोल रहा हूँ। मैं आप पहले तो आपको काफ़ी बधाई दे दूँ कि बहुत अच्छा बजट आपने पेश की है। दूसरा मुझे ये जानना है कि रेलवे के लिए क्या कुछ खास रहा बजट में?
Which organization you are from?
कौन सा पत्रिका से?
पेपर में हूँ, लोक भारती पेपर है।
सॉरी?
लोक भारती।
लोक भारती।
जी हाँ। तो पहले तो बधाई दे दिया हूँ मैं आपका, बहुत अच्छा बजट आपने पेश की है और रिकॉर्ड भी की है। 7 साल से लगातार आप वित्त मंत्री के रूप में काम। मेरा कहना है कि रेलवे के लिए क्या कुछ खास हुआ है, क्योंकि कोई जानकारी हम लोग को अभी तक नहीं मिली कि रेलवे के लिए क्या गया है। दूसरा, मैम, रेलवे में सीनियर सिटीजन्स को कंसेशन मिलता था। आप यहाँ पीआईबी में है, पीआईबी जर्नलिस्ट को भी कंसेशन मिलता था। कोरोना में वो बंद हो गया। कोरोना को ख़त्म हुए भी 2-3 साल हो गए हैं, तो फिर से ये बहाल नहीं हुआ। क्या इसकी उम्मीदें हम लोग कर सकते हैं कि आगे बहाल होगी या नहीं?
रेलवे का जो एक्सपेंडिचर बजट है नेक्स्ट ईयर, इट्स 255,393 crores, which is the highest ever, and a very substantial increase in recent years. So that is a very large amount of investment in the railway. So I think there is a very adequate provision.
जर्नलिस्ट के लिए
ठीक है, सुना।
277 प्लीज।
इसमें सीनियर सिटीजन और पीआईबी जर्नलिस्ट को भी जो स्लैब में रिवीजन हुआ है उसमें फायदा है। सीनियर सिटीजन को फैमिली पेंशन में स्टैंडर्ड डिडक्शन का फायदा हुआ है। रेलवे में, अच्छा ठीक।
हेलो मैम, दिस साइड हर्ष कुमार, दिस साइड फ्रॉम बिजनेस।
वो बजट का फायदा जो दिया है सर, वो भी तो मिलेगा सीनियर सिटीजन को और सबको, रेलवे में भी मिलेगा।
Hello ma'am, Harsh Kumar this side from Business Standard newspaper. So ma'am, during your speech you mentioned about the FDI liberalization. Can you give a bit detail about it?
We are trying to, since 2014, bring in ease of doing business in India, and in every sector where there was only 26% allowed for FTA, we raised it to 49, and then where it is possible we've raised it to 74, and so on. So there's been a consistent, continuing effort to relax our policy towards FTA. First it went sector by sector, then there was this approach taken so that most of which can go through the automatic route. So in that process, further simplification, if necessary, we are willing to do, is what is conveyed.
Also, ma'am, you have like increased the Mudra loan limit to 20 lakhs, like that cap. So can we expect the increase in Shishu, Tarun, like their types increase? So how much it will be? Can you give detail on that?
We've said this only today. See how this works.
Okay, thank you.
I request you to please one question each person. 123, please. Here.
Shrimi Chaudhary here from Business Standard. I just wanted to understand that budget proposes withdrawal of equalization levy. So if you could just give some explanation of what led to that, what is the intention behind that, keeping in mind the pact between India and US which has ended on June 30th.
No, as the Pillar 1, Pillar 2 negotiations have been going on since 22. And since then, one of the things which was becoming more than obvious was, if at all we are going through this Pillar 1 and Pillar 2, which we intend to, the negotiations and the OECD, backed by the US administration, have all been pushing for this. We wanted a fair solution, so negotiations have been going on. But the point of contention from then has always been, should we collect an equalization levy then, if at all we are getting into this global understanding through the Pillar 1 and Pillar 2. In any case, for India, equalization levy also meant for those who are living abroad that you were holding it, but eventually they are going to only adjust it somewhere. So in the interest of moving towards Pillar 1 and Pillar 2 solution, which the negotiations are still going on one aspect of it, on the other, in all probability, we are close to a conclusion. It was necessary for us, through the Parliament, to take steps to ensure that we are entering into that scheme of things without this equalization levy hanging on us, because this was important for us, but if it is a global system, this cannot continue. And therefore, with a positive approach towards the Pillar 1 and Pillar 2, we've moved forward to inform the Parliament that we would like to close this.
270.
I may clarify that it is only the 2% levy which has been withdrawn. The 6% levy which was earlier imposed, that continues.
What will happen to the tax collected so far from all these companies under this 2% utilization?
That has already been collected. We'll see. I mean, it is only this withdrawal is only prospective.
Ruchika from Business Standard Desai. Ma'am, the miscellaneous capital receipts have seen an increase in this budget to almost 50,000 crore. Is there the miscellaneous capital receipts?
Okay.
Can you share the government's game plan as to how will we achieve this increase?
The miscellaneous capital receipts are budgeted as 50,000 crore, which was like 23-24 also, it was 51,000 crore, the interim budget. Now it's 50,000 crore, 24-25. And this combines with all kinds of receipts which are otherwise disinvestment receipts, asset monetization receipts and other kinds, which will be clubbed with that. So this budgeted figure is 50,000 crore.
Ma'am, very good evening. Sapna Das here from CNBC. Ma'am, two questions. On the incentive-like employment scheme that you have announced, 2 lakh odd crore is your overall fiscal envelope over the duration of the scheme. Could you give us a sense as to, we are already almost halfway through the current financial year by the time you pass the budget. So practically around 7 months will remain for the financial year. But any kind of an allocation that you have done for this scheme for this year, ma'am? One is that. And ma'am, just a corollary also on on the miscellaneous receipts question, though not very much part of this budget, but nevertheless, ma'am, government had a very, kind of a bold privatization program. Do we understand that this is now being calibrated? That's it, ma'am. Thank you.
First question. Yes. As you rightly observed, there are only this is not a full financial year. The schemes have just been announced. They will now go through a process of quick design, appraisal and approval. However, budget provisions have been made for these schemes, partly in the Ministry of Labour and Employment and partly in the Ministry of Corporate Affairs for the internship scheme. So from memory, I can be corrected. I think it's 2,000 crores has been provided for the internships in the Ministry of Corporate Affairs, and about 5,000 crores has been provided in the current year in the Ministry of Labour and Employment. But we stand committed to funding them fully to the extent that may actually be required. These are just very rough estimates based on how much time it might take to kick off. On the miscellaneous capital receipts?
Well, I think in the interim budget, FM had announced, we are going for a holistic strategy for management of equity in PSUs. And I think which includes, value creation and also, using the performance, the capex, the dividends and consistent dividend policy and the capital management all together, and also the calibrated disinvestment strategy, which also includes listing and market dilution, but all together in a holistic way so that value maximization is there. I think the same strategy is going to continue.
122.
Hi, Rishabh with NDTV Profit here. I have two questions. One on the space fund that was announced, the 1,000 crore fund. What will be the composition of this? Which will be the nodal agency, and what sort of startups will the government invest in? And on the NPS, you also mentioned that the NPS committee has made progress in the speech. Could you elaborate a bit on that?
So we have seen that there's a lot of interest of the private sector on participating in the space program. Hitherto, the participation used to be on being a supplier to the space program, but now development of the satellite, mounting experiments there, they're getting into that space. And if you recall, even FDI was opened up in that sector. This is an attempt that Indian entrepreneurs, Indian startup who want to risk capital to get into that area, that should be facilitated. We believe that the amount is 1,000 crore, but that can have a very large multiplier effect. And that's what the scheme announces.
On your question on I think your second question was on the government NPS, right? So as you know, there is a committee which is looking into it. The committee has done a lot of detailed calculations of the fiscal implications of different ways of addressing what are the expressed sort of priorities of the employees. We have been in dialogue with state governments. We have had discussions with each and every state government. We have met the staff side of the government has a staff consultative machinery, a formal machinery. We've had 4 meetings of that machinery to understand what are the staff's priorities. And our attempt is to design something that is fiscally prudent, but also meets what are the core priorities of the staff in terms of having a secured retirement income which provides for their needs. So this is a balancing act, because obviously there are costs. The more you give, more expensive it is. And so we are at an advanced stage of working out various options, and we are also discussing these options with the staff side. Just to correct the budget estimate that I gave earlier, 10,000 crores has been provided in Ministry of Labour and Employment for the new employment schemes, and 2,000 in Ministry of Corporate Affairs. Yeah.
125.
Good afternoon, I'm Nikunj from Reuters. A follow-up on that FDI facilitation, you said that government will take steps to facilitate FDI. The Eco Survey also yesterday said that the government should import capital from China so that there's a right balance between investments and trade. So will the government also take steps to quickly facilitate investments from China that have been pending for long? And secondly, you've come up with an NPS for minors. So will that also have some sort of tax benefits to nudge people to enroll for NPS so that pension coverage increases? Thanks.
See, Economic Survey gave its view on the investments from China. As things stand today, investments do go through the Press Note 3 process when it comes from China or from any of our neighboring countries. So that process is still on. Economic Survey has indicated that it might be time for us to open up and allow for. So that's a Economic Survey. I'm glad that the Secretary is seated here. It's normally an arm's distance. But that doesn't mean that I'm disowning the suggestion. You want to say?
In general, as you can see, our aim is tax code simplification and not complication. So beyond that, I don't have anything specific on that. But the general direction of travel is obvious. We are not creating more and more tax deductions for individual tax instruments.
रिस्पेक्टेड मैडम, मेरा नाम नरेश वत्स है और मैं स्वतंत्र पत्रकारिता करता हूं। आज जो आपने किसानों के लिए और ग्रामीण क्षेत्र के आधारभूत संरचना के लिए काम किया है, उस पे दो तरह की राय आ रही है। एक राय तो ये कहती है कि गालिब ने ये कहकर तोड़ दी तस्बीह, क्यों गिनकर नाम लूं जो बिन मांगे बेशुमार देता है। एक वर्ग तो इस तरह से तारीफ बजट की कर रहा है, लेकिन दूसरी तरफ प्रतिपक्ष के नेता राहुल गांधी ने कहा है कि आंध्र प्रदेश और बिहार पर जो दरियादिली दिखाई है, कहीं न कहीं ये लगता है कि ये कुर्सी बचाने का बजट है। अखिलेश यादव जी भी ये कह रहे हैं, आप कैसे देखती हैं?
जिन इंडी अलायंस का मेंबर्स साथ होकर के भी 230 पार नहीं किया और जहां बीजेपी अकेला 240 तक पहुंचे और प्री इलेक्शन अलायंस के साथ आज सरकार तीसरी बार बनाए, प्रधानमंत्री जी का तीसरी बार, स्वतंत्र भारत के चरित्र में पिछले 60 साल में जो नहीं हुआ अभी हुआ है। कुर्सी बचाने के बात करने वाले पार्टियों थोड़ा सोच ले। उनके अलायंस 230 कुल मिलाकर कितने पार्टियां थे? 25, 26 पता नहीं, मैं गिनी नहीं, बट इंडी 37 पार्टीज कुल मिलाकर के 230 पार नहीं किया और वो बोल रहे हैं कुर्सी बचाने के लिए। जब प्रधानमंत्री मोदी जी तीसरी बार प्रधानमंत्री बने और देश के लिए इतना घोषणा भी कर रहे हैं जिससे भारत देश का हर राज्य सामने आए, डेवलप हुए, और 1.50 लाख करोड़ इस बार बजट में स्टेट्स के लिए हम दे रहे हैं बिना इंटरेस्ट 50 साल के लिए फ्री। फिनांस कमीशन तो हमारे उनके सजेशन में इसका जिक्र तक नहीं किए, हम ही कर रहे हैं स्टेट्स के साथ काम करने के लिए। हर स्टेट का उनके अपने अपने प्रोजेक्ट्स जो प्रोसेस के चलते हुए आता है उन सबको हम मानते हैं और ज़रूर उनको जो फाइनेंस करना है वो हम करेंगे, मगर जिक्र इसलिए नहीं किया बजट में कुर्सी बचाने। जब उनका टोटल को एक और बार चुनावी सीट जो जीते हैं वो 101 और बार उसको गिनकर देख लें, 237 पार्टीज कुल मिलाकर के कुर्सी बचाने वाले बात बोलने का अर्हत अधिकार उनके पास नहीं होता है।
121.
Ma'am, Meghna Mittal from Money Control. In the union budget, you have announced financial support to MSMEs for shift to clean energy and also a new mechanism for credit so that they do not go into stress and they do not turn into NPAs. Any details on that?
I'm so glad you asked this question. I'm really glad because this budget, and I don't want to say it because I've presented it, I'm so grateful that the Prime Minister looks at every sector and says, what are we doing for them? What are we doing for? This has been his approach always. But this time around, we've spent a lot of time understanding also from those stakeholders who had consultation with us pre-budget. And MSME's request it has been for now several years that when they reach the SMA 1 stage itself, they get to be very, very tensed because banks stop their finances, meaning banks no longer lend to them. They are stressed as it is. And if they are stressed as it is, and if there is this threat that the bank will not further give them working capital, sooner, by the 90th day, they become NPAs. In order to give them a good workable solution, and I'm indeed grateful to this entire team of secretaries here, they spent a lot of time also talking with RBI to see how best we can address this issue. And RBI has also a very well established framework which we are quite respectful of, where banks are clearly given a bit of a margin to handle MSMEs at the SMA stage 1 itself, without pushing them to become SMA 2 stage, and then at the 90th day announce them as non-performing assets. So what actually has happened now, having discussed with the RBI, is that we'll provide them with a fund which will help them to have some kind of government guaranteed liquidity, or the banks can then, on the basis of the guarantee being given, on the back of the guarantees which are being provided by the government, lend them working capital and keep them moving. And if they restore themselves, they're going to be better off. So on this principle, I'll certainly ask you or Vivek to speak and explain it to you all.
As FM has already explained about the credit guarantee scheme, this will certainly facilitate the term loans without collateral or third-party guarantees. Then new assessment model for MSME credits, which will be based on their digital footprints and the kind of payments they are making, such as their PF contributions, salary payment, and other transactional data. This will help the banks in access to credit even during the stress period, for which some kind of support fund will be created, and based on the guarantee provided by that fund, they will be helped during the SMA 1, SMA 0 or SMA 2 periods. Then Mudra loans limit has been increased from 10 lakh to 20 lakh. Similarly, enhanced scope for mandatory onboarding in TREDS platform has been also reduced from 500 crore to 250 crore of turnover. SIDBI will also open more branches in MSME sectors.
In short, what it does is, for the MSMEs, through this one budget, we've announced 8 different steps, each one of them addressing this particular problems with MSMEs face, and for which the MSMEs during the stakeholder consultation wanted us to give them some solutions. So specifically 8 of them have been designed to address that. So
I would just like to supplement 2 of the points. One is the credit guarantee scheme in the manufacturing sector of up to 100 crores for the acquisition of capital equipment, machinery, etc. So this is an idea which came from the MSMEs, as the Honorable Minister said, stating that typically MSME credit is for working capital, but they sometimes have needs to invest, and it could even be a new MSME enterprise which needs to invest in equipment. So the proposal in this scheme, which has also been discussed by a working group chaired by the Chief Economic Advisor with the Reserve Bank, with the credit guarantee institutions, is a self-financing mechanism an MSME which wants to avail of a credit guarantee for this term loan will have to pay an initial upfront guarantee fee, followed by an annual top-up fee which will be based on the reducing balance of the loan. So there is no subsidy from the government which is envisaged in this scheme, unlike the CGTMSE, which is a working capital loan scheme where the government actually provides the corpus. In this case, the corpus itself will be self-financing, coming from pooling of MSMEs' upfront fees.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Nilesh Shah, on my show, Talking Point.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option.
Welcome, and you're watching a budget special coverage on NDTV Profit. You might miss Alex because it's the editor's cut, but I'm fronting it, and with me and four of my colleagues, we are going to try and tell you what the editor's take on this budget is. This is the top editorial team of NDTV Profit. With me, to my left, Sajid Mangat, to my right, Tamanna, Samina, and Muralidhar Swaminathan. Okay guys, let's try and set the basics of what stood out in this budget. Murli, you've had the most time off air, so let me start off with you.
Okay.
What did you make? What are the key takeaway for you?
Okay, so the most important takeaway is not about tax, it's not about capital gains tax, it's about the 5-year roadmap. Very clearly, that is what the agenda is. We should not look at it from what's going to happen now to your capital gains tax or real estate capital gains or income tax. Of course, there are benefits, but look at what is set for the next 5 years. That's what we need to look at, and that is where I think maybe the market is recognizing that. So you would be able to elaborate in the course of the conversation. 3 things stood out for me. One, very clearly, the agenda to create jobs. That's the top priority, not just now, over the next few years. Once you focus on creating jobs, your consumption will continue to grow. So in any case, we are going to be a consumption-led growth. And the message here is very clear. The capex has not been increased from 11.1 lakh crore. That's not been increased. All the focus is on jobs. The other focus is on welfare schemes. As far as jobs are concerned, there is a shift in strategy. In the past, you will say that I'll build a road, I'll create jobs. Now it's different. You are giving incentives to employers, perhaps I think in recent years, Sajid might allude to this, we have never heard of incentives to employers for job creation. So that's a big shift. And then the welfare schemes that are being evolved are based on asset generation model. So these two things will help sustain the growth. For us, sustaining growth is going to be important. All the other things will follow later.
Okay. Now, we'll make this freewheeling so everybody can come in whenever they want. But, okay, Samina, to you, what stood out for you?
I think this is the very first time, Neeraj, the economic survey was rightfully reflected in the budget. So it wasn't two different tales in so many words. Fiscal consolidation, the fact that they're going to be disciplined about this and do better than what they'd initially promised is a huge positive. Apart from that, I think the fact that they've kept the capex number unchanged, it's a direct message to the private sector saying it's now your time to do your job. We've done what we had to. It's now time that you play ball. And I think that stands out. So while employment is very, very important, the onus will be back on the private sector to do what's needed most, which is capex, hire more people, build the manufacturing. And I think one last one is the commitment to simplify the tax code. Again, a big standout, because if you've got to draw an FDI, we have to have a simple tax code. While the rates could have been tinkered with, simplification is a key positive.
Yeah, and I think in some sense, one good thing was that we know that the top 30 or the top 100 or 200 firms are doing the capex, which they have, green energy, etc. The bottom rung, the MSMEs are not. And in some sense, this ability to tell smaller companies that we are giving you incentives for employment, so on and so forth, let's see if that brings about some bit of capacity build-up or capex at that end, because that has thus far clearly been missing. Tamanna, your take.
That's
Sorry.
exactly the point, right? The capacity building or the job growth is going to come in from the MSMEs and the mid-cap kind of companies and not from the top companies here. Now the question is that whether they have that incentive to pick up that capex and go ahead. Do they have the capital to do that? That's the thing which we need to see now.
Also, just to add to that list, even Gift City, we didn't talk about this very much, but Gift City has been very significant to the government in order to bring all that foreign money in and localize everything. So creating jobs, pushing for growth, that could be an impetus for Gift City to go out there and hire people and expand that offering that is there.
Yeah, and there are points around the foreign companies as well, and we'll get to that. But Tamanna, yeah, the tax changes, but your initial take, Tamanna.
Okay, so I would say, and a bit of taking this opportunity to crow a bit about NDTV Profit's coverage, but if you had watched us in the run-up to the budget, a lot of what our experts said, a lot of what we said has come on those lines. And why am I saying that? So Manish Sabarwal, for example, when we talk about employment, and that's one of the foremost voices, comes and says that if you want to really create jobs, don't focus on those looking for jobs, focus on those giving the jobs. And if you look at what they've done in this budget, I will incentivize you if you hire more people. Correct. I will give you a subsidy on their PF. Okay, you have to hire interns for 12 months, pay 10% out of your CSR. I'm making it easier for you to give jobs. The other thing that we said, that any tax relief will come on the new tax regime. The Section 80C dreams we should forget about. And that's exactly what has happened. We also said that there will not be populist measures towards the rural economy as is being expected. And look at what they've talked about. They've talked about incentivizing farmers to have climate resistant crops, more R&D, etc. No huge outlays like were expected. I think the joker in the pack really, and which was something that we'd also said, was on capital gains tax. The long-term capital gains tax is going to pinch. The exact impact of it will be known in the next couple of days, whether it's on fixed assets like real estate, gold. The markets, in my view, will be fine. They will get a bit of a hit initially, but they'll learn to live with it because people have made money. So if you have to pay a little more in terms of tax, it's okay. It's something that will be swallowed and tolerated.
On the capital gains front, my view is that the promoters who are coming out with IPOs are not going to put in their shares in the IPOs now. They will wait for the stock to list before they exit the stock. Because the fact is that the indexation, the grandfathering which was available for unlisted stocks have been removed. So basically what happened in 2018 was that there was a grandfathering on the price at that point in time, and many of the unlisted companies were using that as one of the clause for to get a lower capital gains. Now that has been removed, which basically means that now they are taxed at full rate, which 20% for long term and 30% for long.
Private equity, which has been aggressively selling out, will now stay in.
You'll stay in till the.
So that's actually a good thing, right? Because
but then you have a lot of block deals and other stuff coming in because they will exit after.
But Sajid, this was for 2018, so private equity which has come in post 2018 doesn't have this benefit effectively.
Anyway,
you're talking about promoters who own the equity in the company before 2018, not incentivized to
so maybe venture capitalists, right? Not even that much late stage private.
There are hardly
a lot of companies now get listed after 3 years or 4 years of operations. So all of those don't, but
Neeraj, it's the pre-IPO phase anyway is not counted here. Yes. Private equity still comes in 3 to 4 years anyway out before a listing, right?
Exactly.
Also, just to quantify that capital gains increase, and Sunil Singhania said this, and I think there's merit in it. He said, first, if you were gunning for 15% returns on your portfolio, by increasing your capital gains from 10 to 12.5%, the impact of that is 35 basis points on your returns. So now instead of saying I'll stay invested till I make 15%, my goalpost is 15.35%. So of course that's simplifying it too much.
On short term also there's a bump up.
Then that's the trader's money any which ways. It's not sticky.
Absolutely. I'll tell you my problem. Sorry, just one point here. I'll tell you the problem with this taxation. One, very simplistically, 12.5 is not a rounded number. I think in the first year of the budget, they have not come out and said, okay, we are doing it X% and Y%. Now this is the tax for the next 5 years. It is open. As of now, no comment about whether this is the end of it.
Yes.
I think the market may, in its wisdom, believe that this is a start. We do not know where it will end. I mean, for all the talk of tax and tariff predictability and continuity, this is the missing piece. I hope at some point of time in an interview, they clarify about whether this is it for the next 5 years or could there be more? Because you don't want uncertainty. Even if they've done this, it would have been great if they had come out and said, it's 12.5 and 20 and for the next 4 years, we don't foresee any increase. At least there is some predictability. In this case, that predictability about taxation regime on capital gains is missing. I wish that comes in.
But to be fair, when the last time we tinkered on capital gains, we never said it's going to be there for 5 years.
Yeah.
So it was there.
So stable.
No government will do that.
No government has to promise I won't tax you more. For a longer period of time to assess how the capital gains is working.
The reason why this time it's important, sorry, I'll just spend 30 seconds more here. The reason why this is important because now the market in its wisdom might want to believe that they want parity between all asset classes.
Yeah, exactly.
And equity taxation is still lower than some of the others. So will the market now fear that a higher tax is around the corner? Could it impact global investments? That's the only...
No, I would like to answer this question. I would like to answer this question.
Just before that, while that could be a fear, let's not forget that the markets were down 400 points when these announcements were coming through. But we've gone home with a 30-point cut on the index, even though the breadth of the market was weak. We've taken it in our stride, at least for today.
No, so the 12.5%, Samina, is that it's part of the rationalization because you were taxing capital gains on the basis of different asset classes, something for property, something for gold, something else for debt. That was done last year or the year before they rationalized that one. So this is part of the rationalization. That 12.5 is your bench. Now from there, like it's 12.5 for everything. Indexation is gone. So they have to rationalize that part. And somewhere I think STT will also be kind of rationalized.
My question is on F&O, there was a huge scare. What has come is this STT tweak. My question is this just the beginning? Are they done with are they done with their attempts to curb the large volumes coming into quote-unquote speculative trade?
No.
The consensus is no on this table?
Seems to be
consensus, the markets may be cheering STT today. The reason being that the finance minister hasn't converted gains from F&O as a speculative income, and so it will be charged to your
so not as bad as you would expect.
Not as bad as expected.
But that is still at the highest tax level.
If you end up paying 1,000 rupees more,
why speculative income is taxed at the highest tax bracket anyway?
It's not been categorized, right? trading from F&O is not being categorized.
No, it's business income.
It's
business
income.
Categorized as business
Simple,
income, which is your highest tax.
But that's the highest tax slab
Yeah,
tax.
but it's one of the things which market was expecting is emphatic increase in that taxation rate.
How can
or
they do it?
categorization which was there. But point
Anyways,
is that if you look at the breakup of the turnover of SCT, it's the proprietary traders who are the biggest traders in this market. And the impact for them is hardly any in that sense.
So no impact there. Okay.
So because retail is not going to go away because just STT has gone up. There is hardly any.
Fair call. Okay. Now, before I give my take, Sajid, your quick take.
My entire thing was that there should have been an increase in capex from 11.1 lakh odd crores, because there was a fiscal room available for them to increase it. Unfortunately,
we have taken that.
Cost of the glide path
was used to convince and take care of Andhra Pradesh and Bihar and Orissa.
Can the
Andhra
economy
Pradesh, Bihar and Orissa is not been funded from the budget. It's multilateral loans which they are going to do it. So it's not the budget which is funding it.
So where is that
15,000
That's a small number. That's a small number.
15,000 crores is going to Andhra Pradesh from the budget.
But that's a small
Bihar
number.
flood relief, all
everything is-
But that is to multilateral agencies.
No, but all the expressway projects will come from the budget.
All are part of the NHAI budget anyway.
And rebuild the bridges which crashed.
That's the tax buoyancy which is helping you, right? To 4.9.
Maybe it comes at the offset
I'll
of
give you an
divestment
example.
receipts not coming in.
STT collections were expected at 36,000 crores for this FY25.
Where is the money, Sajid?
The money is here, right, in STT.
No, but that's not the point, Sajid. Sorry, just the counter to your point, though. There are 8 months left in this fiscal. Don't look at the percentage, but the absolute number of capex announced in the interim budget was fairly high. You couldn't do anything because of Achar Sanhita. How will the economy absorb so much of capital in 8 months? I don't think the Indian economy is primed to absorb so much.
And private sector is
private sector needs to
Private sector is already doing
catch
it.
up.
It's not happening to that extent.
So at some point of the private sector needs to do it, because how long can the government do? Anyways, it's debatable, but this is one point. What else is your top take?
The other thing was the tax buoyancy. I think they have taken a very conservative approach with respect to tax revenue collections, which is there. I believe that there is much more buoyancy there, and that could have been used for
It's
more.
good to be conservative.
It could be. It could be. You can say that, but then you can use it somewhere else as well.
Maybe they will use it if the money comes in. Okay, fair call. Just very quickly, my take. I mean, one thing that stood out. I mean, I just like the fact that while the going is good, they have gone ahead and done a 4.9 number on the fiscal deficit, because one doesn't know if the economy slows down, whether they have enough ammo to move from a 5.1 to 4.5 in FY26 versus moving from 4.9 to 4.5. Because remember, when S&P changed its outlook, S&P mentioned that the state plus central should be 7. We know state is usually 3.5. So the central needs to move to 4%. So they need to show that glide path. They've done it 4.9 admirably now. Go to 4.5 presumably, and then cite 4%.
Let me give you the other side of that equation. If state plus center has to be 7, center is becoming more conservative, because a lot of states will have to be spending ahead of two crucial elections, Maharashtra and Haryana, and state governments are with the same party. So, you have to give yourself some room. States will have to be spending all of your schemes to help farmers, subventions, a lot of that. Ladla Beti, Ladla Beta, all of that is coming on the state government's books.
Yes.
And you have to make room for that. So maybe that big
major
picture.
Reforms which you are missing is land and labor.
Yeah,
Labor is yet to be notified. But labor is yet to be, both the state subjects, but they're linking the land reforms to the central grants, which is very good thing, because we saw that what happened to power sector, right? Means the discoms were not paying, were not getting the money, and distribution companies, the first right of money went to them, and so if you're going to link your capex cycle to land reforms and the labor reforms, there is a chance that in next 3 years you're going to achieve these things, and digitization of land and a better data pool of labor is going to be a big asset going forward.
Maybe off budget items, but who knows? Let's see. Anything else, guys?
I want to ask Neeraj a question. Two-part questions. Why did the market fall initially, recover and close flat, except for some sectors? Part number one. Part number 2, how will the markets behave tomorrow when you go back, read the fine print, understand each sectors? So will the action be very sector specific and stock specific tomorrow? What is your take?
I made 2 or 3 phone calls after I got off air. The sense that, and it's a limited sense that people in the markets have, but the sense that I got is that the capital gains uptick was disappointing and there is an uncertainty there. Do we see a bit of a reaction in the days to come and not just tomorrow? Very likely. Is it a certainty? No. You know, a lot of people talking about how the quantum of cash that domestic mutual funds were sitting on, and it will be interesting to see the buying figure today, that may have brought it. I doubt that mutual funds would buy into the market just on a 1% or 1.5% downtick. So I think that side of the equation need not necessarily be true. Remember, we've been falling for Friday, Monday, Tuesday we fell, so it's 3 days of a fall. Some bit of short covering might also have happened. It'll be important to look at the cues today evening, both the institutional number that come in and the derivative action that has happened to try and figure out. But is it the end of the road? I think most people said they would want to wait and watch. They are not able to predict right now whether the markets will necessarily go down tomorrow or not.
Historically, I think the belief is it's back to business. That budget euphoria or disappointment is only for the
I guess Bajaj Finance is not.
People are relieved the budget is over. You can get back to the nitty-gritties, and it's I mean, because that's the theme right now. It's a graze from the ear, not a shot in the head. since we are in that stage, it's not a complete assassination of the FNO kind of euphoria. It's just a graze to the ear, and maybe that's something that will be digested. Markets will come up with their fists raised high to get that.
Cross fingers for that.
Trump reference.
But guys, we have 4 minutes or 5 minutes left. Anything else that stood out? Anybody? Very quickly. Let's make this quick now.
I have just one take on Nirmala Sitharaman. Okay, because when she came in as finance minister after the late Arun Jaitley, passed away, and this is just something I've seen chatter. She was initially underestimated. A lot of people on Twitter, love to take on her. Consistently performed on the 2 or 3 key things that finance ministers are judged on. Are you tightening your belt on fiscal glide path? Even during COVID, did not let things go out of whack. No free hand on giving away freebies, which will wreck the balance sheet. Been very, very conservative, clear-headed, no nonsense. And has not had to roll back too much, which in the history of Indian budgets is something that happens all the time. So a word here, even after these elections, it was being speculated, will Nirmala Sitharaman get the finance portfolio again? Will there be other contenders? She's been, I would say, the dark horse in this race who has emerged very, very strong with a solid track record.
And I don't think anybody will contend with also. The one time that she had to roll back, she did it very immediately without any kind of issues. So I think no contention out there on how well the FM has performed. Really full marks to her.
Yeah, no, I have a point to add. See, the overall budget philosophy, we came to know, our viewers, network viewers, NDTV network viewers came to know from the Prime Minister when he gave an interview to our editor-in-chief, Sanjay Pugalia, very clearly these 5 key priority areas. He said, this is what I'm going to focus, and the budget is focusing, apart from all the other changes that have happened, farmers, jobs, welfare schemes, uplifting poverty, MSMEs, and women, and state competitive federalism. So she is focused on all those 5 areas. Now, it's a question of implementing them over 5 years. So just to remind the viewers that the PM's interview to NDTV network highlighted all these things.
Yeah, and I think it's an important point. That's a 5-year piece. But anyways, we can go on with this. Samina, Sajid, any last points? Anything else?
No, I think from a personal taxation front, I think people would be happy that, okay,
Section 80C deserved a little bit more lease of life, but that's clearly not
maybe she wants you to go to the new tax regime.
And even on women, I must say, on women, there's a request to states to make it easier for women to buy properties. That's
reduce
pretty
stamp
much.
duty.
It's a request
Some
to
of the states already have a lower stamp
so
duty
it's
for
asking
women.
states to do it. So nothing really.
Yeah, buy properties but don't sell.
There's nothing really, nothing really
There's
as
no
of today.
indexation benefit for
Nothing
you.
really
What
today
was-
as for women.
Yeah, what was missing, I thought, just one last point from mine. I think in the interim budget, they had made this very interesting thing, and I missed it maybe, but they had made this very interesting provision or mention about 1 lakh crore for research, because you know R&D activities need to step up. I was hoping something would be mentioned around that.
They have retained it.
Anu Sandhan,
They've retained it.
She
briefly
retained it, I think.
Yeah,
But I
just
think
that's it.
tough for investors, good for jobs, good for employment, good for the young, and good for political priorities as well in some ways.
Didn't give
And
too
done
much.
very well.
Didn't give too
Didn't
much to
give away too
allies.
much.
Done
Didn't
very
give
well,
too much
that's the
to
point.
allies either. Kept them all happy. They can go back to their constitutions and say that Andhra Pradesh and Bihar got what they deserved, but hasn't given too much away.
Got a lot.
Yeah.
And
I'm
not
talking
giving
in
away
terms of
too much.
allies, but of course, Northeast,
There's a new
Odisha.
state.
It was just high on headline value, right?
Yeah, but I mean, which is great. A budget shouldn't essentially be necessarily a market moving or economy moving event. It should be a statement of accounts, and I think in that sense, this has turned out very well, save for people who will look at taxes because there are a lot of changes there. But, well, that's it on this edition of the Editor's Cut. We hope you found it useful. Thanks so much for tuning in. You can mention in the topics comment segment what did you feel about this. And remember, stay tuned to NDTV Profit for more news and updates today evening, as well as tomorrow morning, a power pack lineup to take you through the finer points of what the union budget had to dish out for the economy and for the investing fraternity.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Hi, thanks so much for joining in. You're watching NDTV Profit and my name is Alex Matthew. This is a special broadcast on Budget Day to help you understand the changes to the tax laws that affect you, the individual taxpayer. And there were a whole host of announcements that were specifically aimed at you this time around. And by the way, if you've got questions related to anything that we speak about over the course of the next half an hour or so, I'd encourage you to send them to us on any of our social media platforms. My guest today, who are going to help you understand everything that has changed from this year onwards, is Sameer Kanabar, tax partner at EY in the studio, Puneet Shah, partner at Dhruva Advisors, who's joining in remotely, as well as Arvind Rao, the founder of Arvind Rao & Associates. Thank you so much, gentlemen, for taking the time. And the intention, of course, of this show, as I pointed out, is to help our viewers understand everything that has gone down. But before we start, let's talk about who this is affecting, because it is affecting two cohorts primarily. We're talking about individual taxpayers, and there are several changes that have been announced to the new tax regime to incentivize it further. And there's also changes that affect the investor. So that's the second cohort that we will be speaking about. Speaking about the first set, let's first listen into the specific portion of this budget speech today that related to individual taxpayers. Here's what Finance Minister Nirmala Sitharaman had to say.
I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes, and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually.
All right, so that was the Finance Minister listing out the major changes in the tax slabs. She also said today, in case you missed it, that 2/3 of individual investors have transitioned to the new tax regime. Sameer Kanabar, to you first. Let's talk about the major change. Is it going to drastically change what taxpayers do? Will the remaining third also start moving to the new tax regime?
Yeah, so of course the idea is to see how we can sunset or transition out the old tax regime, because we can't be living with both the tax regimes. And hence, since last couple of years, we are seeing those changes coming in. Idea is to see how people can move into the new tax regime, make them more attractive and phase out all deductions, as has happened even in corporates where all deductions or exemptions have been phased out.
So that's going to happen in your opinion?
If we look at the current incentives available to people below 10 lakhs or maybe even in the band of 8 to 10 lakhs, the HRA, the deduction for interest for housing, etc., the old regime is still beneficial, right? And more likely they are still likely to continue with the old regime, because at that band, every rupee saved is important for the class. So yes, people may not move, and of course, while 2/3 have already moved, we will have to just see how people want to make investments in other class of assets and not be forced to make investment in a given class, and thereby switch to the new regime.
That's a fair point. Puneet, coming to you next, what did you make of these changes? A lot has been said in the run-up to the budget, the desire of the middle class taxpayer to get a bit of a relief. Do you think that this is that relief?
I don't think so. I think the amendments are quite few and far between. Much more was expected. For example, the slabs which are tinkered in the new regime is very, very less. I mean, the saving of 17,500 rupees is actually very less as compared to what was desired or what was expected. The slabs are changed by 1 lakh rupee at every level without changing the rates of taxes. So I think the relief is quite marginal to my mind. Number one. Number two, if you look at the deductions, like a standard deduction, which is only deduction available under the new regime, is now increased from 50 to 75,000. It's a welcome change. It's a welcome increase. However, to my mind, not sufficient, considering that 50,000 was set up maybe a decade back, years back. So I think the expectation was at least standard deduction to increase to 1 lakh rupee. And similarly, as Samir mentioned, the taxpayers, the individual taxpayer, will still compare the deductions which are available under old regimes, such as HRA or interest on borrowings for the house property. And if those deductions are substantial, clearly they will continue to opt for the old regime.
You know, that's an operating point there. And in fact, it's perfect because we were discussing, Arvind, earlier on in the day, and you drew up an Excel sheet where you were talking about various scenarios, and of course it differs from person to person depending on what they're investing in, what they're claiming, but there is a threshold beyond which the old tax regime still becomes more beneficial. Could you spell that out for us?
Yes. So before the slabs were increased today, if you look at assessment year 24-25 new regime tax rates, some brief calculations mention that as long as the total deduction that an assessee is claiming is in the range of say 3 to 3.5 lakh of rupees, or anything up to 3.5 lakh of rupees, the new regime favors better. But the moment the deduction, which could mean the HRA, the ATC, the ATD, NPS, everything, all this put together, if the moment they cross this 3.5 lakh per annum threshold, then for taxpayers, say even the middle class taxpayers, the old regime looks better.
Yeah, okay, that's a fair point. You know, by the way, and I hope that I will be able to pull this up at some point over the course of this conversation, the finance minister was asked this question specifically at a press conference about whether or not this is one of the steps that is being taken to finally get done with the old tax regime, whether there will be a sunset on this. And she said that this is being reviewed, that the changes to the new tax regime are in order to make the tax regime simpler. But she said that we still can't comment on whether or not this is the final death knell for the old tax regime. And the point that you're taking is well taken, Arvind, with regard to the benefits still available on the old tax regime. There were a couple of other changes as well, and specifically on NPS, and this affects quite a few people, so let's talk about it. Samir, previously deductions available by the employer's contribution to the national pension scheme, a lot of government employees benefit from this. It's been raised to 10% to 14%. There's a significant change there?
Yeah, and just one point on the previous slabs, that while the benefit projected 17,500 is actually 15 lakhs and above.
Yeah.
it is not getting translated at lower slabs.
We did a back of the envelope calculation. We said if you're earning up to 10 lakh rupees, the benefit is 10,000 rupees, right?
Absolutely. So if you look at 3 to 7 lakh slab, up to 3, of course, exempt, 3 to 7, the benefit is just 2,500.
Yes.
Which is basically 25,000 ka 10% kind of. So obviously, while what is being projected as benefit is not getting translated, it is only people in the higher bracket will get benefited under new regime, and that is why probably the recent statistics which has been put up, interestingly, on the website is to say that earlier 1/3 people were above 5 lakh bracket in terms of tax return filers. Now there are 50% people above 5 lakh bracket. So the 2/3 ratio probably that is coming in is because a lot of people are moving into higher tax brackets, and that's why opting. Whereas 1/3 are still in the lower tax bracket. Probably that's an interpretation. But coming back to NPS, so 10 to 14%, again, it is employer's contribution. So whatever employer contributes, extra 4% will now no longer get taxed and will be treated as exempt. And the way it works is that, this 14%, so if my salary is 100, if 14% is contributed, actually I say my salary is 86, it's not my 100, because that's how the way it gets calculated. So everything is then based on that. But obviously, any extra contribution above that, which is above 7.5 lakh rupees, up to 7.5 lakh, there is no impact. But above 7.5 lakh rupees, the interest gets taxed, not only the higher incremental amount, but interest gets taxed on an accrual basis.
Sure.
So that's the impact.
So that's a fair point. But it's still beneficial to the extent of that 4 percentage point increase in contribution, as long as you stay within that threshold. One more change that I will talk about with regard to the individual taxpayer before we talk about capital gains and the rationalization of capital gains tax. Arvind, we were talking about this earlier, and this has to do with the tax collected at source for transactions made in the liberalized remittance scheme. And you can actually set that off against the TDS, or tax deducted at source, if you communicate that to your employer. Can you explain that to us?
Yes. So Alex, while we were discussing this earlier in the day, and we did speak about TCS on LRS, but we also forgot that if you're buying a motor car, there is TCS on that as well. So basically, let me just spell it out. So whenever an individual is remitting money outside of India under the liberalized remittance scheme of RBI, which is up to $2.5 lakh dollars per year that can be remitted out. There is a 20% tax collected at source on this, as long as you are crossing that 7 lakh limit threshold that has been defined per individual. So the moment you're remitting this, there is a TCS collected and paid to the government, which now under the amendments in the proposal say that employer can take cognizance of this TCS if the employee declares it to the employer, offset it against the tax liability of the employee for the year, and accordingly deduct lower TDS on the monthly salaries. So the direct benefit out of this is for all those people who are either buying a motor car or sending money outside, if they have suffered TCS, they can disclose it to the employer, and thereby it could mean a little higher in-hand money for them from their salary.
It's a fair point, and it's definitely a benefit because it's not a small amount of TCS that gets collected. It's quite a large amount, and that gives you more spending ability through the year if you communicate it to your employer. So you should do that. I will come to you, Puneet, about the changes in the capital gains treatment, but we have to slip into a very quick break. We'll be back on the other side to tell you all about that, and this is the second cohort that I'm talking about, the individual investor. Do stay tuned. headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. You're watching NDTV Profit, and we've so far spoken about the changes for the individual taxpayer. Let's also talk about the retail investor and how your lives changed from today onwards. In fact, let's listen into what the Finance Minister had to say about the rationalization of the treatment of capital gains.
Capital gains taxation is also proposed to be hugely simplified. Short-term gains on certain financial assets shall henceforth attract a tax rate of 20%, while that on all other financial assets and all non-financial assets shall continue to attract the applicable tax rate. Long-term gains on all financial and non-financial assets, on the other hand, will attract a tax rate of 12.5%. For the benefit of the lower and the middle income classes, I propose to increase the limit of exemption of capital gains on certain financial assets to 1.25 lakh rupees per year. Listed financial financial assets held for more than a year will be classified as long-term, while unlisted financial assets and all non-financial assets will have to be held for at least 2 years to be classified as long-term.
Okay, so a complaint that tax experts and indeed several investors had for many years is that the treatment of various assets when it came to capital gains and taxation of capital gains was very different. Equity was 1 year for long-term capital gains, real estate was 2 years, gold as well as certain other assets were taxed as long-term capital gains if held beyond 3 years. Now that's been simplified. Puneet, I'm coming to you hopefully for a further clarification as to what constitutes financial assets, what constitutes unlisted assets and non-financial assets.
Yeah, sure. I think this is the single most important amendment made by the Finance Minister, and I think it was overdue. There has been long pending demand in terms of rationalization of the capital gains tax regime. And as you rightly said, there is a multiple rates, multiple holding period for different assets, financial assets, non-financial assets, indexation available, no indexation available. So several issues in the regime, and I think a good attempt has been made to rationalize or to simplify the capital gains tax regime. If I were to just summarize, listed is 12 months so far as the long-term capital gain is concerned. Anything below 12 months would be short-term capital gain for the listed securities. That includes debentures as well as shares. As so far as unlisted is concerned and all other assets are concerned, it would be 24 months. So now the 36 months period has gone away. So that's easy. It's 12 months or 24 months. So far as the rate of tax is concerned, again, there are only two rates, actually three rates. One is 12.5% for long-term capital gains on all assets, whether it is financial assets or non-financial assets. A very bold step taken, all assets treated at par, whether they are financial or non-financial assets. the rate of tax for long term is 12.5%. Remember, the finance minister has removed indexation benefit. Again, a very important measure, and maybe rightly so, because the rate of tax for several long-term assets are reduced from 20% to 12.5%, unlisted stocks or property or whatever, right? So indexation benefit has been removed. So it's 12.5% without indexation benefit. So far as short-term assets are concerned, it is applicable, the rates will be applicable at the slab rates. Applicable slab rates, taxes will be paid except the listed equity, where the rate of tax is increased from 15% to 20%. So for listed equity, the rates have gone up from 10 to 12.5 and from 15 to 20, while for unlisted, it has come down from 20 to 12.5, so far as long term is concerned. So it's a mixed bag in that sense. Maybe depending on your asset class, it will be either beneficial to you or it would be, or you will have a higher tax impact. So there is one specific class, sorry, just to complete, there is one specific class which is, as we call section 50AA, which are specified mutual funds or market-linked debentures, where irrespective of the holding period, whether it is 12 months, 24 months, it would be considered to be short-term capital asset, and the rate of tax would be on a slab rate basis. So that's asset class which is like unlisted debentures, etc., are also now included in that.
Yeah.
And the higher rate of tax has been provided in that.
And that doesn't change. The change to the treatment of debt mutual funds was done a couple of budgets back, and that remains to be the case.
Sorry to add, they have just changed the definition.
Yeah.
Earlier it was like 35%, less than 35% to equity. Now they have aligned it with other equity-oriented mutual fund definition to make it 65%. So I think that rationalization was also, I think it was a step in a right direction.
Absolutely. Let's delve a little deeper into this indexation piece, because there might have been some misconceptions about whether or not this ultimately is beneficial or harmful. And we've done some calculations looking at the inflation. So first of all, if you don't understand this, the indexation benefit is what allows you to set off the impact of inflation against the capital gains that you're making on a particular asset. So just to put things very simply, if you bought a house in 2005 worth 1 crore rupees, and if the value of that house is now 2 crore rupees, you've made a gain of 1 crore rupees. You have to look at the impact of inflation between 2005 and 2024, set that off against the capital gains that you're making, and then pay 20% on the remainder. That is being done away with. So you would probably be thinking that that's negative. But the reality is that it may not be. In fact, in most cases, it's either neutral or positive.
Positive, yeah. No, you're right. And if we look at least the immovable property, at least the back of the envelope calculation seems to suggest that if you're holding property since 2003 and later on, then the new amended rate of 12.5% as a long-term capital gain is more beneficial than the indexation that you are getting it. And obviously the indexation benefit started from 2001.
Yes, that's a base year.
Yeah, that's a base year. So it's hardly you lose out anything. So from that perspective, if you have recently bought property, 2012, 2015, whatever, and if it is long-term and you're selling it, obviously this is going to be leaving more money in your pocket in terms of taxes in case you are selling it. And obviously, of course, you have a corresponding exemption if you're buying another house.
Yes,
so,
that remains.
Yeah.
Okay, so very quickly, that last point that I wanted to talk about, there has been a difference between the treatment of dividends as well as buybacks. And this was clarified today. There was a change that was announced, and the buybacks that you participate in. So suppose you have equity shares of a company and you participate in the buyback that a company is announced, and you sell shares in the buyback, that is now taxable in your hands. But there is a clarification. We earlier thought that this would be capital gains tax, but it is not capital gains tax. Samir, can you explain that?
Yeah, so buyback again flip-flop. Earlier buyback for listed shares was capital gains, then buyback tax was only applicable for unlisted, Then they brought in buyback tax for listed, where the company used to pay buyback tax on the differential value of the buyback minus the price at which the shares were issued, which was being paid as at the rate of 21% by the company. Now a flip-flop to say that effective 1st October, so this is effective 1st October, unlike the indexation and all of that which are effective today.
Yeah.
So with effect from 1st October, the buyback will be taxable first, not in the hands of company, but in the hands of shareholders. Second, this will be treated as kind of dividend income, taxed as income from other sources. So it will get taxed as per the slab rates. And the cost that you have incurred to buy those shares. So for example, you bought the shares at IPO or at a face value 10 rupees, and say you have 10 shares, so your cost is 100. So 100 effectively becomes your loss,
Okay.
which is available to be offset against your capital gains.
Okay.
So in the same year, if you have any capital gain, you can offset the cost being resulting into loss against the capital gain, or you can carry forward.
And whatever you gain, net of that loss, is what you pay based on slab rate.
So one is, of course, the buyback value that you have realized is taxed as slab rate as per your slabs. The capital gain will get taxed as capital gain because that is the stock that you have sold on the market.
Okay.
So that is capital gains and you're offsetting. And then there is a gain, you pay 12.5% long term, 20% short term.
Okay, so all of this, some of this, I shouldn't say all of this, because I think my guests today have done an incredible job explaining sometimes what is quite complicated. I must thank all of you. Thank you so much for joining in and for answering all the questions that I had. And I'm sure if my viewers have more questions, you will be amenable to answering them later. Of course, we will take them up over the course of today as well as in the coming days as well. Thank you so much for tuning in. There's lots more coming up over the course of this evening. And this is NDTV Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Nilesh Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Hello and welcome to NDTV Profit. You're watching a special budget coverage program that we've prepared for you. I am Vishwanath Nair and I am joined by Mr. Dinesh Khara, the chairman at State Bank of India. Mr. Khara, welcome. I know you've had a long day. Certainly most people who have been tracking the budget have. But I just wanted to start off this entire conversation with your views on what exactly transpired this morning. How are you seeing the budget play out?
Well, I think as far as the budget is concerned, it's quite an inclusive budget with a very clear focus in terms of the rural and also in terms of MSME, and as well as when it comes to, there is a very sharp focus in terms of building the skills in the country, which eventually will go a long way in terms of making this country to be the developed country by the year 2047. The other very important piece is that a very sharp focus on productivity is something which is seen. Agriculture continues to be a major area, and the enablers are being provided in the agriculture sector. DPI is being created for the agriculture sector so that all such agri lands could be digitally tagged, and which will actually facilitate availing the loans for our rural customers. Likewise, when it comes to MSME, manufacturing and services, thresholds being lowered for the TREDs. Many more entities will come into the TREDs. Almost 22 new public sector entities will also be participating on the TREDs. Apart from that, almost 7,000 new corporates will also be participating on the TREDs, which will actually ease out the problem relating to receivable finance by the MSMEs. Some kind of announcement which have come in for the CGTMSE guarantee, and also for when it comes to the SMAs and how should we deal with the SMA. These announcements will go a long way in terms of encouraging MSME in the economy. So that's how I really read the budget. And in addition to that, the focus on climate finance, renewable energy, PM Surya Ghar, and the PMAY. These are some of the other initiatives which will go a long way in terms of creating enabling situation for the growth of the economy overall.
Right. Mr. Khara, one of the questions that I had was with regard to the MSME announcement. Now, you've spoken a little bit about what the government is trying to do here. But with this credit guarantee scheme, now we saw right after COVID that credit guarantee scheme really supported the MSME sector as well as some of the other borrowers to try and stabilize their business, be able to access financing much easier. Do you think that going forward, that's probably going to be the trend that your public sector peers and yourself, as well as some of the private sector peers out there, will probably extend more credit to the MSMEs?
No, I think this is the kind of effort which is there. When it comes to this MSME guarantee scheme is there, this is what seems to be the intention. Because what you mentioned about the COVID and around that time, the portfolio level stop loss, the first loss guarantee which was given, it actually encouraged banks to lend and support the MSME at a very crucial time. So perhaps encouraged by that, this is what is being envisaged. And I'm quite hopeful that it will certainly give the boost to the MSME lending.
In terms of the announcements with regard to large infra projects, especially in states like in Andhra Pradesh as well as Bihar and some of the other eastern states as well, so there is a focus on building that segment of the country. Do you think that opens up doors for banks such as yourself to go out and fund these kind of projects?
No, of course, this much of it would have to be seen in the context of the nature of the project, but nevertheless, such infrastructure projects are always of interest as far as we are concerned, though we evaluate them and see to it that it should suit our risk appetite. But nevertheless, we do look at these projects as quite promising, and opportunity of growth in the economy actually goes up, because our sense is that infrastructure has got a multiplier effect as high as 4 times. So this actually could be a major engine of growth for the economy.
Going ahead, do you think that this is probably going to help that growth? Because, the focus from the beginning when the finance minister started speaking was employment, skilling and developing that human capital that is necessary for the growth of this country. You said eventually you want to, this budget will help in reaching a developed economy status. But in the near term, what do you think the benefits are for the economy?
Well, in the near term, of course, when you have got the trained manpower available, when you have got the opportunities which are right in terms of nature and which actually can be sweat over the period of time for the eventual growth of the economy. This is actually laying the foundation, and during the journey, it will certainly help in terms of reaping the benefits of the growth.
Right. One of the criticisms was also with regard to the level of taxation that has been announced, specifically on the capital gain side. I don't want to get into that specifically, but do you think that maybe something more could have been done over and above what has already been announced by the government?
I'm sure it must have been a very calibrated step, because government must have evaluated multiple options and then they would have taken such a call. So I don't have any more comment to offer on that.
All right. Mr. Khara, a couple of last questions. I wanted to get a sense as, from the banking sector point of view. There is, even yesterday when the economic survey came out, the talk of public sector banks as a unit and the improvement that they've shown over the last many years have been highlighted. This has also been a theme within the stock market as far as investing is concerned. What is the expectation for the public sector banking system going ahead in terms of growth levers that are available, in terms of possible potential opportunities that may come up?
Well, as far as, when the budget is very clearly focused in terms of inclusive growth, and inclusive growth unfolds opportunities into all subsegments of the economy. And we as the public sector lenders and we at State Bank of India are very keen to evaluate all such opportunities and take them to this logical conclusion if at all it suits our risk appetite. So I actually look at this as a great encouragement for taking the economy to the path of development.
All right. Last question, I just wanted to get a sense from you for FY25. Now, we have about roughly 6 odd months left. What is this year going to look like for the banking sector?
As of now, it looks like to be promising. So I hope that whatever we have seen last year, maybe it could be at least that much or maybe better also.
All right. Thank you so much, Mr. Khara, for joining us and talking to us about your views around the budget and how exactly this is going to help the rest of the country. That was Nilesh Shah, the chairman of State Bank of India. Now let's cut into a conversation with Sanjeev Puri, president of CII, who's speaking more about the budget.
Anticipated. If we really split the difference between the changes that have happened in the tax slab, primarily we're seeing that the 3 to 6 lakh income, it's now expanded to 3 to 7, and the ones that used to be before, 6 to 9, who used to earlier attract a different rate, has become 7 to 10. This is for the 10%. So really in those two slabs only we are seeing a particular change. Considering that until 7 lakh, there was already a rebate in place. Doesn't this change only perhaps benefit that small percentage who earn 9 lakh to 10 lakh per annum?
No, absolutely not. Any change that is brought in the lower tax slab, let me clarify to you and to your audience, it impacts everyone beyond that tax slab. So if there is an increase in the slab from 3-6 to 3-7 lakh, this benefits everyone who's having an income beyond 7 lakh, 8 lakh, 9 lakh and onwards. So everyone stands to benefit. Whereas, if we had increased or changed the slabs at higher slabs, tax slabs, then that would not have benefited those who are in the lower tax slabs. So everyone having an income of more than 7 lakh, because 7 lakh till 7 lakh, in any case it is exempt because of the rebate that is given, stands to benefit depending on what his income level is. So even a person having a salary of or an income of 15 lakh rupees, 10 lakh rupees, 11, 12, 13, everyone stands to gain depending on the income that he has. And the finance minister had announced that the maximum relief is 17,500 rupees for those having an income of more than 15 lakh rupees and are salaried.
Right. Mr. Nageshwaran, you did speak about jobs yesterday. 78 lakh jobs need to be created for us to reach the vision of Viksit Bharat. How will benefits of first-timers and contributions to the EPFO actually aid in job creation?
No, actually, the job creation agenda in this budget has been extremely comprehensive, and it is not just this one particular scheme you're referring to. There are about 5 schemes, all of which indirectly and directly add to the employment potential and employment generation potential. See, the thing is, when you hire a first-timer, he or she will take some time to settle down into the job, and their productivity will be relatively low. And naturally, therefore, the productivity-adjusted wages in the initial months will be the highest. Yeah. But by agreeing to subsidize the first month wages up to 15,000 rupees spread over 3 installments with also an additional condition of creating financial literacy there, the government is basically absorbing the cost of the adjustment of the employee into the workforce by paying the salary of the first month up to 15,000 rupees. And there is also an incentive given for bulk job creation, which is in Scheme C. Right. And then there is Scheme B, which talks specifically about manufacturing job creation. And all of these things are actually, and together with the internship scheme, and then through the hub and spoke model for ITIs. So all of them collectively are very likely to create a significant jump in employment generation in the economy in the coming years.
Right.
If I may just add to him, actually the benefit in Scheme B for the manufacturing sector, with certain conditions of course, the benefit is much more. It is to the extent of 2,16,000 rupees. So if you add the 15,000 rupees in Scheme A and the 2,16,000 rupees in the Scheme B, the total amount that the government is willing for new employment in manufacturing sector can go up to 2,31,000 rupees per new employment, which speaks about the government's commitment towards aiding and promoting new employment.
Absolutely. Mr. Malhotra, also there were measures to boost consumption that used to be really widely discussed in the run-up to the budget. Do you think the budget actually adequately addresses all of that?
Yeah, so we are leaving, as I said, much more on the tax side, by reducing the personal income tax rates on the new tax regime. We are leaving much more in the hands of the taxpayers, of the consumers, and that will certainly help boost consumption.
And consumption growth also comes from the employment generation. I mean, more people find jobs, more income growth happens, and consumption growth happens. So apart from the lower tax rates in the new regime and the higher standard deduction, the employment generation is a very direct boost to incomes and therefore to consumption.
Sir, if I may, this question, it actually follows what was also spoken yesterday at the economic survey, one on being, speculative trading being a concern. And this has been something that regulators have also raised. This conversation comes from different quarters too. And today we see subsequently the STT on F&O also being introduced. Now, just on, does this adequately address that concern, this particular move? And also, in terms of the indexation benefit, the year has been set at 2001. So could we get a clarity on that particular date and why that's so? 2 questions.
Yeah, so actually 2 questions. First question, on STT. This is more, of, I'm not sure, whether this will adequately address the concerns on F&O. Personally, I don't think so. But I do believe that this is something which we should not really be promoting, and so it is keeping this in mind, that we have actually increased the STT rates on something which we don't feel is good for the economy, something which is good for the capital markets beyond a point. And so, because it is really actually, speculative. Of course, there are other measures which can be taken. We'll be happy if this actually results in reduced F&O activity, which may or may not happen. Coming to your second question on indexation for real estate, gold, and some other asset classes, the rate presently is or was till yesterday 20% with indexation. We have now reduced it to 12.5% without indexation. However, as I had clarified even in the press conference, the indexation benefit till 2001 shall continue, which means that if a property was bought before 2001 and if it is sold later on after 2001, the price of that particular property when it was bought, or the price with indexation in the year 2001, whichever is lower, the price as it exists in 2001, or that cost acquired prior to 2001 with indexation, whichever is lower, so it gets the benefit of indexation till 2001. However, after that, whatever is the increase in the value of the property, that will be taxed at 12.5% flat without any benefit of indexation after 2001.
So before we let you go, another broad theme that we saw in the budget speech with respect to taxation is rather an attempt at a comprehensive review, be it for GST, be it for custom duties, some of which were also announced, and also, of course, for the IT, there's also a comprehensive review. Now, if we look at it in another 6 months, perhaps another roadmap is also likely to come. Just in that particular sense, what can we expect when we say this comprehensive review, and on what level would it be attempted?
See, this has been a continuous affair, as you are aware, and as you have been witnessing in the various finance acts, or even otherwise through the amendments in the rules. We want to make life easy for our taxpayers, for our industry and trade. So whether it is the rollout of GST, which happened in 2017, bringing down the compliance burden, reducing the logistics costs, etc., or whether it is in customs duties, where last budget we decreased the number of tax rates. So this is actually work in progress. What we can expect, and this budget again, you saw a lot of measures for simplification. We believe that if we can make life simpler from taxation perspective, whether in direct taxes or indirect taxes, that should yield good dividends both for the industry, because they are certain about what taxes they have to pay, and as well for the government, because that actually results in tax getting paid, revenue getting generated, rather than demands getting created and embroiled, in various litigation. So going forward, a 6 months time frame has been set, both for customs duty rationalization as well as for Income Tax Act review. We will try to simplify the law. There are a number of exceptions, number of provisions which are spread across various chapters and sections. There are a number of procedural things in the substantive law. There are a number of provisions which are now perhaps obsolete, redundant, some of them, which may not be needed as on date.
Right.
And so we will have a comprehensive review of all those provisions to make it easy for the common man to be able to read it, to be able to comprehend it, and to be able to implement it.
That's very interesting. Coming to something that we were discussing, the question of jobs, because that clearly was the underlying theme of this budget. So there is the sense that, when the Prime Minister says that the first job will be given by the government to a large part of the youth, there's a deep political messaging in there. But there's also a sense that it also will lead to formalization of the economy. Are we doing enough for the unorganized sector? Would you like to take that?
No, actually, you can't say that this is not enough for the informal sector. This is exactly an incentive for the enterprises to become formal. So when you are actually helping the informal sector to move to become part of the formal sector. So that is actually a support and a massive assistance being given to the informal sector. And secondly, if assuming your question is right, and if you are boosting the formal sector, it is always the case that the formal sector's growth does spill over into the informal sector demand as well. So in both ways, both directly and indirectly, it is a benefit to the informal sector as well.
Okay, sir.
If I may also want to, one of the nitty-gritties was that, in terms of the scope of the safe harbor rules, they would be expanded was one of the announcements that was made. Could we get some clarity in terms of where this would be headed?
No time frame has been given, but we would like to do it as early as possible. I think you are mentioning about the safe harbor rules for raw diamonds sold by the foreign mining companies when they come here in India. So you are aware that we have allowed them to display those diamonds, but because of certain complexities of our tax laws, they display them here, but they are then actually sold to Indian companies abroad. So we want to shift that trade to India, and you have seen a number of measures in this regard. Diamonds is only one of them. There was another which pertained to shipping, foreign shipping lines, again because there is an apprehension in their minds about taxation with respect to a number of entities which are actually involved. There is not one shipping company, but they have a very complex structure, because of which it can lead to it can lead to taxation on those multiple entities, which not only creates uncertainty but can also lead to very high taxation. So we are now providing a very simple rule in the form of that's also a kind of a safe harbor, a presumptive taxation which is being given to them. The effort really is to promote investment and employment in our country wherever there is scope. So whether it is reduction in duties or simplifying tax rates, it is all about investments and employment. Thank you.
Thank you, sir. Thank you. And that's all we have time for. Thank you so very much for joining us, sir.
Pleasure.
This was Revenue Secretary Sanjay Malhotra, sir, and Chief Economic Advisor, Mr. Anant Nageshwaran. Stay tuned to NDTV Profit and NDTV 24/7 as we bring you conversations with more budget architects.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Nilesh Shah, on my show, Talking Point.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
if you want to be in the money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential.
Welcome back. You are watching NDTV Profits, a special broadcast on budget. And earlier this morning, Tamanna spoke with Sunitha Reddy, the Managing Director of Apollo Hospitals. Let's listen in to that conversation.
All right, a host of budget reactions coming in, and we're speaking now with Sunitha Reddy, MD of Apollo Hospitals, on the first budget of the third term of the Modi government, the one with a lot of expectations of big bang, and the thrust seems to be on job generation and employment. The private sector also enlisted in quite a few ways. So let me start with a reaction on that. Ms. Reddy, thank you so much, first of all, for speaking to us on NDTV Profit. And let's get your take on all the steps for employment generation that have been spoken about today.
Yes, I think that, the Finance Minister, after building a really strong economy in 8 years, this is really the thing that needed to be done the most. I think the focus on employment generation was very much needed. And she did that through several schemes. One is the employment for 4.1 crore youth, which will result in a 2 lakh crore outlay, is something that I think, especially in the healthcare industry, it's something that is very favorable in terms of being able to create new jobs and take in these new individuals who will, as we grow as a company, will get jobs within the healthcare industry. So clearly for the services sector especially, I think it's a huge incentive, and I'm sure it will apply to manufacturing. And also we must consider the ripple effect of this. So for every bed we create, we employ 6 people. And beyond that is the ancillary industries where we generate 4 times more employment. So you can see that it will have a huge effect on the space of employment. But I had hoped that we could do more for healthcare.
I was just going to come to that. Not too much said on healthcare per se.
Yes.
I think duty exemptions on 3 cancer drugs. That's the extent to at least what I picked up from the speech. Do you think that this was a bit of an opportunity that could have been taken? And obviously, I'm sure the hope that steps are taken outside the purview of the budget?
I think we need to work and make sure that, that the sector is recognized, not just because it's industry, but for the work that it contributes to the economy. And clearly the customs duty exemption is the right signaling, because oncology cancer is growing at 22%. So the customs duty exemption on 3 additional drugs, on X-ray tubes which are used in X-rays, mammograms and linear accelerators, of course will make the treatment more affordable. So very heartening to see. And I think the third point was that we can now use our CSR to take more students for internship, and that will greatly benefit both the students and the companies. So yes.
I just to follow up on that, because when I was listening to that announcement on the internship scheme, 5,000 rupees a month for 12 months, a one-time payment of 6,000 rupees, and 10% of this has to come from the private sector in terms of CSR. Does this work out positively for you as a company?
Yes. No, it does, because, the work that we do, and I think that the impact that it makes, to have more people to be part of this effort will really intensify and create a larger impact. So it's a good thing.
But you have to keep them on for 12 months. It's a 12-month internship.
So our CSR budgets are for 1 year, so that makes completely completely makes sense.
Okay, so that's a big positive as far as CSR is concerned. What about the incentives, ma'am, which has been given to companies, and I think for smaller companies also this will be a big benefit in terms of 3,000 rupees towards EPFO. I'm just wondering if the focus is on getting companies to employ more rather than only skilling potential employees. Do these announcements move the needle in your view?
So if you look at a company like us that is really growing, we're adding beds, we're creating new infrastructure. So for someone who's creating new infrastructure, adding more beds, it makes a lot of sense. So for companies in that growth mode, I think without a doubt it makes sense. For companies who are looking to rationalize their cost structure, I'm not so sure.
Okay. So for companies that are looking to rationalize cost structure, it might not be that great. Just one more point, ma'am, on the corporate tax rate of 15%. That benefit has not been extended in this budget, or no announcement has been made so far. Do you think that that's a bit of a disappointment? Would you have hoped to see that? Also, no clear announcements on PLI schemes.
Yes. No, we had hoped that that they would do something with, like they had done PLI for manufacturing, that they would do the same for services, so that they would link employee adding more jobs along with manufacturing and create something special around that. That didn't happen. But I think over a period of time, the importance of doing this should happen, because if you look at what is happening in the South and the global capability centers, as well as the service industries that have really been created over the past decade, this is an area of huge importance.
Okay. All in all, ma'am, what is the one best thing and what is the one thing that you were least impressed with, or you would have hoped for more in this budget?
No, I think the best thing is that it's business as usual. Slight difference in in tax rates for some people in terms of long-term capital gains tax and how they view it. So there's not. Let me say there's no negative impact, and I think it's for us to realize the positives and take it forward and make sure it happens in our companies.
Okay, thank you so much. That was Sunita Reddy, Managing Director of Apollo Hospitals, saying that she liked the budget. Hope there was more in terms of announcements on the healthcare sector specifically.
All right, now NDTV's Gauri Dwivedi also spoke with the CII President-designate Rajiv Memani about his take on the budget. Listen to what he told us.
There were some long pending issues. I think there's overall simplification in some of them. So for example, angel tax and the removal of that. There are some things they've done on the reassessment side. Earlier, what could be open till 10 years now has been brought down to 5 years. Search and seizure also, they've reduced the time for which. So I think there's a lot of it. And the fact that the new tax code will be coming and the, Vivad Se Vishwas Tak Scheme 24 being launched. So that's one bucket of simplification. The second bucket is, to give relief. I would say some of the foreign companies, it was their long-standing demand to reduce the tax from 40% to 35%. I think that's been good. Equalization levy has been taken away, although some of the BEPS-related relief, the provisions, at least I've not seen in the fine print as yet, but if they've come, that'll be good. Otherwise, it may lead to some level of ambiguity. And the third is the relief to the sort of salary paid tax individuals. So that, as you have seen, that relief, increase in standard deduction, especially if you're in the new tax regime, NPS, some modification in the slab rates. So that's one aspect of it.
Now, the markets have taken the announcement of hike in capital gains tax in the budget 2024 negatively, yet some remain quite positive with the news. Vijay Kedia believes that this is important to boost the country's economy.
देखो, कंट्री जिंदा रहनी चाहिए मैडम. कंट्री जिंदा रहेगी तो शेयर बाजार जिंदा रहेगा. इकोनॉमी बढ़ती रहेगी तो शेयर बाजार बढ़ता रहेगा. शेयर बाजार बढ़ता रहेगा तो मेरी भी प्रगति होती रहेगी, मेरी वृद्धि होती रहेगी. मैं खाली अपने बारे में अगर सोचूं कि मेरे को टैक्स नहीं देने का है, तो ऐसा तो कैसे होएगा ना, फिर तो कंट्री बंद हो जाएगी. तो मैं इसके एकदम फेवर के अंदर हूँ. मेरे को लगता है कि 12.5% उन्होंने कम बढ़ाया है. अगर आप 15% भी, मैं तो सोचता था 20% करेंगे। मैं आपको सच बताता हूँ, मेरे मन में तो ऐसे लगता था कि बाकी जो दूसरी एसेट क्लासेस सब में 20% टैक्स का स्लैब है लॉन्ग टर्म का।
All right, time for a very short break here. When we return, we bring you more reactions to the budget.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Nilesh Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment. Welcome. Now we have yet another industry reaction for you. We spoke to Raamdeo Agrawal. He's the president of the Society of Indian Automobile Manufacturers, or SIAM. He is also the CEO of VE Commercial Vehicles. Here's his first take on the budget.
I think our reaction is very positive. We are very, very positive from SIAM, and we welcome this budget, especially the continued focus on growth-oriented approach and large allocation for infrastructure projects and a very large allocation for rural development and infrastructure of 2.66 lakh crores, as well as announcement of focus on Pradhan Mantri Gramin Sadak Yojana and linking of 25,000 villages. I think these are very, very good steps which will boost the rural economy, and that was one of the needs which we had requested the finance minister, that they should be focused on the rural economy. So we are very grateful to the Finance Minister that there has been good focus on the rural economy. Other than that, there has been very good focus on the skilling and upskilling, employment generation, women, as well as on manufacturing, and focus on MSMEs. That is also a very welcome step. So overall, from SIAM, we welcome this budget that has been announced today.
And earlier in the day, Tamanna also spoke to Biocon founder Kiran Mazumdar-Shaw. Here's what she told us.
We're getting you all the top corporate views on Budget 2024 right here on NDTV Profit, and I'm in conversation now with Kiran Mazumdar-Shaw, founder and executive chairperson of Biocon. Ma'am, great to speak with you on NDTV Profit and, get your view on the budget. Let me start with your sector, the healthcare sector, and others we spoke to from this space. Their first response was good budget, but a tad disappointment that more was not done for healthcare. What would you say?
I've always been, crying for investment in research and innovation, and I was happy that the government finally made a serious plug for investing in this area. I think they clearly talked about research and innovation, not only in agri, but also in every other sector. Of course, it remains to be seen how much of that 1 lakh crore will come to the pharma sector and how it will come, whether it's in the form of grants, whether it is in the form of tax incentives. So let's wait for that. But at least it's a step in the right direction. As far as, the duty exemption on 2 cancer drugs is concerned, I think that's just symbolism. I think what I would like to see is GST exemption on all cancer drugs and all cancer diagnostics, because that is what really will reduce out-of-pocket expenses for patients, because these are expensive treatments and we need to focus on affordability.
Okay, so more could have been done on diagnostics and healthcare overall, but the big push in this budget is undoubtedly on employment, and I want to get your view there because we keep speaking consistently about jobs and what the budget can do for jobs. Do you think that everything in the armory possible was used? Are you happy with what they have done for jobs and incentivizing employers?
Well, Tamanna, I think, jobs has been a focus in this budget. And I think they've focused on skilling and skill development through internship, which I think is the right approach in terms of focusing on employability and jobs for the future. And I think it is a win-win to basically marry government subsidies in internships with CSR. So I think that's the right approach. So let's see how it all pans out. But right now we know that there are a large number of manufacturing opportunities that India is trying to address. And for that, you really need a large skill force. And if you can actually use, this internship program to skill your labor force or your manufacturing workforce, then I think you have a good chance of getting a lot of that manufacturing coming our way.
In terms of the internship program and also the subsidy for new employees for EPFO, do you think that incentivizes, and I'm not talking about only large companies like yourselves, the idea is to have more smaller companies also go out and hire more. Is there enough of an incentive from an employer perspective?
I don't really subscribe to that as much as I subscribe to the internship program. So that's where I will sort of, rest my comments.
12-month internship works from the CSR fund?
I think internships can work very well because, a lot of countries have very successfully shown that internship and apprenticeship programs really work very well in terms of employability, employment, and of course, upskilling.
In terms of push to manufacturing, and I'll get one comment from you on this, it was expected that the PLI schemes would be doubled down upon, you would create more incentives for companies to come and expand manufacturing. That wasn't really done. Likewise, no clarity on whether the 15% corporate tax rate incentives will be continued or not. Would you have hoped to hear more on that?
So let's hope that it will continue. I mean, sometimes you feel that if it's unsaid, it means that it's continuing. I really would like to see the 15% tax rate apply both to greenfield and brownfield projects, because I think in brownfield projects, they're trying to upgrade their facilities and modernize their facilities. So that also needs a 15% tax incentive, in terms of the tax rate. But I think in terms of the PLI scheme, they have basically indicated that they will not expand the scope of the PLI scheme beyond the sectors that they have addressed right now. But I would like to see the PLI scheme increasing in allocation, because there is a need for capital employment by industry.
Just to wrap up, what would be your one big positive and one thing that you found wanting in terms of the budget announcements?
I think overall, I would say that the budget really signaled very positively that they wanted to focus on certain economic drivers, one being, of course, jobs, the climate initiatives, green technologies, cutting edge future technologies, and of course, research and innovation. So I have no, complaints on those fronts. I think we didn't hear enough about GST rationalization, and maybe that's something that we will have to wait for.
Yeah, and perhaps GST rationalization is also something that the GST Council has to look at, so we'll wait for that. It's also a stated aim. But thank you so much for speaking with us today. Kiran Mazumdar-Shaw there, welcoming the budget and especially the allocations on R&D.
One of the bigger announcements in today's budget, the centre announced 3 schemes to generate employment. Here's the Finance Minister talking about those.
Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. This employer-focused scheme will cover additional employment in all sectors. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons.
All right, time for a very short break, but stay with us on NDTV Profit as we bring you more news and updates.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Nilesh Shah, on my show, Talking Point.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards,
people tend to borrow from their own resources to pay for their kids. The thinking, of course, is and look, this is an Indian concept, is that I take care of my kid now, my kid is going to take care of me down the line. Is that wrong though?
I don't think that today's generation thinks like this. Like today's generation who has kids in 20s, I'm saying, wants to live with their children. So.
Welcome back. Now, speaking on the global economy, while unveiling the Budget 2025, the Finance Minister highlighted India's economic growth and inflation targets. Listen in.
The global economy, while performing better than expected, is still in the grip of policy uncertainties. Elevated asset prices, political uncertainties, and shipping disruptions continue to pose significant downside risks for growth and upside risks to inflation. In this context, India's economic growth continues to be the shining exception and will remain so in the years ahead. India's inflation continues to be low, stable, and moving towards the 4% target. Core inflation, that is non-food and non-fuel, currently is 3.1%.
Right, that was the FM speaking on growth and inflation over the past year, and in continuation to that, I'm joined by the Executive Director of the IMF, KV Subramanian. Sir, thank you so much for taking time out.
My pleasure.
So, to begin with, the FM in her speech today spoke about the fiscal deficit, targeting it in line with expectations at 4.5% for FY26, beyond which she said that the endeavour will be to keep the fiscal deficit each year such that the central government debt will be on a declining path as a percentage of the GDP. So I do want some help unpacking that statement. So far we have clearly focused on bringing down the fiscal deficit as a percentage of the GDP, and that has of course also gradually helped consolidate debt. Going forward, are we going to more actively be targeting government debt specifically?
What the Honorable Finance Minister mentioned is an important aspect. If you look at the debt to GDP ratio, and you would recall in the 2021 economic survey, we had actually covered this in great detail. Conceptually, the debt to GDP ratio depends on the primary deficit as well as the difference between the nominal rate of borrowing and the nominal rate of GDP growth. If the nominal rate of GDP growth is higher than the nominal cost of borrowing, which it has been consistently for India, over the last 3 decades, then the debt to GDP ratio is likely to come down, because keep in mind, fiscal deficit is basically the primary deficit plus interest payments. So when the fiscal deficit is coming down and we have higher growth, then the debt to GDP ratio will automatically come down. I will also mention, even during the COVID year, despite the very large increase at that time in the fiscal deficit, if I remember, close to about 10%, we had predicted that the debt to GDP ratio will not rise, will remain at about 85 to 86%, which is what it has been, and that was based on this difference, the R minus G differential, as economists say. R is the nominal cost of borrowing, and G is the rate of growth. An important observation that I want to make here is that if you look at the assumption that has been made for GDP growth, nominal GDP growth, that's been taken at 10.5%. which I think is very conservative, as has been the case in the past as well. My sense is that real growth should definitely be 7% plus. And even if inflation is at 4%, that will mean that the nominal rate of growth will be about 11.5%. So the actual fiscal deficit number is, likely to be less than 4.9%. So my sense is maybe 4.6, 4.7% is what it is likely to be, in the coming year. As a result, the path towards 4.5%, I think, is absolutely credibly laid out.
All right, that's indeed an interesting takeaway. There are already chances that we might see fiscal deficit for FY25 as well come in a tad lower than is being projected in today's budget. I do want to ask you about, we've spoken about, what growth is expected to look like in FY25. There has been a lot of credibility from the government in terms of the fiscal consolidation path. But at the same time, there are some concerns as well that the net fiscal impulse is a tad restrictive in terms of growth. Do you sort of agree with that?
Look, generally, when you think about the fiscal impulse, when the economy is not doing very well, counter-cyclical fiscal policy demands that the fiscal impulse should be strong, which it was during the COVID years. But when the economy is doing well, like it has been, last year's growth was 8.2%, that is indeed the time to consolidate and thereby, lower the fiscal impulse. I think, the finance minister's emphasis on fiscal consolidation is absolutely along the right lines. That is what policymakers would actually, and economists would recommend. But at the same time, even with a moderate fiscal impulse, the emphasis on growth drivers is visibly there. As I think a lot of commentators have already mentioned, for me, the biggest part in this is employment. The slew of schemes that have been announced for employment creation. I would particularly look at the skilling part there, which is the internship with top 500 companies. Many of us have ourselves worked as interns in these large companies, and the experience you get as an intern actually really helps you and makes you attractive, because you develop capabilities that makes you attractive for not just the top 500 firms, but firms actually that are smaller than that as well. Together with the incentives that have been given to employer and employee, you would recall the Atmanirbhar Bharat Rozgar Yojana during COVID actually has created about 60 lakh or avoided, job loss of about 60 lakh jobs. So, incentives that have been given in this budget for employment creation are based on schemes that have already worked well. So I'm actually quite confident that it will lead to employment creation, which is important for inclusive growth. At the same time, some of the other very important, announcements, the angel tax removal, which will help the entrepreneurial ecosystem, the, relook at the income tax bill, which is the Income Tax Act is from 1961, so 83 years old. And at the same time, the credit guarantee for, MSMEs, the Mudra loan, threshold being increased to 20 lakhs. These are all aspects that will really help growth. So despite the moderate fiscal fiscal impulse. I think the growth drivers are very much there. And this is actually growth not just for the next few years, but for a longer horizon reaching up to the millennial year in 2047.
All right, so you do find the budget to be growth supportive. You did speak about the thrust on employment in today's budget, and while the FM announced schemes worth nearly 2 lakh crore rupees, we've also in yesterday's economic survey and generally as well been talking about the challenges and the necessity of job creation. To that extent, while today's budget was a step in that direction, do you still think that the figures we're talking about in terms of the necessity and the numbers of jobs that need to be created, there's more that needs to be done? What's your take on that?
I'm glad you asked this question because on employment, it is my opinion, and I think based on data, that the negative narrative using poor quality data like the one from CMI has run ahead of the reality. If we use high quality data from PLFS and the CLEMS database, which is what the RBI report uses. By the way, the CLEMS database is a worldwide database, actually not just for India but across, and high quality data. Over the last 10 years, excluding jobs that have been created in agriculture, 9 crore jobs have been created, which means every year about 90 lakh jobs have been created, over a 10-year period. And if you include the jobs that have been created in agriculture, that's 12.5 crores. So the 80 lakh number that has been talked about in the economic survey, I think, needs to be seen in this perspective that even without the specific emphasis on employment, in the last 10 years, about 90 lakh jobs have been created. And that's a credible number, as I said, because it actually uses very high quality data. Together with the impetus that's been provided, I think employment creation would definitely be much higher. Let me also provide one more context. The 80 lakh number in and itself may look big, but the overall workforce in India is about 60 crores. So 80 lakhs is only 1.3% of the overall labor force in the country. For a country like India, as large as, about 1.4 billion population, every number looks big, but you have to actually look at it in context. As I just mentioned, as a proportion of the overall workforce, it is only 1.3%, and this many number of jobs have been indeed created over the last 10 years. So there is no reason for us to not believe that, that much amount of job creation, in fact, more, given the impetus on employment, will be created going forward.
All right. Thank you so much for taking time out for us, Mr. Subramanian. Those were indeed valuable comments. With that, it's time to slip into a short break, but do stay tuned to NDTV Profit for our continuing coverage on today's budget.
People tend to borrow from their own resources to pay for their kids. The thinking, of course, is and look, this is an Indian concept, is that I take care of my kid now, my kid is going to take care of me down the line. Is that wrong, though?
I don't think that today's generation thinks like this. Like today's generation who has kids in 20s, I'm saying, wants to live with their children. So here's what it is. You do that and then you're dependent on your kids, or you be selfish and try to figure out a balance, and then you're living life on your own terms. So I think it's really a question of, how do you want to have your future life, right? Where you may not necessarily be earning to pan out.
people tend to borrow from their own resources to pay for their kids. The thinking, of course, is and look, this is an Indian concept, is that I take care of my kid now, my kid is going to take care of me down the line. Is that wrong though?
I don't think that today's generation thinks like this. Like today's generation who has kids in 20s, I'm saying, wants to live with their children. So here's what it is. You do that and then you're dependent on your kids, or you be selfish and try to figure out a balance, and then you're living life on your own terms. So I think it's really a question of, how do you want to have your future life?
Minister Nirmala Sitharaman in her 7th budget announces incentives for both job seekers and employers with a key thrust on skill development. There is good news for salaried professionals. Standard limit of income tax raised to 75,000 rupees from 50,000. Capital gains tax and securities transaction tax hiked. Fiscal discipline is a priority as the fiscal deficit target for the financial year is reduced to 4.9% instead of 5.1% target that found place in the interim budget. Finance Minister keeps NDA allies happy, announces a flurry of special projects and financial help for Bihar and Andhra Pradesh. The Prime Minister lauds the budget, says it will make India a global manufacturing hub and is a boost for the middle class. The Supreme Court concludes that a retest for NEET UG is not warranted, says there's nothing to show that there was a systemic breach in sanctity of the exam. The markets were not impressed by the budget. The Sensex and the Nifty extended their decline for a third day in a row. Good evening and welcome. You're watching our continuing coverage on the budget today. I'm Nupur Talwar Surya, and let's begin with taking you through the top takeaways from the union budget today. The first, of course, is something that's going to impact everybody. The standard deduction in income tax has been raised to 75,000 rupees from 50,000 rupees. Now, the new tax regime slabs have been changed. Salaried employees get to save up to 17,500 rupees per year with this. The Finance Minister has promised a comprehensive review of the Income Tax Act. Also, the long-term and short-term capital gains tax as well as the securities transaction tax have been hiked. Angel tax has been finally abolished. Now, this was a long-term ask of the startup industry, and positive reactions coming into that. The customs duty for mobile phones, gold, cancer medicines and medical equipment have been slashed, and again something that's been given a thumbs up by a lot of companies. Now, fiscal discipline is in the focus as well. The fiscal deficit has been cut to 4.9% from 5.1% in the interim budget, and going forward the Finance Minister spoke about bringing it further down to 4.5%. Now, there are a slew of special finance schemes for Andhra Pradesh and Bihar. Most of them focus on infrastructure building in these two states. So the allies also being made very happy with those announcements. There is also a clear thrust on job creation with multiple job schemes being announced. Now, these are not just incentives for job seekers, but also for employers. So that's been an innovative innovation that's coming from the Finance Minister. Now, MSMEs too are having it good. Special schemes focused on easy access to credit have been announced for them. And in fact, let's listen in to what the Finance Minister had to say about taxes.
I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually.
Now, fiscal prudence took priority as the finance minister stated that fiscal deficit target has now been lowered to 4.9% from the earlier 5.1% that was announced in the interim budget.
The fiscal deficit is estimated at 4.9% of the GDP. The gross and the net market borrowings through dated securities during 24-25 are estimated at 14.01 lakh crore rupees and 11.63 lakh crore rupees respectively. Both will be less than that in 23-24. The fiscal consolidation path announced by me in 2021 has served our economy very well, and we aim to reach the deficit below 4.5% next year.
Now, the finance minister slashed customs duty on mobile phones. Listen in to what she said.
Mobile phone and related parts. With a threefold increase in domestic production and almost 100-fold jump in exports of mobile phones over the last 6 years, the Indian mobile industry has matured. In the interest of consumers, I now propose to reduce the BCD on mobile phone, mobile PCBA, and mobile charger to 15%.
Now, the finance minister also announced a slew of financial schemes for Andhra Pradesh and Bihar. Here are her announcements for the state of Bihar with a view to battling floods over there.
Irrigation and flood mitigation. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken.
And in fact, to support Andhra Pradesh, the finance minister announced that 15,000 crore rupees will be allocated to the state. The FM also said that the funding will support water, power and railway infrastructure, along with the completion of the Polavaram project.
Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads. In Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bangalore Industrial Corridor. An additional allocation will be provided this year towards capital investment for economic growth. Grants for backward regions of Rayalaseema, Prakasham, North Coastal Andhra, as stated in the Act, will be provided.
Moving on, the Supreme Court has said that there will be no retest for the 2024 NEET UG exam. The Supreme Court said that there is no material to show that the results of the NEET UG are vitiated entirely and that there was a systemic breach in its sanctity. We're now joined by Varun Gakar, who has more details on this. Varun, this of course was a long-awaited judgment. Tell us more, please.
So yeah, the NEET UG fiasco seems to have come to an end as the top court has said that a retest will not be conducted for this year's undergraduate examination. Although it was accepted by the court that a leak in fact did take place at Patna and Hazaribagh, the court said that the material on record was not enough to show that there was a systemic breach in the sanctity of the examination. In arriving at this ultimate conclusion, the court said that it has been guided by the well-settled principle of whether untainted results can be segregated from the tainted ones. In other words, no student who is revealed to have been a beneficiary of the malpractices in this entire fiasco would be able to claim his right of admissions in the future. In addition to this, the court said that
contributing factors to this, considering that the expenditure has also gone up, there have been significant announcements also. So can we get some sense behind that thinking?
So, as you know, we received a larger than expected dividend from the Reserve Bank of India, which I consider a one-off receipt, not necessarily something that can be factored as a recurrent item. But we've also received, through my colleague here, indications that we will also be receiving pretty good receipts on dividends from our public enterprises, banks, etc. So we have taken all of that into account in our receipts projections. Our tax receipts have not been projected as rising. We have kept them approximately the same. So we have used this additional cushion in terms of receipts, partly on certain new items of expenditure, including on some of these new schemes in the direction of employment, which is the central focus of this budget, and partly on fiscal consolidation. So it's a sort of even-handed balance between consolidation and additional expenditure.
There's also a sense that there has been some savings rolled over from the previous year. Is there any figure to that, sir, that is contributing to this map?
Savings rolled, we are talking about the current year. Now, the current year, what savings will come is not something that I can predict now. And in the last year, there were some savings between the revised estimates and the provisional actuals, but not very large. And in fact, in the case of capital expenditure, negligible. Capital expenditure came out at, in terms of decimal point, it came out at 100% of the RE. Revenue expenditure was short by about 40,000 crores. That's not very significant in terms of such a large budget of 44 lakh crores.
Okay.
So for the current year, yes, there has been some slackening in the pace of expenditure, which is expected during an election cycle. But I still expect that our numbers are broadly realistic.
Before we move on from the sort of fiscal deficit, question, also outlined in the Part A is an indication of a long-term goal in terms of what happens after FY26. So would it be fair that another glide path direction is in the pipeline or in the annual for what happens in FY26?
Though no figure has been stated in terms of a goal for the debt to GDP, there is a signaling of intent which is clear and which you have obviously read in the speech. In the past, our fiscal targets were set exclusively on the basis of flow numbers, that is the annual deficit. A problem with that has been that for countries like India, which are much faster growing than others, and where good capital expenditure itself promotes growth, and so there is almost a circular logic sometimes. It is possible to run a deficit which is not necessarily some rigid number and still have the debt on a declining path.
Okay.
So we are basically moving to a more dynamic targeting, where we say we want the debt to decline. We think our debt to GDP ratio must come down, but we can do that with a more flexible annual deficit number. What the deficit number should be will be a factor of the debt dynamics in terms of prevailing interest rates, prevailing nominal growth rate, and the burden of interest on past debts, etc., our primary deficit. So there are certain calculations which would yield a number. Our aim will be to keep the deficit below the number required to keep it falling at a particular pace. Now, what should be that objective? How quick should it fall? These are matters which will require further, thinking before we come out with anything specific. But the broad direction is very clear.
So we'll ask that question in 6 months' time. The next, okay.
Mr. Somnathan, I'm a political reporter, and jobs and employment was at the center of elections 2024. And today, I think the defining theme of the budget was also employability and also employment. Can you explain to us how realistic is this rollout of this plan? Because you're also thinking of getting the private sector on board, which I think is a great gesture. But do you fear that there could be some sense of resistance? Because, this would also mean telling the private sector that this, a part of your CSR would go into something like this. How confident are you of getting?
So there are 5 schemes. The involvement of the private sector is, in a sense, passive in the first 3 schemes. It is for people they recruit. We are not directing them to recruit anyone in the first 3, which is the scheme for first-timers, the scheme for first-timers in manufacturing, and the scheme for any employment increase in any sector. So there are 3 parts to it. None of these place any kind of obligation on the private sector to do anything, but they are incentives. Now, whenever we speak to the private sector about investment or R&D, they say, if you give us a higher depreciation allowance, we'll invest more. If you give us more tax expenditure on R&D, we'll do more R&D. So they typically say that they respond to incentives, and I believe them. Yeah. So similarly, if we say that the cost of taking on an employee is something that we are subsidizing, we do believe they will take on more. Now, if you ask me, does it mean that an industry will fundamentally change its technology? No. But every industry has 2 or 3 alternative levels of automation. In most industries you can be totally automated with robots like the Japanese, or you can do some things with human beings and do the rest with machinery. So there are choices which companies make in terms of automation versus labor. And it is economic studies show that such incentives matter. And at the margin, when they have a choice between automation, non-automation, increasing employment versus becoming more robotic, they may make the right choice if there are fiscal incentives. So these are fiscal incentives which would incentivize the private sector to increase employment. And there are studies that show that such incentives work. And the private sector claims that they work when it comes to R&D, or it's a constant demand that give us fiscal incentives. It's just that they have not previously been used to incentives for employment, but this is our need now in the country. So I think these are positive steps, and I am fairly optimistic that the first 3 schemes, even on a purely demand-driven basis, will be successful. Now, we have estimated certain numbers. Let's see. Okay. And they are not unrealistic numbers, let me tell you. I'm quite I'm fairly confident those numbers can be attained. Now, coming to the other two on skilling. One is upgrading 1,000 ITIs in a collaboration between the center, state governments and the private sector. This will require some very active involvement of certain big private companies, and that will that's not something where I can say we will complete so many of the 1,000 by this date. That will certainly depend on states coming in. But it's an aspiration, 1,000, and we've made it clear that we are willing to put money behind it. So if others also put money behind it, we've indicated it in the budget speech, 30,000 from us, 20,000 from state in terms of crores, 30,000 crores from the center, 20,000 crores from the states, 10,000 crores from industry. Again, we are not looking forward to a huge amount. It's about 50% from the center and about 16% coming from industry. So I think it's not unrealistic. It's not as if the whole lifting is to be done. Coming to the last one, which is the internship. In the internship, it's important to realize that 50% of India's CSR expenditure, total CSR, the last full year for which I have seen statistics, about 26,000 crores. 50% of that is in the top 100 companies. And 2/3 of it or more is in the top 500 companies. So what we are suggesting to them, and it is voluntary. We have an annexure in the budget speech that gives details. It's voluntary. No one is compelled. But we are willing to pick up the lion's share of the internship direct cost of paying the intern. We are only asking them to use their CSR resources to impart skilling and train the person. This is something which, if a company has to do CSR, which is a legal obligation, if they attribute a portion of their CSR expenditure to this activity, it is something where we have calculated the numbers. The numbers are not unrealistic within the current, if you take, say, 40% of the CSR of the top 500 companies, that is more than enough to cover, in fact, not much more than enough to cover whatever costs they may have to bear to skill so many people. Now, then what happens to these interns? It's not expected that the company absorbs them. Not at all. This introduces young people to new opportunities that they may never have an opportunity to see on their own without a government-backed scheme. Because we are not looking at IIM, IIT, chartered accountant type of graduates here. We are looking at people who otherwise wouldn't get even a look into these companies. And so this, I think, promotes a new connect between the country's need for employment and the employer's need for skills and the government's desire to see that these two are made to come together. So I'm optimistic.
Right. So, Mr. Pandey, if you'll allow me, a question towards, in terms of the thinking towards disinvestment. I understand that in the interim budget, we were made aware that right now, maybe not target setting. Let's not hold on to a figure, but rather look at the broad, value chain and the addition that is happening. If we take this year, for example, and while I understand the miscellaneous capital receipts is a amalgamation of even asset monetization and all of that, how would you analyze the pace at which in the first 5 months progress has been made, and as we are staring at about just 6 more months before the financial year is over, how do you analyze that 50,000 crore?
Yeah, so first of all, I think you said it right. If you really look at it to the value creation strategy, now you are not really trying to say that you are getting rid of something. Like you are creating value, which means that, the economy is running and, you have CPSEs who have got an enormous role in this economy and they're producing, energy transition is happening, renewable projects are being put in, so many, so much of capex is taking place. About 3 lakh crore capex is made by the CPSEs every year, from their own resources, not from the government side. There is also, their own businesses, and out of the profits, the dividends go. Dividends go out not only to the government, but also to the millions of their shareholders who have actually come in as a part of our disinvestment. Disinvestment itself is a continuum. You start with the 100% owned company, and then you list it and you bring in certain holders, and you gradually do it over a period of time as you create value, and maybe the last stage is, you could possibly, privatize in terms of, passing on the management control. So I think disinvestment should not be understood only in terms of, privatization. It's much more than that. As I said, we had 81 listed PSBs, PSIZs and CPSEs put together. About 12 lakh crore was their market cap 3 years ago. Today it stands at 73 lakh crore. Market is valuing them because, they're performing. The capex is happening. Their management incentives are towards growth, towards return. And in the process of that continuum, while you create the value, you can also derive a certain value, either in terms of the dividend as an annual thing, or maybe you can shed certain amount of shares at the timing of the choice. So therefore, I think the target-driven approach, which was earlier followed, has been now done away with. And this was announced, in presence of FM in the press conference for the interim budget. So therefore, you don't find it in the budget, speech per se. But that's the underlying, the whole philosophy. But still, we are targeting about 1 lakh crore plus, 1.06 lakh crores. If you say 50,000 miscellaneous capital receipts, which includes also asset monetization, which is to be done by various ministries, including Ministry of Road Transport, Highways, and other ministries which are doing asset monetization. And also the dividend from CPSCs. And this does not include the dividend from others. And overall, the non-tax revenue has also played a very important role, as you know, and targeted to be 5.45 lakh crore this year. Right. So this is about 1.5 lakh crore more than the provisional actuals. So it's a very important part of that. Now the question is, disinvestment just tries to fit into this overall strategy. So it is not the disinvestment itself drives it. It is a value creation strategy which subsumes the disinvestment.
Right. Mr. Somanathan, when you talk about angel tax, I wanted to understand, I heard you in the press conference where you said that, there needs to be a balance between attracting investments and also prevention of money laundering. We already have PMLA, we have other laws. What do you think was the rationale behind this, and also what kind of impact will it have on the startup ecosystem?
You're asking about the rationale for the change or for bringing it in initially?
For the change, sir.
No, the rationale for the change is, look, this law has been in place for more than a decade. It came in 2012. And we have looked at how much tax have we collected from it has not been much. Now, of course, one can argue that these are deterrent provisions, not necessarily for collection, but hardly anything has actually been collected. Yes, deterring money laundering is an important objective. But in many of these public policy questions, you have to look at, the primary objective and the, collateral results. So the repeated feedback we were getting is that even though the number of people actually subject to any notice on angel tax was very, very small, there was a fear that, if I get in some money and if that can't be valued according to traditional valuation norms, then I might get harassed, and therefore would I want to invest. So we came to the conclusion that the balance of policy advantage did not lie in continuing with this provision, but we do have alternative legal means by which we can tackle cases of deliberate undervaluation or round tripping, not as easily as with this provision made it very easy and direct to catch that. So it's like saying, look, even on the matter of corruption, there used to be a provision in the Indian Penal Code, but there was also a Prevention of Corruption Act. So both had an offense of corruption. Right. But the Prevention of Corruption Act made it easier to prosecute corruption. Okay. Similarly, it's not as if the only provision we have to catch this is the angel tax provision. There are other more general provisions in income tax. There are some provisions in the Companies Act. So it will not necessarily have to be through income tax, can be through the Companies Act provisions if there are blatant cases of abuse. So we felt that at a time when the country's priorities are employment, investment, and startups are an important way of getting there, let us not do something that affects startup funding when we don't have any, concrete revenue loss stemming from this proposal. So that was it was a balanced approach to what is more wise, even though theoretically there is a for the angel tax. Theoretical case versus the practical difficulties, we've taken a practical. But the checks are still the other ones.
Another important topic that was raised in the economic survey was also a concern when it comes to speculative trading. And that consequently one might argue that we do find changes today in the budget speech. My question really is, do these changes right now, do you believe they adequately address that concern? Or is there something that sort of...
People tend to borrow from their own resources to pay for their kids. The thinking, of course, is and look, this is an Indian concept, is that I take care of my kid now, my kid is going to take care of me down the line. Is that wrong though?
I don't think that today's generation thinks like this. Like today's generation who has kids in 20s, I'm saying, wants to live with their children. So here's what it is. You do that and then you're dependent on your kids, or you be selfish and try to figure out a balance, and then you're living life on your own terms. So I think it's really a question of, how do you want to have your future life, right? Where you may not necessarily be earning to pan out.
People tend to borrow from their own resources to pay for their kids. The thinking, of course, is
a study, and it's certainly not yet part of government's policy. It's something that is to be studied, and the chief economic advisor has obviously paid some attention to this. And the economic survey is an important document which reflects some concrete research. Should this actually be carried out or not is a matter for the government to take a decision on eventually. But I'm not necessarily indicating that it is going to be done, nor am I indicating that it will never be done.
Okay. Thank you so very much for joining us today. Thank you, Mr. Pandey. Thank you, Mr. Somanathan. That's all we have for you at the moment, but stay tuned as we continue the conversations today. This is NDTV Profit and NDTV 24/7.
People tend to borrow from their own resources to pay for their kids. The thinking, of course, is and look, this is an Indian concept, is that I take care of my kid now, my kid is going to take care of me down the line. Is that wrong though?
I don't think that today's generation thinks like this. Like today's generation who has kids in 20s, I'm saying, wants to live with their children. So here's what it is. You do that and then you're dependent on your kids, or you be selfish and try to figure out a balance, and then you're living life on your own terms. So I think it's really a question of, how do you want to have your future life, right? Where you may not necessarily be earning to pan out.
people tend to borrow from their own resources to pay for their kids. The thinking, of course, is and look, this is an Indian concept, is that I take care of my kid now, my kid is going to take care of me down the line. Is that wrong though?
I don't think that today's generation thinks like this.
And here's a look now at what the NDTV Profit think tank thought about the budget. These are some of the brightest minds in their respective fields.
They have tasted success over the years because of the great macro management, I would feel, and that continuity is very evident. They have not compromised on the fiscal deficit at all. In fact, they've improved significantly. So I would think full credit to the government for this through the period, particularly also in this budget. Despite all the expectations of welfare measures being higher and so on. So I think it's a great move. Yes, of course, from the direct taxes side also there are lots of measures.
All right, in fact, let's listen in to other reactions that we are getting right now. Apart from the big voices you just heard, we had a host of other big names as well. Market gurus who spoke their minds on the budget.
I think government has chosen the path to stay on the fiscal side rather than give in to the consumption side or the welfare side. Yeah, I think they have surprised us positively on that side. I think we spoke about it 7 days back also. Yeah, I was not expecting a 4.9% number. There was the way the political compulsions and also the way the read from the election result was that should spend some more on the bottom of the pyramid, but I think the government has decided to strictly stay on the path.
Recent budget clearly addressing the various needs of the country, whether it is employment, skill development, rural economy, giving a booster to the SME sectors, and access to the finance through the expanding the SIDBI into every part of the country to ensure that money is now actually going closer to the people who would be in need of funds. And last, of course, is the income tax, the change that they brought in terms of slabs, which is, of course, putting a slabs, which is basically giving more money in the hands of people. At the same time, above 15 lakh rupees, now 30% plus surcharge, giving a lot of money in the hands of people, which again, essentially more towards boosting the consumption. And capital gain tax change, of course, given the fact a lot of wealth has been created, a lot of money has been made, people are deeply in money the last few years. The 2.5% increase in capital gain tax may not be actually significantly denting the investors' sentiment, given the fact that you have to pay this only upon the selling, and second is it all depends upon if you hold it for 5 years, 2% per annum it comes to, which is not significantly higher amount for somebody to get worried about it. Clearly, I think the growth-oriented budget, and second is a futuristic it's not futuristic in nature, it's an action-oriented budget, with a clear allocation that is being kept aside for every segment of the activities. And last, of course, least is, despite all these allocations that is increasing towards the two states where most of the people are thinking there will be a populist budget, and each of these spending allocation that has come to these two states, whether it's Andhra Pradesh or Bihar, it is linked to the industrial activities pick up and special focus on tourism, increasing, improving the pilgrimage activities in these centers. All of them actually is more with the intention to increase the contribution from these states further to the economic growth. Therefore, I call it as a growth-oriented budget. And what is also very interesting is the fiscal deficit. They have maintained it, and also given a roadmap that even next year they're showing the confidence of maintaining about 4.5%, which essentially means one, growth will continue to be the driver, and tax collection improvement will continue to be the driver. At the same time, ensure the overall the numbers adds up to ensure that the fiscal deficit also is maintained. And last but not the least, given where we are current account deficit, the balance of payment surplus they are running, giving a specific focus on export sectors, whether it is a diamond or jewelries or even the textile sectors, That's something which has been one of the expectation from people, that the export sector should give some kind of booster through these with the series of basic custom duty changes that they have brought in. I think clearly they have brought in some kind of focus on export sectors indirectly through through various changes that they brought in on the custom duty. That's why I feel it as a good budget and overall perspectives. Probably I would say 9 out of 10 in overall ranking.
The big saving of 50 basis point right now is being deployed. 50 basis point because of the RBI bounty and better run rate of taxes is 50 basis point of GDP. That's being deployed in actually 20 basis point of fiscal consolidation. So in some sense, it remains a bond budget that we argued last budget also. Surprisingly, to me also surprising that the capex number has not risen.
Now, apart from the big voices you just heard, we also had a host of other big names, market gurus, who spoke their minds on the budget. Here are some of them.
I would say the overall it's quite a good budget. It really focuses on a lot of long pending issues like employment generation, the deep reforms which are needed in agriculture sector, the overhauling and making changes in long pending income tax laws, and really creating, opportunities for youth in on the whole. So, and at the same time, on the face of it, when you look at the number in the budget speech, they looked very large, and it looked like quite a populist budget. But when you go into finer details, I think they've done a commendable job of sticking to fiscal discipline, of not only sticking, but basically lowering down the fiscal discipline, the fiscal deficit, also ensuring that the government borrowing over a longer period of time as a percentage of the GDP will go down, which will argue very well for our long-term rating. So on the whole, it's quite a good budget. Coming down to markets, of course, markets have had a very fabulous run in the last 3 years, and more specifically in the last 6-9 months. The market had some reason for small corrections here and there, and that came in the form of short-term capital gains and also some increase in long-term capital gains.
I think the FM ticked all the boxes I could have expected of her. I think she needed to take on this kind of froth that was building up in the market. The RBI and SEBI have been very clear that they're seeing too much money come into the stock market, too little going into the real economy. All credit to the FM for jacking up short-term capital gains to 20%. Secondly, she took on the employment challenge, the challenge of creating millions of jobs. She took it on head on. I saw 5 measures being announced to juice up employment. Even if 2 or 3 of those work, I think that's a meaningful step up. And thirdly, rural India has been suffering since COVID. I think there was a big allocation towards rural India as well. To fund all of this, obviously, capex had to be throttled off. So I don't think there was any increase in capex related to the February budget, which I think is also sensible. I think government capex has already gone up by 30% each year for the last 3 years. There wasn't obvious need to jack up capex. There was plenty of need to jack up RevX and boost consumption, and she's done that. So full marks to the FM. I think remarkably well thought through, common sense oriented budget.
No, I'm not negatively surprised. I'm just disappointed. STT was levied in place of capital gains. Now STT and capital both continue since 2018. Now capital gains tax is revised upwards. But there is a non-level playing field between foreigners and locals. If FPI invest in Indian derivatives, they make capital gain. If you and I invest in Indian derivatives or trade in Indian derivatives, it is business income. The foreigners doing trading in our derivatives are earning tax-free income, whereas we pay tax as per applicable slab rates. I think we should create a level playing field between foreign and local participants in the market so that there is equal distribution of taxation.
All right, so those were some of the reactions that we were getting at the moment to the budget. Let's also go across to Janani Janardhan, who's in conversation with Ravi Agrawal, the chairman of CBDT, and Sanjay Agarwal, the chairman of CBIC.
Pronounced that the government's agenda is to bring it down the fiscal path. Is it fair to say that, when we're talking about the fiscal consolidation, the jump to 4.9 was not many anticipated that. Is it going at a pace too fast, or how would you sort of look at it, considering where we had the RBI dividend and we had a very comfortable position and the expenditures also rose? So my first question is how it was managed. And the second question also, is that pace, is it been too quick?
See, what the goal is, that because of the pandemic, our debt to GDP proportion had gone very high. Mm-hmm. So to bring back debt to a more sustainable level, and also to build certain buffers for maybe a next crisis. Honorable Finance Minister has announced a roadmap to come down to less than 4.5 by 25-26. So that is a medium-term goal. Now we are just about a year ahead of that. So the idea is that it's possible come closer to that, so that the heavy lifting which will have to be done next year can be less onerous. Right. Second is a very clear estimation of the expenditure and the revenues. Expenditure, there have been about 60 to 70,000 crore of additional expenditure in 4 months. Has been new demands have come in, including the ones which have been necessitated because of the new schemes which have been announced.
Right.
In this budget itself. Plus, we expect the revenues, the tax revenues, would be somewhat better than what we had estimated 4 months back, because last year the pre-actuals were better than the revised estimates.
Right.
Third element, the dividend from RBI have been more than what it was estimated. So part of all that has been used up by additional expenditure on essential items, priority items, and thereafter bring down the fiscal deficit. And then, of course, if government is borrowing less, that means more money available with the financial markets or the financial sector, so that they can provide more credit to the private sector.
So perhaps one of the reasons why I asked this question was, there was the thinking that maybe capex can further go up. And this time we see that the capex has remained at 11.1. So there was that RBI dividend, that was a surplus. Is it fair to say perhaps now the government is also waiting and watching how much private sector would pick up? Was that a reason that capex was further not increased?
See, one has to look at it where the capex today is. And this budget makes it is about 3.4% of the GDP. Within several years, or perhaps several decades, it has not been that high. So keeping it at 11.11, 11,111 crore was a conscious choice. That to say that kind of increase which was happening 30% plus for 4 years, that can't be sustained year after year. This budget makes a specific announcement that the strong support which have been given in the 4 years, our endeavor would be to continue that kind of a support. But there are 2 imperatives have been brought in there. Other priorities as well as fiscal consolidation, fiscal prudence.
Right.
Keeping that in mind, the number of 11.11 is lakh crore, is a reasonable number. Plus, we have to be conscious about this fact, by the time this budget gets passed, barely 8 months would be available for end of the financial year.
Right. Right. So, if I may ask a question, sir, Joshi sir, one of the announcements made by the finance minister today was also a sort of a vision document for the financial sector, for regulators, for government, a sort of a path, a vision document, she said. But could we get some guidelines on where this sort of idea originated? What is the thinking behind it, and what can we expect in this document?
I think I will pass on this question to Ajay, because he has been involved in this thought process.
Okay.
What I can say here only that for this Viksit Bharat by 2047, we have to have a vision of our financial sector. There is a need to have a document which is there. I mean, we are still further developing that, but I will leave it to my colleague because he is sitting at the thick of these things.
Okay. What was an idea? If you recall, Finance Minister in the interim budget had laid down their strategy for Amrit Kal. There were 5 points there. This was the 5th point, that we will prepare our financial sector in terms of size, skills, regulatory regime to serve the needs of a developed India.
Okay.
It can't be business as usual, and it is not just for financial sector, for all sectors. But interim budget identified that kind of a vision and a strategy has to be in place. We have started that work to set it out more a medium to long term. That what kind of a role financial sector, different parts of the financial sector have to play so as to contribute to financing the real sector. That is an attempt we expect that over next 6 to 8 months we would be completing.
Okay. One question I wanted to ask was also right below that in the budget speech, actually, there's a mention of a green taxonomy. And as even in the G20 conversations, the green financing agenda has been high up, actually, in fact, in the conversations. What does the green taxonomy mean, and how does it marry in with the reality, like when it comes for India, which, let's just say, might not be able to go on with like European standards, or because our realities are much different. So what does this green taxonomy mean, and how does it marry with the international regulations?
Okay. What the budget announces, taxonomy for climate finance. So first of all, we use these terms, green taxonomy, interchangeably.
Right.
There are global standards on sustainable finance, but this budget makes a very clear one, taxonomy for climate finance.
Okay.
They are global standards.
Okay.
Here we want to develop Indian standards which are suited to our conditions. First of all, what the climate finance is going to be, what the climate action is going to be, mitigation, adaptation, what kind of a mitigation, what kind of an adaptation, what classes of assets it will cover, how that investment will be measured, how the outcomes will be measured.
Right.
This will all be part of the taxonomy which will come. What the purpose is? Purpose is so that the market, the investor and the user of the finance both know in a very transparent and objective manner what they mean.
Right.
Only then we can get the efficiencies in the marketplace. So that is something we have done the work in the past, but the idea is to have our own set of standards which are suitable for our economy.
Right. Another question is, I mean, it can be to either secretaries. Sir, the concern on speculative trading was something that was raised at the economic survey yesterday. It has been previously raised by regulators too. The concern stands, and we've been asking even the other guests today in terms of how they feel whether this particular budget speech adequately addresses the risks that were flagged off, and how would you sort of respond to that question?
Since the question is that, if I recall, about 2 years back, SEBI had organized a study which had brought out that 9 out of 10 investors in the derivatives market lose money. First of all, speculation per se is nothing right or wrong about it. Speculators will be there because only then somebody who wants to cover their risk can cover their risk. The issue is those who are in that market, do they understand the risk? The increase in the STT is a step what the fiscal policy can do to give a signal. But there will be different pieces so as to let the market participants be better informed about the actions what they are taking.
Joshi sir, on the Mudra loan announcement that was made today, and this is for the Tarun category of loans that were coming. Can we understand how you expect the impact of this to play out?
You see, if you read the announcement carefully, it is only for those borrowers who have taken this Tarun loan and have repaid their loan to the satisfaction of the lender. Then only they become eligible. Meaning thereby, these are the borrowers whose credentials banks or the financial institutions have already tested and they have proved their credit worthiness.
Right.
So we expect that this will play out in a very good terms.
And the last question really on one thing that was also spoken at the press conference in terms of the space sector, 1,000 crore allocation. Who would rather take the own impetus of playing this out forward? Would it be ISRO? Would it be what nodal agency would be involved particularly, and how the composition would exactly come about?
First of all, one is who will administer this venture capital fund. This is meant for private sector. This is not meant for government agencies. Okay. While the details are yet to be worked out, obviously there are different models which government has worked out in the past. For example, a blended finance where government picks up a certain portion of the fund, rest comes from the market, and then there are set of administrators or the managers who manage it. That is one model which is possible, or some sort of an expert committee gets into those ones. But a blended finance which is at arm's length, those are the ones which are much more market acceptance are there. But details will have to be worked out.
And the very last on green bonds, when it comes to green bonds, can we expect perhaps newer green bonds, or is the utilization of the previous ones still a thing that is being looked at? As we've almost come up to 6 months, usually around the time when we understand the green bond announcement. So anything we can hope to hear on that front before we leave?
No, we have not announced it as yet. Perhaps it will come in the third quarter. Okay. Of the current financial year. Obviously, this budget doesn't make a mention, but in the interim budget that mentioned for 20,000 crore was announced.
Right, and it would be at the same level.
It will remain. It is very much there. The previous raise utilization, we could not bring out that report. Report was ready, but then the model code of conduct came, etc. So that report would have been released now, and we expect in the third quarter when we announce the calendar on end of September. For the third quarter, it will be covered there.
Thank you, sir. Thank you so much for patiently answering our questions. Thank you.
Thank you.
People tend to borrow from their own resources to pay for their kids. The thinking, of course, is and look, this is an Indian concept, is that I take care of my kid now, my kid is going to take care of me down the line. Is that wrong though?
I don't think that today's generation thinks like this. Like today's generation who has kids in 20s, I'm saying, wants to live with their children. So here's what it is. You do that and then you're dependent on your kids, or you be selfish and try to figure out a balance, and then you're living life on your own terms. So I think it's really a question of, how do you want to have your future life, right? Where you may not necessarily be earning to pan out.
People tend to borrow from their own resources to pay for their kids. The thinking, of course, is and look, this is an Indian concept, is that I take care of my kid now, my kid is going to take care of me down the line. Is that wrong though?
I don't think that today's generation thinks like this. Like today's generation who has kids in 20s, I'm saying, wants to live with their children. So here's what it is. You do that and then you're dependent on your kids, or you be selfish and try to figure out a balance, and then you're living life on your own terms. So I think it's really a question of, how do you want to have your future life, right? Where you may not necessarily be earning to pan out.
We have with us Mr. Sanjeev Puri and Mr. Chandrajit Banerjee to decode budget, the first full budget of Prime Minister Modi's third term, and whether it met the expectations of corporate India or not. There were a lot of pluses, a lot of focus on jobs, but was it enough to get us on that big growth trajectory that we have all been talking about? Thank you so much, gentlemen, for taking out the time. And my first question to you, sir, is that if one were to talk about the big picture, that there are jobs clearly as one of the overarching theme of this budget. But what, according to you, really stood out in terms of the first full budget of Prime Minister Modi's third term?
So I think it's very clearly a good comprehensive budget. Besides addressing the requirements of the economy for now, I think it's also touching on a lot of levers for the sustained economic transformation, the next phase of it. See, we have a trinity of priorities to deal with. It's about investment for inclusive growth. It's around dealing with climate emergency and also staying within the fiscal glide path. I think all the three facets have been well touched upon. In fact, as far as fiscal glide path is concerned, it has been better than the earlier guidance of 5.1. We're talking of 4.9.
Yes.
And we are seeing that as far as inclusive growth is concerned, economic transformation is concerned, policies that have worked well earlier, and that's why the GDP has done so well. There is continuity, there is continued thrust on public capex and all other related policies. We are finding very sharp.
But the capex hasn't increased. It's exactly what the interim budget also said.
Yeah, but it's higher than the estimates of last year. So I think it's a good move forward, and with sustained focus of this magnitude and more and increments going forward, I think it will make the economy more competitive. Besides spurring consumption, and also build the capacity for growth in the economy in future. So I think public capex has gone up. I think you very rightly also spoke about this important issue of livelihood. So I think both issues of employment and employability have been well covered in this budget. And I think even agriculture, which was also spoken about in the economic survey, has been comprehensively touched upon, both productivity and resilience. And as far as manufacturing is concerned, besides this whole issue of competitiveness, how to look at some of the futuristic areas in manufacturing, the critical dependencies in the supply chain, like critical minerals. So very well touched upon it, innovation. So a lot of positives there, and a lot of focus besides on ease of doing business, a lot of focus on the next generation of reforms which involve the states and how to kind of align the states, some incentives with respect to that. The very strong statement on factor reforms like land and labor, and the intent to pursue that, the intent to also make the GST more inclusive by including sectors that are not part of it. Yes. I think these are all very, very strong statements of intent. Of course, I think all stakeholders do need to work together and actualize that. But directionally and I would say overall the budget has been quite substantive in dealing with a host of issues.
So there's a lot of positive messaging that the budget does, and also an intent in terms of which direction the roadmap for reforms is. But if we were to take the consumption, as far as the consumption demand, it hasn't been keeping in pace with the overall growth of the industry, of the economy. And do you think the consumption will get spurred with the fact that the FM has sided on the side of being fiscally prudent and conservative, as against probably looking at a bigger consumption spree? I'm asking this because the growth estimate last year was 8.2%, consumption was 4%. It's lagging behind the overall growth for last year. How do you read that?
So, number one, I find that the FM has done quite a bit in the income tax, the direct taxes, especially for the middle income and lower income. I think that's important. And I think the simplification is also another issue which would help when one moves over to the newer tax regime, which is being incentivized very strongly. It leaves a lot of more spending power in the hands of people. So that's one. Second, I think is the piece comes from this focus on employment generation. And I think the way we have seen the budget focus on employment generation through different schemes of top 500 companies, apprenticeship, and many other areas of the MSME, the manufacturing piece, those are again big triggers to see how consumption would be spurred in the economy. Connected to that piece is the piece on basically we saw how skilling itself is going to be critical, because employment will really come in if we have skilled manpower. And I think that focus on skilling is going to be important, and it has an effect on consumption over a period of point. Third, I think importantly, we see a focus on rural infrastructure through the capex, rural enterprises, which she has focused on. That itself, again, leads to bolstering consumption in the economy. Now, we have talked about through all of this a little differently from what the economic survey has in terms of growth figures. And our growth figures, our projection has been near 8% or 8% plus. And that comes in from the macroeconomic stability that we have seen and the health of the private sector too.
Mr. Puri, I want to take your comment as well on the consumption bit, because of the fact that you also wear the hat as the ITC head. So I want to speak to you about how much can the budget spur the private consumption story that India needs to now ensure it fires on all 5 cylinders.
So I think the whole philosophy that's been followed in the past also is around investment, employment, spurring consumption, and therefore creating a virtuous cycle. Because the investment-led growth, the economic multipliers are far more. And that's what the industry was also looking forward to, that continuing. And of course, some of these investment-led approaches do have a little lagged effect. So I think with the lagged effect, the benefits of that with passage of time will fructify. Because as investments happen, jobs get created, then consumption gets spurred. And that's the model that's been successfully followed in the past, and that's what's being followed. And in addition to that, I think there are specific areas that are being targeted to increase both employment and employability, because today we do hear about the skills gap also.
उस लेवल पर नहीं हो रहा है, इसीलिए सरकार के द्वारा हमने ये प्रोत्साहन देने के लिए 5 स्कीम के द्वारा, मैं टोटल इस स्कीम का पिक्चर दे रही हूँ। 2 लाख करोड़ का हमारे 5 साल में इसके ऊपर खर्च होने वाले हैं, और हम टोटली मानते हैं 4 करोड़ 4.1 करोड़ युवा इससे बेनिफिट पाएंगे। कुछ युवा फर्स्ट टाइम एम्प्लॉई के नाते, मतलब फर्स्ट टाइम जॉब के नाते उनका बेनिफिट होगा। कुछ युवा बेटर जॉब के लिए सेकंड जॉब लेंगे, उनका भी बेनिफिट होगा। इन दोनों के सर्कमस्टेंसेस, इन दोनों सिचुएशन में एम्प्लॉयर को भी हम बेनिफिट दे रहे हैं, जिससे वो लेने का कष्ट करेंगे और रखने का, उनको 2 साल कम से कम जॉब में रखने का करेंगे। तीसरी, स्किलिंग के लिए स्टेट्स के साथ जहां ITIs है वो स्टेट्स संभालते हैं। उन ITIs में टेक्निकली पिछले मैं बोल सकती हूँ 10, 15, 20 साल से उतना जितना इन्वेस्टमेंट होना है उनका क्या बोलते हैं, टीचिंग मटेरियल्स या मशीन्स, हैंड्स ऑन ट्रेनिंग करने के लिए, इन सभी इन्वेस्टमेंट का कमी है। और पिछले मान लीजिए 20-30 इयर्स में इतना इन्वेस्टमेंट नहीं हुआ, मगर अभी डिमांड है इंडस्ट्री 4.0 का। मतलब तब अगर आप इन्वेस्ट भी किए तो अब का इंडस्ट्री का रिक्वायरमेंट अलग हो गया है। इसलिए उन ITIs में ये इक्विपमेंट, इंडस्ट्री 4.0 को जो चाहिए इक्विपमेंट, वो सब खरीद कर हम रखेंगे और इसमें प्राइवेट सेक्टर का साथ ले रहे हैं। वो हमारे साथ और राज्य सरकार के साथ काम करके 10th पास करके छोड़कर बाहर आने वाले लड़कियों को ITI के द्वारा जहां ट्रेनिंग मिलना है, स्किलिंग होना है, जिसके बाद उनको कुछ डिप्लोमा वगैरह मिलता है, उसमें भी हम पैसा डाल करके युवाओं को अच्छा ट्रेनर्स को सैलरी दे करके उधर ट्रेनिंग का। सो फर्स्ट टाइम एम्प्लॉय, सेकेंड टाइम एम्प्लॉय, सेकेंड और थर्ड टाइम एम्प्लॉय, फ्रेश 10th स्टैंडर्ड स्किलिंग और फाइनली इंटर्नशिप के विषय में मैं गर्व से कहना चाह रही हूँ 1 करोड़ युवा डायरेक्टली उस इंटर्नशिप से बेनिफिट करेंगे, क्योंकि टॉप 500 कंपनीज के साथ भारत सरकार बात करेगी और उनके CSR के द्वारा वो इसमें जोड़ सकते हैं कि अच्छा ट्रेनर्स भी रखें उनके कंपनी के द्वारा और कंपनी शॉप फ्लोर में इन लोगों को एक्सपोजर दे, हैंड्स ऑन लर्निंग का इंटर्नशिप दे, 1 साल पूरे इंटर्नशिप दें और उसके बाद अगर ये बाहर आएंगे उनके CV में टॉप 500 कंपनी के एक कंपनी वैल्यू बढ़ेगी, जॉब में रेडीनेस बढ़ेगी, जॉब में रेडीनेस बढ़ेगी एम्प्लॉयर को इनको ऐसे करके 5 स्कीम्स जिसके द्वारा युवाओं को एकदम उनके हर स्तर के लिए ट्रेनिंग का मॉड्यूल बना करके हम आगे आए हैं। ये प्रधानमंत्री जी का हर एक स्कीम के ऊपर ध्यान दिला करके टेलर मेड स्कीम्स तैयार हुआ है।
Madam Finance Minister, you've given a provision for 1.52 lakh crore rupees for the agriculture sector and 2.66 lakh crore rupees for rural development, including rural infrastructure. So effectively, how does this meet the goal of what the economic survey was looking at as making agriculture an engine for growth?
See, one thing I want to dispel. When we say these kind of amounts, people don't realize these are other than what is running as schemes. Manrega, nobody mentioned in the budget. Madam Finance Minister has not mentioned Manrega. It doesn't mean that I'm going to stop Manrega to run this. They are on-demand programs which keep going, for which I've made provision. I have not mentioned it in the speech, but it is in my records. It's in the budget revenue expenditure ka statement jahan hai, you get that there. So this misconceived notion that if it doesn't appear in the speech, it's not at all there is wrong. I want to make that plain.
Right.
Now, when you have rightly quoted the amounts for agriculture, we are saying what is very important is to reach to the farmers such inputs which are worthy for them to toil in the soil. So it's one thing you give MSPs, it's one thing you give Kisan Samman Nidhi, all that will go on.
Right.
But Kisan today requires high quality seeds, better inputs, and for that good research with which we can. I made one announcement also in this budget, 109 varieties of seeds, both for field crops and also for horticulture.
And also the climate resilient.
Climate resilient seeds. Most of our farmers today buy seeds which can't take this extreme heat, sudden flooding, and then also sometimes scarcity of irrigatable waters and so on. So I'm very proud that Indian agriculture scientists of themselves come up with this 109 resilient varieties, which I'm sure will soon be launched, and they will be, we'll be taking it down to the farmer so that they can benefit.
All
so
developed in India, ma'am?
All developed in India.
Okay.
And even better is we are looking at giving input support also to the farmers. As I said, more than 50% of his input cost should be met by the amounts that we give them. So these are great detail. And rural development is looking at not just PM Gram Sadak Yojana, not just building homes, PM Awas Yojana, where big amounts are going, that is important. 3 crore new homes. 25,000 new Gram Panchayats will get road network. Over and above this, we are looking at actually hard infrastructure in the rural areas. Whether you're having silos for storage of grains, whether you've got power, actually 3-phase power going there with smart meters, and making sure that 5G connectivity reaches them. Because today, e-commerce for agriculture, for MSME, for meeting the global markets is a requirement in the villages.
And these special vegetable clusters, ma'am, also it may help this, fighting the food inflation.
Yes. Because the supply side management of perishable crops is a very big challenge for any government. Right. We have a group of ministers which looks at the situation every 15 days and imports from some countries, from Nepal, from somewhere else, and redistributes. But if we are able to manage a perishable crops in its production, storage and redistribution better, we'll be able to control prices. You're right in pointing that out.
वित्त मंत्री जी, प्रधानमंत्री मोदी ने फर्स्ट रिएक्शन जो डीडी नेटवर्क पे दिया उसमें आपको बधाई दी, आपकी टीम को बधाई दी, साथ ही उन्होंने कहा कि ये बेटर ग्रोथ और ब्राइट फ्यूचर के लिए दिया गया बजट है। अब जब आपने एक रोड मैप, इंटरिम बजट में आपने प्रॉमिस किया था कि हम विकसित भारत का रोड मैप देंगे, आपने इस पूर्ण बजट में दिया। ये जो 9 पिलर्स आपने डिफाइन किए हैं, आपको लगता है कि ये एक विकसित भारत की नींव रखते हैं, और किस तरह से इसके पीछे का दर्शन थोड़ा सा समझाएंगे हमारे दर्शकों को प्लीज?
बिल्कुल, ये 9 पर्टिकुलर आइटम्स स्पेसिफिकली हमने बोला है। आप अगर अब देखेंगे यूजुअल क्लेम्स ऑफ हाउसेस, रोड्स, ये नहीं है। इन एवरी वन ऑफ देम एक फ्यूचरिस्टिक ध्यान दिया गया। फर्स्ट पॉइंट ऑन एग्रीकल्चर प्रोडक्टिविटी रिलेटेड, क्योंकि वोट ऑन अकाउंट बजट में हमने एग्रीकल्चर रिसर्च के लिए भी, और अभी भी एग्रीकल्चर रिसर्च के लिए बहुत बड़ा फंड अनाउंस करी, और उसके द्वारा मॉडर्नाइज करने के लिए एग्रीकल्चर में क्रॉप पैटर्न के लिए, और ये 400 गांव में जाकर के खरीफ क्रॉप का, लैंड असेसमेंट का, और फार्मर्स रजिस्ट्री में एंटर करने के लिए
डीपीआई का इस्तेमाल, जो
डीपीआई का इस्तेमाल, ये सब फ्यूचरिस्टिक फॉर मॉडर्नाइजिंग इंडियाज एग्रीकल्चर, वो एक पॉइंट है। फिर सोशल जस्टिस के साथ प्रधानमंत्री उन्नत ट्राइबल विलेज, इसमें 63,000 villages in which there are tribal bahul tribal majority villages. We are going to absolutely provide everything to make them compare with any other better managed ग्राम पंचायत।
5 करोड़ जनजाति,
हाँ, 5 करोड़ जनजाति को। सो सोशल जस्टिस मतलब ये सिर्फ नहीं है कि आप अच्छे कहीं स्कूल चलाओ और जिसमें वंचित वर्गों का बच्चे को ले आओ, वो भी करना, ये भी करना।
मैम, working women's hostel, creches, women specific skilling programs, promotion of market access for self-help groups, these are some of the things you mentioned. And you've said that women's led development will see an allocation of more than 3 lakh crore rupees. Could you specify some of the, how this is going to be spent?
See, actually speaking, we have been consistently maintaining that the emphasis for bringing more women to productive activities will have to be continued. And that is why in economic survey yesterday, you saw the figures that from somewhere close to 2018, 16.7% to 37, women's participation in workforce has been highlighted in the economic survey. So in the last 10 years, where we started with a simple Beti Bachao, Beti Padhao to bringing more women and incentivizing women in work and providing them, loans to uplift them. Even in this budget, we have given emphasis for land and property registration for women. So like that, at every stage when we center focus on women, it has brought in a bit of a mindset change, like the way in which in the rural areas, Drone Didi has actually not just made women to be able to operate drones, but the mindset in the village that our women can just not do our regular kitchen work, but here are they in the fields, which are essentially male dominated. Only for the haranguing, monotonous physical labor, de-weeding the field, do you find women coming. But here in the villages, women are operating drone. They are able to make assessment of the crop density. They are able to use it for spraying fertilizer, chemical and so on. And if this is how villages and their mindsets are changing towards women, it gives them a prominence. So in many of that is why, if you remember last time, we had come up with a special savings scheme, Mahila Samman Bachat Nidhi. What a response we had in it. Because people realize saving in the name of women actually helps. They've come out to invest. Women have themselves come out, and women themselves are saving in some other, their child or their mother's names. Right. So this government has not lost an opportunity in bringing to focus women and women's needs. Whether it is the simple sanitary pad, which Honorable PM spoke about, even from Red Fort, you can see the priority is given for women, and that's what has explained why 3 lakh crores for women and women-led. Today, Anganwadis are standing out for the kind of quality work that they're doing. They can be even better improved. You're going to have early childhood education centers in those Anganwadis, because children's learning also, as much as nutrition and care is important, their learning should start there before they enter schools. All these are priorities which are executed by women.
वित्त मंत्री जी, इससे पहले कि मैं नए टैक्स रिजीम पर आपसे सवाल करूं, एक बार फिर से शायद ये रिएटरेट करने की ज़रूरत है कि मनरेगा जैसी योजनाएं, जो हम लोग जो सबसे बड़ी स्वास्थ्य बीमा की योजना देते हैं, उस तरह की किसान सम्मान निधि, ये जो पहले से प्रोग्राम चलते आ रहे हैं वो जारी रहेंगे, क्योंकि आपने बिल्कुल उसमें जब आपने जिक्र नहीं किया तो लोगों को लग रहा है कि नई स्कीम का क्या हुआ, उसके बजटीय प्रावधान का क्या हुआ. तो एक बार प्लीज सबको शायद क्लैरिफाई करने की जरूरत है.
मैं एब्सोल्युटली क्लैरिफाई करना चाह रही हूँ. आप समझ लीजिए 1.5 घंटा भाषण, 1 hour. टुडे आई